Good morning.
Listen, I think this year is going to be about adding to yield into your portfolio. And I think, when you get opportunities, I think you're supposed to take advantage of. There's a couple of critical things. By the way, I don't think we're going to see some great rally. I think people have gotten on board. Rates are coming down. The front end's pricing easing. I think that's aggressive. I think that the ability to carry fixed income makes for what will be a good year in fixed income. But John, I think there's one really y'all last year. How much cash you have? How much cash you have? The reason why you run so much cash is because you can't hedge it. You can't use interest rates. You can't use equity volatility because volatility is too high. You can't use the dollar. That's a one way. It doesn't move around. Now you have hedges. That's a really big deal. You can build income in your portfolio. If the economy slows, you'll see interest rates come down now for the first time. If you have a dynamic, equity volatility allows you to do put spreads, allows you to do some things in single name versus index. First time in a while you can hedge, means you can run less cash, have some income, and then build some hedges. And that's a completely different paradigm around managing risk and building portfolios than we were 6 months ago. The only thing you do 6 months ago is just sit on a lot of cash, and you hope that dulls the volatility of your portfolio.
So, Rick, let's make some news. I mean, you brought it up, not me. What's your cash position now relative to a couple of months ago?
It's much lower. It's much lower. I mean, we're building, we continue to build this quality income in the portfolio like we talked about the last couple of months. But I think these yields, particularly, you don't
Rick Reader talking on
build income without taking a lot of credit.
Bloomberg.
Liquidity risk, a lot of beta risk, and you can build a 5.5 to 6.
So yields are surging. Okay.
Yes, we run down the cash a lot, but I don't feel like we're hanging out there risk-wise because of the quality assets. The point you made earlier. Do you have to run a lot of high? You have to run a lot of loans. You have to run commercial real estate. Not really. You can build quality income and sleep at night.
Can we get the habit on board to keep coming back every payrolls Friday?
All right. So, we pulled back a little bit. We've been up like what, 180 points? We're up like 180 points in this week. So to expect that the markets are just going to go straight up isn't realistic. Most of you are on the right side, in my estimation, in terms of, taking profits off into strength Thursday, Wednesday. We had a really nice rally. So I completely expect that we could come back and test this 4,100 breakout level. But listen, the momentum isn't going to shift in one day or a week. It's going to take a little time. RSI is up here pegged near 70. It hasn't crossed over 70 yet on the daily time frame. We're right at this last major support level in terms of being able to start pushing higher without too much supply overhead. Now, this is just an assumption of supply. Okay, so when you're looking at these histogram bars, all this is, to be clear, is price volume that traded in the past. So that doesn't tell you anything about the future. You have to extrapolate, look at previous occasions where you moved into these zones where there was a lot of trading or a lack of trading going on. But it isn't predictive. Volume by price isn't predictive. It just tells you where price was very active at one point. Look for patterns. In this case, bullish patterns. You got MACD above its signal line over here. You got accumulation volume for the past 3 trading days, well above average. That said, taking profits into strength makes sense. Okay, so the 50 is right there. The 200-day is now. No, that's the 200-day. Yeah, 50 and the 200-day are in the same spot. Let me just put that there. It's the 100-day down below. Okay, the 100 day is there, the 50 and 200 day are there. The 21 day is now above. '21 day is now above 921 day above the 200 day. The 50 day is crossing through. You see that? 50 and the 200 day are crossing on the S&P 500. There's your 21 day. So these are starting to stack on top of each other. That's bullish. I'm anticipating, yes, we're going to pull back towards 4,100 or consolidate in this zone between 4,100 and 4,200. That's completely normal. No, I won't say normal, but it's completely expected, anticipated, anticipated. Now that we're breaking through this zone here. Oops. Okay, that looks good. 4,100 is a major level. MACD, RSI. Volume. All right, let me move that. Volume. Okay. Now, so stochastics is overbought, so wouldn't be surprised to see that embed or change direction in the short term. But for now, it's overbought. Advanced decline percent. Okay, so that's the S&P. S&P is up against an area where if it does pop above this area, there's going to be less volume that has traded in this area as supply. There'll be some people still there, some bag holders from August looking to break even. Okay, the NYSE, I think it was the NYSE. I think we're above the August. I think we're above the August high. Yeah, NYSE is above the August high. See that? Broad measure of market participation, 2,700 stocks versus 500 here. So we're not above the August high yet on the S&P 500, but on the New York Stock Exchange, 2,700 stocks, we are above that level. So we're making higher highs and higher lows. Yet no one seems to be focused on this. They keep talking about the Dow Industrials or the S&P 500. Well, the Dow Industrials have been above the 200 days since October. All right, so we're open. First 15 minutes, not doing much of anything except taking profits. Watch Google, Apple for to take some profits off, perhaps. Okay, that's a bust. Okay, that didn't work. All right, I'm gonna take Google off. Okay, I have today's options.
Minus 800. Extreme low tick alert.
Apple. Apple didn't work. All right, so I got bust on two strangles. All right, so I'll take that off. All right, so that didn't work. Okay, give it a few minutes for the markets to settle down. First 15 minutes of the day, we're not doing much of anything except take profits off the table. Reassess the markets after about 9:50 to 10 o'clock. Okay, we're starting to climb here. All right, so buying the dip so far, we're seeing them buy the dip. It's a little early. All right, so the Fed policy rate peak rises to 4.96% June versus 4.91% earlier. Fed swaps pair wagers on rate cuts from 2023 peak. We are above anchored VWAP on the SPY going back to January of 2020. We're above anchored VWAP. Looking pretty bullish to me so far. Looking pretty bullish. Okay, some of these shitter stocks are down on the day, like Vino dropping a couple of bucks. Play with fire, you get burnt. All right, let's see if these dips get bought on stocks like Google. I mean, I would like to buy some Google down here. Okay, it's back below the 200-day, but it's been on a bullish run since the beginning of January, turning higher. Okay. All right, SPY pushing higher. Stock charts. Let's go look at what's most active. And let's pull up some most actives here. See who's doing what here. Gene, Gene, shitter, Gene. All right. Heart test. Nordstrom. Nordstrom up 25%.
Low tick alert minus 800.
GENE. All right. So that's on the most actives on TradingView. Clorox. Susie talking about Clorox. Big gap up. Watch for the fade. Better entry on a fade.
Now to get the US S&P Services PMI final forecast 46.6 on the prior 46.6 with a range of 46.8 to 46.6, and the US S&P Composite PMI final forecast 46.6 on the prior 46.6.
Just scanning through stocks right now. During the first 15 minutes, not doing much, but taking profits off the table. Reassessing the markets, seeing if this gap down is an opportunity. It's been very bullish this week. Cohen's buying Nordstrom on a hostile board takeover. Okay, cool. I wouldn't chase it up here, but certainly if it dips a little bit, like it's doing right now, it's dipping. Look for an opportunity, potentially. Vino starting to bounce. Vino starting to bounce. That company received an equity line of credit. It's only 44 million, I think it was. It wasn't very much. Let's see what else is looking okay. Not a lot showing up on most actives that is of any interest. Clorox is on the list, but it's fading pretty fast.
Low tickler minus 800.
People taking profits pretty quick this morning. It is Friday the 3rd of February. So a lot of options will expire today, OPEX. People had, investors, momentum traders had a good week. Wednesday, Thursday was really good. So don't put a bunch of risk on. I'm talking to myself. You don't put a bunch of risk on a Friday. If anything, it pays to wait until about 10 o'clock on a Friday, usually, especially after the week that we've had so far. Reassess the markets. If there's any opportunities, you'll see it pretty quick, like Apple, Google, those gapping down, but bouncing. Apple looks like a good buy. It's going to hold above the 200-day, most likely. Apple. And I would like to start some shares in Apple. Okay, Apple, Google on the gap down, still a doji for now. And Amazon. Okay, so Amazon basically back where it was. So Carter Worth had a pretty interesting comment yesterday about these big stocks. Also, Guy Adami, who I admire, he's been around the block since the early 80s. Guy Adami. Last night when he was talking to Melissa, he was saying, a lot of these stocks gapped up. So after hours, they were down, 4%? They really didn't give much back. I mean, they gave back what they gained on Thursday, basically. So, we're still in the plus column for the week on Apple. So watch the dip here. Maybe maybe we'll get some activity on Apple. Trading halted on Vino. Vino halted. Okay, Apple on the dip. Let's see, Apple, Vino, SPY. Keep it.
Just seen from a statement here that Biden is to deliver remarks on US jobs reports at
I'd be
10:15
sitting on my hands for now, waiting, see if the markets continue.
Just under an hour's time.
Redfin yesterday was higher.
We are now
It's
5 minutes away
gapping down a little bit today.
The S&P Services
AMD pulled back in a little bit. AMD might be
That's the US S&P Services PMI final read we're getting here. Forecast for
an opportunity
46.6, from the
on the
prior
dip.
46.6.
Apple dip getting bought. There goes SPY.
To get the composite PMI final, also forecast at 46.6, no change from the prior.
SPY is running. It's above VWAP. Okay, SPY is on the run here. AI. That one's been doing well. AI back to yesterday's highs. AI, C3. All right, so Davidson starts C3 with a buy, a $30 price target. Nice look there. Meta on buys. Meta. Meta on the dip. Meta on the dip. Let's see. Meta looks pretty good. They all look good, but I'm going to wait a couple of minutes. AMD. Okay, shorts covering the first few minutes of the trading day. Algos taking care of imbalances. You don't want to get caught in the middle of that. At least I don't. So I usually wait until about 9:45. If anything, I'm taking profits off the table in the morning. AI looks like it wants to run. AI's been on the move. Davidson, Davidson with a buy on starts AI with a buy with a $30 price target. Let's see, Wall Street Bets talking about Carvana, AI, and a few other stocks that have been running lately. Blue Apron turning the corner, Blue Apron. Boeing building higher highs, higher lows. All right, AI, that's been on the move lately. AI coming off the lows here. So if you can stand a little bit of stomach churning, this one's come down from 176, 180, something like that over the last couple of years.
Biden says that the jobs report shows that his economic plan is working.
All right, the FTSE 100 index extends gains.
For 1 minute remaining now. I'll lead with the US S&P Services PMI final.
The FTSE is set for a record close. Okay, if you're trading over in jolly old England. All right, SPY. We just ran into some resistance right there. See if we follow through. SPY. Okay, 5 minute. All right.
10 seconds. $46.8, $46.8 higher than forecast $46.6. Composite PMI $46.8, $46.8 as well, higher than forecast $46.6.
All right, PMI came in higher than forecast. Watch the futures here. Watch the futures.
So just noting in the report here is business activity contraction eases at the start of 2023, but cost pressures strengthen once again. So in the key findings, demand conditions deteriorated at a slower pace. Input price inflation accelerated for the first time since May of 2022, but selling prices rise at the slowest rate since October of 2020. Just noting some comments from Chris Williamson, who's the chief economist at S&P Global Markets. There's a business activity in the vast US service economy contracted in January, as companies reported a further deterioration in new business inflows. Hiring has almost ground to a halt as firms reassess their payroll needs in the light of the weaker demand environment.
Okay, it looks like we're going to go here. Looks like we're going to go. Okay, looks like we're going to go. SPY's going here. Vino looking for, all right, open again. Vino's pushing higher. Looks like short squeeze, Vino. Chatter on Wall Street Bets on Vino. Vino, Wall Street Bets. There we go. Vino's starting to run. Okay. If you don't know what you're doing with these cheap stocks, these shitters as they're called, stay away from them. Trade quality. Or watch the room. Watch Mondo and others in the room that trade these very aggressively. AI still going here. AI still going. AI. Nice move on AI. Still going there. Looking good. Let's see what the 30-minute looks like. Okay, as we start the day, higher highs, higher lows. It looks like the open, a lot of times the open over the last few days, the open is the big move, and then you get the follow through after a flag. Open, follow through, open, follow through. All right, so let's see what we do here. So what's the deal with AI? I don't even know what they do. C3 system. I know I've looked before, but don't really know what they do. C3 AI earnings whisper. Let's see what they have to say. CI. Actually, I should look at Seeking Alpha. All right, so they had their earnings this morning, huh? Oh, that's CI. Duh. AI. All right, so Cigna had earnings this morning. AI has earnings on February 16th. Maybe you got a Valentine's present from AI. Maybe a Valentine's Day present. Okay, SPY still going. We're above VWAP SPY. All right, so it'd be very nice to have a bullish day on the indices. All right, they're buying the dip. Volume is pretty decent so far on the SPY. 4,100 is a breakout level. We want to stay above 4,100. 4,200, the call wall shifted higher. The call wall has shifted higher. That's bullish as they keep doing that, like back in March, April
At
of
10 a.m. Eastern
2020.
Time, we get US ISM Services PMI, forecast 50.5 on the prior 49.6, with a range of 54 to 49. Services employment, prior 49.8, services new orders, prior 45.2, and services prices paid.
Hey, Apple's still going here. Apple's still going. Meta's still going. Meta is still going. So Carter Worth was looking to short Meta as well as Tesla, both of them working against. All right, Apple doing really well. Apple's back to 152. Cool. Nice follow through. Excuse me. So SPY is trying to trigger a buy signal here on short time frames, 2 minute, 5 minute. Needs to get above 414.30 to trigger that buy signal. Right now we're fading a bit. No blocks, and there's hardly any blocks. This is like the slowest day in a long time. Usually block trades you see a half dozen, 8 to 10 blocks by this time of day. SPY, we only have 2. IWM, we've got 6. Qs, we've got 2. Hardly any blocks. No blocks trading.
recent reports that the US have postponed US Secretary of State Blinken's visit to China over its spy balloon. We gave this report earlier that a Chinese balloon, supposedly a weather balloon, was found in US airspace. And now, off the back of this, US also postponed Secretary of State Blinken's visit to China over this.
Okay, thank you, Grover. Meta looking for the follow through here. Meta. Okay, SPY, little Texas two-step. 2 steps forward, 1 step back. You guys can do the Texas two-step. I know David can. A little Cotton Eye Joe. I don't know if you've ever been dancing at a cowboy bar, but people know how to have a good time. I have to make a trip down to Dallas in that area. Come visit you guys down there. All right. So far, looking good. AMD looking good. AMD looking for a follow through. Okay, let's take a look at AMD's daily chart and let's look at the 2-minute chart here. AMD. It's AMD building. It could be just a fizzle, but we've had 4 bullish days. Monday was a bust. Tuesday we pulled back to the 21-day. 921's crossing up through the 50-day. Now you don't need to chase up here, but there goes AI. AI's on the move. I would look for consolidation here. This could run and right into the overhead resistance at about 90, 91, something like that, 92. But there goes AI. AI starting to go again. AI. Okay, on the 2-minute chart, AI getting a move on. Davidson start AI with a $30 price target, a buy with a $30 price target. Davidson, a tier 2 firm. Tier 2 firm, Davidson with $30 price target on AI.
Eastern time, we get the US ISM services data. PMI forecast 50.5 on the prior 49.6 with a range of 54 to 49. Employment prior.
All right, so AI is an enterprise application software company.
And prices paid prior 67.6.
Okay, we're holding up pretty well here. Holding up pretty well. The indices I'm referring to. All right, we're looking for a buy signal above 414.25, 414.30 should trigger a buy signal. Oscillators are oversold, so they could turn up to echo what we're looking at, which is volume coming in, momentum shifting more bullish. Haven't yet triggered a buy signal, so we're still sitting here consolidating above VWAP, SPY. Tesla's up $5.77, trying for 200. Tesla. Okay, so Carter Worth wanted to short this one on Monday. We got that red candle on Monday, but we followed through. Okay, looks like we're headed for the 200-day. We're right at this pivot level. There are some bag holders here that were thinking that we would break higher and move through the 50-day. I don't know what they're thinking, but I'm just anticipating. Whenever you're below the 921 50-day, you want to look for shorts against resistance, It's not until the moving averages start to turn up and to the right that you can start thinking about buying dips. Okay. So this is markdown, very short accumulation period on Tesla. Didn't take very long for the bulls to show up and start buying the crap out of Tesla. It took off to the upside. Look at that volume. That's institutions. So is it a bit extended? I guess you could call it extended. It's at the upper Keltner band. If you look at Bollinger Bands instead, we're at the upper Bollinger Band, running the upper Bollinger Bands, as John Bollinger would say, running the bands. Look at that volume, though. That looks beautiful. So right now, Tesla is just consolidating at 195. It's at 193 right now. Boeing grinding a bit higher. Looks like Boeing's going to last. It's going to stay in this consolidation for a bit longer. Watch the 21 day. If we lose the 21 day, I'm out. Okay. If it loses the 21 day, I'm out. Okay. Small losses, not large ones. I'm not going to sit on options and have them go to zero. Okay, so far we need to see a follow through. Markets feel like the bounce is just getting sold for now. Tesla, Boeing,
1 minute remaining. I'll lead with US ISM Services PMI.
Blue Apron trying to push above 125. Blue Apron. Okay, Meta hit the high and a little rejection there. Nvidia pushing a bit higher. Let's check the sectors. Okay, we've got 95% of sectors are red on the day. So that tells you to chill and reassess the markets. We've had a very strong week, so don't throw it away by going after positions in sectors that are
10 seconds.
currently underwater or pulling back, like the S&P, like the SOXL. Okay, this is taking a break. So this is perfectly normal. This is bullish.
55 spot 2, 55 spot 2, higher than the forecast, 50 spot 5. Services employment, 50, 50.
Low
Prices
tickler
8,
minus
67
800.
spot 8, 67 spot 8. New orders, 60 spot 4, 60 spot 4. Seeing some downside in S&P, upside in the US dollar.
Services PMI is out now. US dollar spiking. VIX still making lower highs. The 10-year, 3.5. Okay, the dollar is providing a little bit of headwind.
So just taking a look at the report, the supplier deliveries registered 50% in January, indicating unchanged performance. The inventories index contracted for the 8th consecutive month. The reading of 49.2% is up 4.1 percentage points from December's figure of 45.1%.
All right, we had huge gains on Wednesday and Thursday. Don't give it all back.
According to the services PMI.
Okay, there goes the 10-year spiking. Uh, 10-year spiking, that's a headwind along with the dollar. Both of those are spiking higher. Okay, so just chill for now. SPY ran into resistance. We're pulling back a little bit. We could pull
Low
back to
tickler minus
410. We
800.
could pull back to 410. That's the breakout level, SPY. So if you're thinking about puts,
US dollar index extends gains after ISM data, last up 102.75, up 0.95% on the day. Treasuries extend slide, 2-year and 5-year yields up 17 basis points.
okay, starting to bounce, You know, my sense is that most participants after a couple of big days are looking for a more downside, looking for a dip. My sense is that there's a lot of bears out there chomping at the bit for the markets to move lower. Will it move lower?
The US ISM Services PMI
Maybe.
January 2023 full report on the feed for all those interested.
But, you know, that could be counterintuitive. So just giving it a little bit of time here. We're right at VWAP. S&P is right at VWAP right now. Okay, we're right at VWAP. Starting to bounce. Okay, no hurry. After 2 big days, Wednesday after the Fed and yesterday's follow through. All right, so we got EV credits extended by the government. Tesla, Lucid, Rivian. Speaking of Lucid, we haven't looked at Lucid in a couple of days. Not since last Friday where we took profits off into strength. Lucid looking very, very like it's holding. It's not going anywhere. Lucid might be worth a look. It's a Friday, so I wouldn't be taking a lot of profits on. I mean, a lot of risk on. But I'd definitely be looking at it. Let's see what Lucid looks like. Higher lows on Lucid. All right. I'd rather trade options than
At 10:15
Low tickler
shares.
minus 800.
we are expecting to hear comments from Biden, who speaks on employment. Ten-year Treasury yield. 10-year Treasury yield up 14.7 basis points to 3.545% after ISM data shows a jump in PMI.
Okay, so watch SPY here. All right, we'll start to drop off. Still holding on. Doing chin-ups on VWAP right here. SPY, doing chin-ups. All right, so Lucid looks okay. What's Rivian doing? Rivian had dropped below that 30 level and came back to 16.
We have posted the live video of Biden speaking on the jobs report on the feed for all those interested.
Give it a little bit more time. Talking to myself, give it a little bit more time. Let's see if the markets can start trending. Is it going to be a doji? Is it going to be a trend up, trend down? Most people, I would imagine most people after a big move Wednesday, Thursday are trying to position for a move lower back to 4,100 support or the breakout zone. Let's see what Lucid's doing? Lucid. SPY, S&P. Oops, back to that. I don't know if you can hear that scratching sound. That's my cat at the door. She's like standing up against the door, clawing at the door for me to open. She likes hanging out during the trading day. All right, SPY, watch SPY here. If we start to roll over, I'd probably take some puts, maybe today's puts. But I'm suspicious. I keep thinking they're going to pop this up higher. What is FANG doing?
Low ticker
Huh?
minus
Nope.
800.
Apple's still pushing higher. Apple's still going. All right, so Apple is 7% of the weight of the S&P 500, or 6%. 6% of the weight of the S&P. Let's go take a look at the S&P equal weight index. Okay, when you look at this, these 15 stocks, this index will lead the markets, especially on the upside. 921.50 are all above the 200-day, so a pullback to breakout zone is not unusual. Look, we're above the August high. S&P 500 is not above the August high yet, but the equal weight is. So what did that tell you? Tells me that give it the benefit of the doubt, look for higher lows to continue. Seems like everyone is bearish at this point. The number of stocks above the 200-day got above 77% yesterday, pulling back. It's now at 73%. Number of stocks above the 50-day back to 69%, pulling back a little bit. So not overheated, could pop. Let's go take a look at breadth. Let's see what that looks like. Breadth. That'll tell us a little bit about what we can anticipate. You can see the S&P, the mid caps, small caps, and the NASDAQ have all pulled back from overbought territory. So this is storing up energy for a continuation, higher low, higher high. Notice the 50 and the 200-day cross on the 200-day on the S&P, top panel, 50, 200-day cross. This is becoming more and more bullish as we change, as we see more bears capitulate. This is starting to look more and more bullish. Could still fail, obviously. But the thing about long-term trends is that they take a long time to change direction. So this momentum that you're seeing right here is really starting to accelerate now. The more bears are capitulating. If this doesn't break down and move back towards 4,100, anticipate this is going to continue to stretch higher. Let's look at University of Michigan consumer sentiment. That's also moving higher. Okay. It got down to lows that were exceeding the 1980s, where we had 14.8% inflation. You remember the Fed funds rate was up at 19.4%, I believe. So right now we're just watching the markets for a higher low, higher high, or whether we roll over or just a doji day right now. All right, so all right, you can see the peak over here. US dollar was 164. Fed funds rate was 19.1%. That was back in the 80s, okay? Back in the 1980s when consumer sentiment was so oversold. Look where we were. I mean, that seems to be a little bit of an extreme. The highest inflation since the 1980s, yes. I still keep thinking about, the number of the extremes that we were at and the reasons to be more bullish. Vanguard Total Stock Market ETF, higher highs, higher lows, nice volume. I don't know. I'm just going to sit here and watch the markets. They're not giving us a buy or a sell signal right now. Just neutral. And completely expect that we could pull back to 4,100. The breakout level, 921 or above the 50, above the 200. 50 days now above the 200. 50-day is above the 200. All right, looking better. Not a lot of people talking about the New York Stock Exchange or the Dow Jones, that they've been above the 200-day since October, November. All right, I know I keep beating a dead horse with but I just keep emphasizing this has changed. The markets have changed. It's no longer the October lows where everything looks very dismal, that we could go down and make new lows. Yes, we're trading at a premium. There goes SPY. S&P is going here. All right, so S&P is going. All right, let's see. We're about to trigger a buy signal here on the S&P. All right, we're on a buy signal. Short time frames, we're on a buy signal. Okay, we need to continue to push through this 414 area. There's probably some supply here from yesterday. Let's watch this buy signal. It's backing off a little bit. Carvana making higher highs, higher lows. The people on Melissa's show last night, Guy Adami included,
Shortly expecting comments.
talking about the crazy price action we're seeing in stocks like Carvana, which has some debt coming due. They're talking about issuing a secondary to pay for the debt. So that could happen at any moment. So if we get back up into the high teens, I would probably sell some of Carvana into strength. I don't know when that debt's due, but I know it's soon. So a secondary offering, selling some shares would definitely help finance Carvana to pay that debt. Okay, so yesterday we almost got to 20. Look at the volume. Shorts covering. Watch Carvana. If it gets up into the 19s and the 20s today, I would definitely sell some into strength if you're still in it. Meta, looking for a higher low, sitting near VWAP now. SPY is trying to push higher. SPY is technically on a 3-minute, 2-minute, 5-minute buy signal. Okay, short time frames, scalping time frames. 2 minutes on a buy. 5 minutes still diddling around with this 414. 414.70 would definitely do it. 414.60. 414.70 would definitely give us a buy signal on the 5-minute. All right, watching for this momentum. Just keep thinking, everyone. A lot of people are bearish after 2 big bullish days. You got PMI, ISM coming out. You've got non-farm payrolls. Everybody's saying it's got to move lower. It's got to move lower. Why? Just because? I'm watching price action. Price action is not rolling over yet. We added 517,000 jobs in January. I thought we saw something like 50 to 100,000 job layoffs. So did they count the layoffs and also the gains or the ads, or did they subtract the two and give you a net? I don't think they're giving you a net. Anyway, price action's pushing higher, not lower. So there's your answer. Apple looks like higher to me. Yeah. Up. Here goes Meta, higher lows. Okay, I tried to strangle on Apple. Took the puts off at the open. for a small loss, for a loss, not a small loss, a loss. Apple's still going now. Probably some more out of the money calls. The calls are making money. The puts didn't make money. So I'm breaking even now. I'm breaking even. Actually, I'm making a profit now.
Just taking a look at the Fear and Greed Index, 78 out of 100 showing extreme greed, and the Crypto Fear and Greed Index, 60 out of 100 equaling greed.
Okay, Apple calls are making money. They expire today. Let me go ahead and take these off. I want to buy the next dip. I'm gonna take some profits here, buy the next dip. Okay, so Apple, I took profits. Next week's calls. Yeah. So there you go. Grover's just saying that Apple. I was just going to say, what is Apple's ATR? So it's over its ATR for the day. Look, Jesus, look at the size of that candle. You think they want this to move higher? I don't know. This kind of leans back to, if you're a new trader, you should always focus on price. What does price tell you? Does this just to say that, we got to roll over, I'm going to take puts because we're at the 200 day, or whatever the reason is, we're at resistance. To say, okay, I need to take puts because we're at resistance. Okay, that's fine. That's your thesis. But watching price action, does it keep going? Or do we back off? Well, I think we're probably going to back off, but there's more than likely a lot of shorts covering here. Look at the volume yesterday going into earnings. ATR is $4. Okay, so we're above the ATR, $4. And we got a bullish engulfing candle above the 200 day. So I'm going to buy some dips probably. If we can get back to 154, wherever we get a dip that gets bought. All right, so let's take a look at VWAP on Apple for now. Okay, so Apple, the puts were a bust, but the calls made up for it. The loss on the puts made up for it by the calls. Been doing strangles lately since we took Microsoft. What's Microsoft? That's off, right? Apple making higher lows. All right, so if it does something like this right here and buyers step up, so what I look for is, okay, VWAP is moving higher. The 20 EMA is extended from the 200 EMA. Price is extended from the 200 EMA. So I'm expecting price to eventually come back in because we have traded 100% of its ATR. It's an expansion day. Obviously, a lot of shorts covering is still going. Price doesn't say sell just yet. So in the event that we start to reverse, what I'd be doing if I was in this, which I was until I just sold my calls, I just keep bringing my stop up underneath, let it keep going. Shorts are getting clobbered right now. So Guy Adami had a very good observation yesterday. I thought his analysis was spot on. And Carter Worth echoed the same thing. Carter Worth said about Meta, yes, it's extended. If you had a position going into earnings, I'd probably be peeling some off, taking some profits. If you were looking for an area to short Meta, this could be an area, but you need to see price action start to reverse. I'm thinking it's going to base up here. But Guy Adami said last night, which I think it was Guy Adami, maybe it was the other guy. I forget his name. But he said after hours, all we did was give up the gains from Thursday. Hello, price action. What is price telling you? All we did was give back after earnings. All we did was give back the gains from Thursday. And look at the volume. this is super, well, I won't use superlatives, but this is bullish, okay? We're above the 200-day, the 921 are crossing up through the 50-day, about to cross through the 200-day, price is above. This is the right side of a pattern, but you don't want to buy the high of the day. So if you haven't established an Apple position, I'm looking to buy shares at some point for my kids, but I want to see a consolidation in this area. So right now I'm just waiting. I'm waiting. Just sold the calls into strength, made a nice profit there that accounted for net was a win. It was a net win. What's Google doing? Google, I was looking for a reversal on Google. Meta trying to push higher. Google. All right, Google's coming off the lows. That's starting to head towards the highs. All right, so maybe I make a win. Maybe I get a win on the call side that makes up for the put side. The puts I had, I guess, about $1 loss on the puts. I did a strangle on Google, $2 out of the money. Right now, I'm just watching. I mean, my feeling is that they continue to buy. So while everyone else is bearish, they're buying. They being institutions. What's tick cumulative? Tick cumulative right now is a little bit lower. It's red. So what does that tell me? It's telling me look for selective names to buy. Now, with the dollar moving higher, now it's dropping off, by the way. With the dollar moving higher, that should put pressure on growth stocks. All right, so there's a lot going on right now. There's probably a lot of calls being monetized. Dealers are having to hedge Apple's move here. Dealers are having to hedge. So what are the dealers doing? Okay, so you're buying calls in Apple. The dealer is short those calls. So what does the dealer have to do? Well, they have to buy Apple shares to hedge. Because we're above zero gamma, they have to buy shares to hedge. So this creates a feedback loop, right? You buy calls, the dealer is selling you those calls, they're short. They have to buy shares in order to hedge because they don't like directional exposure. At some point, Apple's going to come back in, showing muscle on ATR. So the dealers have to buy Apple shares in order to hedge their position. The higher they go, the more that they buy, and it's creating this feedback loop. Apple's still going. This could start happening on Google, by the way. Hoping it does because I have Google calls that expire today. I hope they make a profit like Apple did. That accounts for or takes care of the puts that I took a loss on. So I need those calls I need price above 108. 108, 109 should give me a profit. All right, NVIDIA squeezing right here, looking for NVIDIA. All right, so none of these FANG stocks are pulling back yet. All right, we're still pushing higher. SPY still pushing higher. Okay, we're on a buy signal on the 5-minute SPY. I told you that a few minutes ago. Okay, buy signal. Momentum oscillators are still turned up, so this could continue a while on SPY. Back to 418, that was yesterday's highs. All right, so it looks like the momentum is still pretty bullish. Okay, so let me show you what I'm looking at here so you understand. I don't mean to sound condescending. I hope I don't come across that way. I just want to show you what I'm looking at. So the words I use sometimes may come across as condescending. Trust me, I don't mean anything negative. Just talking out loud. Sometimes when you talk out loud without really thinking about what you're saying. All right, so you can see SPY. It's on a buy signal on the 5-minute right here on the left side. This is the 15. Look at the oscillators. Okay, so the oscillators still have room. Doesn't mean it's not a guarantee that it's going to move higher. It's just that the oscillators are not overbought yet. and we could continue to see follow through. All right, so the momentum could continue, in other words. Okay. So, and we could get up here. If we get up to 417.75, that would trigger a follow through buy signal. We're already on a buy signal on the 5-minute over here on the left. Was watching the 2-minute early. The 2-minute gave us a buy signal over here right after the open. We didn't drop back through the trailing stop. That green line's my trailing stop. SPY is still, Apple's still going. Look at Apple. Look at Apple.
Ocean set up more than half
All right.
Russian oil imports this month.
Look at that 15-minute chart. All right, love to see that on the SPY, and I'd like to see it on Google. Google's not doing much right now. What's Amazon doing? Amazon on the dip, still hanging in there. It's on a buy signal since 10:15. So let's watch SPY. What's the Qs doing? Some of you took Qs, right? Many of you took the Qs. Here's the Qs. They're on a buy signal since 9:45. Looking like that might trigger. Okay, maybe take some profits off. Blue Apron continues to push a penny stock. It's $1. I have February monthly $1 calls on Blue Apron. They're a profit, so I'm just going to go ahead and take these off. Blue Apron. Bought those for like 20 cents. Okay. All right, so they're up 100%. All right, Blue Apron, I took a profit there. I bought those at 20 cents when the $1 call, I bought them at 20 cents when Cayman mentioned it. I'm selling into strength. I made 100%. A lot of times I'll take these trades that Cayman and Mondo take, and I'll just track it with a small position, 10, 20 options or whatever. And look for those to follow through. Tesla looks like it wants to go higher highs, higher lows on Tesla. All right, let's look at Tesla. Tesla is on a buy signal since this morning. Over here, Tesla on a buy signal. It's on a buy signal on the 15-minute as well. Looking for this trailing stop to hold. Look for a follow through. If it drops through 195.20, that'll be a stop. If you took it this morning, that was 184 up to 195. So that's a nice gain on Tesla. All right, Tesla looking good. Apple, take profits. If you got today's calls, I'd take a little profit off here. We're 100, more than 100%. 110% of the ATR, something like that. Take a little bit off. Tesla looks like it wants to go. Looks good. Tesla. Carvana, if you get up into the high teens on Carvana, I'd take profits because they're most likely going to have a secondary to pay for that debt. Okay, the dollar is moderating a bit. It's off the high. The 10-year, same thing. VIX is starting to turn. So you got mixed signals right now. I'd be taking some profits off the table. Reassess the markets over the next few minutes and see if we get any more good setups. Let's see what's working right now. And I'll go to this chart. 15-minute. Let's take a look at some of these names. AI. AI still going here. AI. Nice pop. You can see it's on a buy signal on the 15-minute time frame from 23. It's already had quite a week, so I wouldn't be buying up here, just saying. Let's see what else is on here. All right, most of these are just stocks I've never heard of. Okay, Nordstrom, that's Hostile Turk takeover. Cowan, hostile takeover of the board. SPY could run to 418. So if SPY breaks higher here, watch the SPY. Watch the SPY here. Looks like it wants to go. Watch the 5-minute chart. It's got room up to 418. It's got room up to 418. Watch this buy signal right here. Could go right here, SPY. Watch the buy signal on SPY. About to go right here, right now. Okay, so maybe some calls. That's 418s. They're 50 cents. If it goes here, 55 by 57 cents. 55 by 57 cents. The SPY calls for today. The 418s are a 26 delta. The 417s are a 38 delta. That's as far. There we go. Here we go. Here goes SPY. Here we go. All right, let's go to the 2-minute chart. 5 minutes is on a buy signal too. Okay, so here's the SPY. All right, look at RSI. All right, so a little bit overbought on a 2-minute. So I want to shift to the 5-minute. Watch the 5-minute. RSI is overbought there too. So I'll shift to the 15-minute. We really need to see this move up to 417. You can see the oscillator on the 15-minute is oversold and could lend to the move that we're seeing right now. Stochastic RSI in the lower panel. Okay, SPY. There goes SPY. A little bit more volume coming in. All right, we got a few more blocks coming through as well. 416.72. All right, so that looks like shorts covering. 416.72 blocks. SPY. $415.80 right now. $415.80. Okay, we got blocks at 417 and 416.72. All right, so we're starting to push higher. Those block trades coming through, alerting us to shorts covering. All right, we're starting to follow through. There's your 5-minute. Okay, I'm just watching stochastic RSI down here. It could embed up here. All right, nice follow through. Pushing higher. All right, let's see if we get a spike, get the shorts to cover.
Biden says US inflation continues to come down and real wage is going up.
All right, Biden speaking. He's talking about inflation coming down. So shorts are most likely inclined to cover as he's talking bullish about the economy. Whether you believe it or not, I do see inflation coming down a little bit, but my Dunkin' Donuts coffee is still $17.99 for 20 ounces. It's crazy. It was $7.99 when we first got here. $10.99, I think, was the highest price I saw in October 2020. It's up to $17.99. That's just something like that you notice if you drink coffee or if you eat eggs. I like to eat eggs. All right, there goes SPY's pushing a bit higher. We're on a buy signal. Okay, I want to see this shift to the 15-minute. I want this oscillator to turn up and start seeing a little bit more momentum. Okay, looking for dips to buy as far as scalps are concerned. Okay, SPY still going here. Nice. All right, looks good. Okay, look for a dip to buy. Look for a dip to buy. All right, so watch the 5-minute. All right, so I've been noticing using super trend and Stoch RSI. You want to buy on these dips in the oscillator. Okay, you don't want to buy at the high right here on the breakout. It's on a buy signal, yes, but you want to buy when the stochastics turn. Or if you're using Grover's scripts,
To improve the US economy and will focus on lower costs for families.
or if you're using Grover's scripts, you want to wait for that buy the dip signal. All right, so let's see, SPY. Okay. We got 1.3, 1.35 R ball. So that's pretty good volume so far today. I'm noticing that if you use TTM, if you use John Carter's TTM, we got yellow histogram bars, We're on a buy signal with the RF Pro signal on the 5-minute. The 60-minute has a sell signal on the 60. The daily is still very bullish. Note that we are above anchored VWAP going back to January 2020. We're above that level, so that's bullish as well. We're above the 200-day. All the indices are above the 200-day. 921 50-day crossing up through many of these. Extreme greed. Yeah, I could see that. SPY 15-minute watching that oscillator. Still pushing higher from oversold. SPY on the 15-minute. Okay, this oscillator turning. Okay, Redfin has turned the corner. Redfin is a real estate related name, Redfin. VIX is turning up. All right, 5 minutes a bit overbought. Looking for 15 minute to continue this momentum on the SPY. Let's see what Apple looks like. Apple. On Tim. Let's go, Tim. Apple's still going. Apple is still going. Nice follow through. There goes SPY. All right, so if these are moving higher, stands to reason. If Apple's moving higher, Microsoft moving higher, then the indices should respond in kind. Okay, SPY still going here. Okay, so Microsoft, let's see, Google, Amazon, all of these adding to the weight in the S&P. Okay, Amazon's about to trigger a buy signal on the 2-minute chart. Let's see what the 15 looks like. 15-minute. It's got a ways to go. All right, there goes SPY. 418, I'd be selling into 418. SPY, I'd be selling into 418. What's Google look like? Google is about to take out yesterday's levels. Google on the move. Okay. Tesla, highs of the day, Tesla. Tesla, highs of the day. Let's see what else we got here. Notice that usually we have the some of the large cap stocks will show up on these lists. I don't see any large caps for now. Let's see. Volume gainers. NASDAQ volume gainers. Okay, so here we go. All right, so Tesla, Apple's starting to notice the size of the candles. They're getting smaller and smaller, kind of like when you shoot a fireworks up in the sky. It'll start losing momentum before it turns. Okay, so meaning larger candles leading to smaller, ever smaller candles. Now doji, maybe it turns over now, turn into a red candle, and then it rolls over. Tesla still looks good though. Amazon, Meta. Meta needs to trigger that signal up there. Meta. Obviously, it's still on a buy signal. Meta consolidating. SPY looks like it wants to keep going. Tesla looks like it wants to break out here. Tesla looking really strong. Tesla. Tesla. Nvidia looking good. Coinbase. Yesterday, Coinbase on a buy. I know, Susie, you were looking at it yesterday. Okay, I think Susie bought Coinbase yesterday. Looks good. Mara. Pull back Intel. Intel breaking out. Lucid. Looking for a buy signal. Bed Bath and Beyond. Nothing. Rivian. Affirm. Open's about to trigger a buy signal. Open. Microsoft down a little bit. Okay, SPY's still hanging in there. SPY's doing really well. Tesla still going here. Tesla. Okay, note the oscillator. 15-minute, getting a little bit frothy up here. Meta looks like it wants to go. Meta, looking for a break above these levels. Okay, remember what AMD did? Remember AMD followed through, and just for the last few days, it just kept going. Yesterday was a stellar day in AMD. Looking for a follow through in AMD. I don't know that I'd want to buy it per se today, but after a big week, I'm thinking more that I want to see a little consolidation. SPY starting to pull in a little bit, or maybe take some profits off here on SPY. Watch that 5-minute oscillator. 60 minutes, 15 minutes still looks good on SPY. Could pull in a little bit back to the moving averages. Okay, AMD still going here. AMD, let me see what the calls look like further out in time. Don't want to buy up here, I'm just saying. AMD. Okay, an at the money call. 55 Delta is about $9, $9.80. AMD for June. AMD looks like it wants to keep going, right? It all depends on the indices. Indices right now could be ready to pull back. All right, let's look at AMD. All right, AMD is overbought right now, so I'll be waiting on AMD. All right, SPY pulling back a little bit. Watch the 5-minute on SPY. Still bullish. Okay. All right, so not quite 11 o'clock, and we've seen a nice rally up to almost to green on the day, pulling back in a little bit. Give it a few minutes. Give it a few minutes. Okay. AMD, watching AMD. That's a daily chart on AMD. Okay, we've been on a buy signal since the 12th of January. So a little bit extended. Look at our Stochastic RSI, overbought. All right, let's look at some of the other semiconductors like ON Semiconductor. That's extended. NVIDIA. Daily, that's a bit extended.
US believes in diplomacy to responsibly manage US and China relationship, according to senior official. He also goes on to say US concluded that the conditions
NVIDIA.
are not
All right, let's look at
for
Marvell.
Secretary Blinken to travel to China.
The CFO, I believe it was, the CFO left Marvell and went to AMD. Could that be indicative of stronger management over at AMD. I mean, it's already pretty strong. All right, AMD. AI still driving higher. AI. Carvana, no follow through. SPY's still pulling back a bit. All right, Tesla embedded. Stoke RSI. Tesla still going. Mhm. All right, the dip getting bought. All right, so the dip's getting bought right now. Tesla, 60 minute. 60 minute looks okay. Look at the stochastic RSI in the lower panel. All right, so if you were thinking about buying this breakout here, look at stochastic RSI. Let's look at the 15 minute, 30 minute. That one's oversold as well. You see what I'm looking at? All right, so 15 is still coming up. If it wasn't Friday, Stoch RSI turning on the 30, on the 60, 4 hour. It's just a daily that's embedded. It's just this strength has just been pretty remarkable on Tesla. But they keep buying the dips. So you can see on the 60 minute what I'm looking at here. 60 minute, see these dips keep getting bought? Every time stochastics dips, what happens to price? When it turns back up, it takes off to the upside. What about the 30 minute? Same thing, 30 minute. See that? Okay. Every time this dips, it pops up a little bit. Stochastics pops up, pops up. All right, we just started to turn now. Okay, so Tesla looks good. Looks like Vino's going back to zero. Vino not working. It's going back to zero, it looks like. SPY still drifting lower. Tesla, SPY still pulling back here. SPY. Okay, the 5-minute, we told you Stochk RSI was overbought, so we're looking for this to come back in. Look for this little dip to stay above that trailing stop. Would have to drop below 413 to continue lower, looks like. All right, I'm going to take a couple of minute break. This is your host, Cousin Vinny, coming to you from theclosingprint.com. It's approaching 11 o'clock on the East Coast. It's Friday the 3rd. I'll be right back. I'm just going to go stick my head outside, get a little breath of fresh air, freshen my coffee. Give me about five minutes.
Before we go here, this is footage that was captured by an eyewitness over Billings, Montana on Thursday, which is the same day that U.S. officials said that they're tracking a suspected Chinese high-altitude surveillance balloon that was spotted over multiple sensitive domestic sites. The Pentagon did say that it's been tracking this. To put it in perspective, you're talking about areas like Malmstrom Air Force Base, which is where we house
SPY bounce getting bought.
intercontinental ballistic missiles. Getting the news just this hour that U.S. Secretary of State Antony Blinken is going to postpone his trip to China next week following this situation. He was slated to visit Beijing to meet with not only his Chinese counterpart, the Minister of Foreign Affairs, but also potentially Chinese President Xi. And China this morning basically saying that that balloon operating over U.S. airspace was a civilian weather balloon intended for scientific research. But this is very notable because, as the Pentagon and DoD officials have noted in the last 24 hours, we've seen some similar types of activities where U.S. territories are concerned, but it's my understanding.
Look at the 2-minute SPY, 2-minute SPY.
I've spoken to that this is perhaps the first time we've seen a balloon such as this enter the lower 48. David, raises a lot of questions.
So many. We don't have any time to even ask them, let alone answer them. But just the whole thing, the balloon.
The whole thing. What space satellites were able to track, what radars were able to track, and how we are actually going to
capture it. Can we capture it? All right. Well, that's we're captured. We're done right here on Squawk on the Street. Everybody have a great weekend. Stay warm. Tech Check starts now.
Good Friday morning. Welcome to Tech Check. I'm Carl Quintanilla with Deirdre Bosa and John Ford. Today we'll talk about this tech turnaround. The NASDAQ goes positive after the steep drop this morning and what that red hot jobs number means for tech today. Plus some deep dives on the results of the biggest of the big, why Apple turned around in today's session and Amazon has not. Later on, an exclusive with the CEO of Microchip, why the street thinks that stock is undervalued. What a Friday, Dee.
What a Friday, and we made it. Let's take a look at the markets as we close out a very busy week of earnings and economic data. As Carl said, we were way off the lows of the day. The Nasdaq's still down about 0.2%, but we were down as much as 2% in earlier trading. Right now, it is down, like I said, 0.2%. The Dow up by a few points, 40 that is. Despite turning lower after earnings results, take a look at the mega caps. Apple is now positive. Alphabet has been trying to make it there. Amazon has clawed back a lot of its downside. So what does it all add up to? Well, John, the Nasdaq is on track for its longest weekly winning streak since November of 2021. All that on the back of results that, let's face it, weren't all that great.
Yeah, Well, let's start with Apple. The iPhone revenues falling as they continue to face supply chain issues in China. But as CEO Tim Cook pointed out to our Steve Kovac, they actually came in below operating expenses for the December quarter. And then there's Amazon. They saw misses on the top and bottom lines, including a miss for AWS, but their nascent ad business surged 19% year over year. Then finally, Alphabet, Google, being hit hard on that front, missing on its ad numbers across the board. But they are talking about their long-term AI bets rather than talk too much about that, mentioning AI more than 50 times on the earnings call, nearly twice as often as Microsoft following its OpenAI investment. And at the end of the day, despite average falling price targets, all three remain consensus buys. Of the three, Carl, I got to say, the more I've looked at it, Apple had a good quarter. I mean, given the macroeconomic headwinds, on a constant currency basis, iPhone revenue was about flat, they said. Their inventories, they were actually constrained and think they could have grown if not. And Deutsche reiterating their buy rating already.
Yeah, I think because the Street was able to look through some of the turbulence and say, okay, the fundamental business is still good. You might argue that it's harder to make that case with Amazon and Alphabet. I mean, you just look at the pure profitability. Take a look at sort of Amazon's revenue over the last few years. It's nearly doubled. Profitability, however, has fallen off a cliff, and this is exactly the problem that Andy Jassy is trying to solve. On the call last night, his first ever entering the analyst call as CEO, talked a lot about streamlining. Sundar Pichai talked a lot about sharpening their focus. Details, though, were a little scant, Carl or John, because we know they need to get there. Alphabet, for example, talked about slowing the pace of hiring still, and I wonder if the Street wants to hear about more cuts. They still hired 3,500 employees this past year. And take a look at these operating margins, 24%. They were at 31% not all that long ago. And of course, just all the talk about AI. This is not a new thing for Google. They talk about it every quarter. It's not a flashy thing like it may be for other companies, but it did feel like there was real urgency there, John.
Yeah, I think on the AI thing, investors beware. Not because AI isn't real. It's not a metaverse situation here. But because a lot of these companies, they've had an AI strategy for a long time. They just know investors want to hear them say AI a bunch of times, so they do it on the call. So you got to drill down, John, and look at what's really going on there. Yeah, Carl?
Yeah, I mean, I assume you guys have seen, for example, a chart of C3 AI today, up 21%. I'm sure Tom Siebel's having a very good morning, but John's right. People they're just screening for the letters.
Well, speaking of Tom Siebel, I actually spoke to him the day before yesterday, and part of what they're doing is incorporating OpenAI into their AI platform, into their product. So I talked to him and to their CTO. That's something that we should talk about some more because it is quite interesting. But I wanted to go back to Amazon. I actually think Andy Jassy and the team did give quite a bit of interesting detail on the call on their optimization. He talked about how much video is driving engagement and signups in Prime and that they see that investment is worth it. He talked about how grocery is a tough nut to crack and they're going to have to spend this year figuring out how to differentiate grocery before they start to scale it again, but they do expect to scale it again after 23. So I think they actually did give some good detail. But with all of this optimization that they've got to do and the uncertainty on what's actually going to happen in the macro picture this year, investors do need to consider that.
That's why you buy Amazon, right? I mean, the multiple is so much higher than their peers, but you buy it because you think that they might be able to pull off groceries. And certainly they pulled off advertising. To your C3 AI point, Carl, it's such a good one because it really is indicative of this broader market moment. It reminds me of 2021 when things was simply Bitcoin or blockchain in the name were rising. I'm not making the comparison saying that AI is like blockchain or Bitcoin, but just the buzz takes hold, and C3 AI has just been on an absolute tear. The ticker, of course, AI. Let's continue the conversation on Amazon and Alphabet with Cowen's John Blackledge. John, which one did you like better? Did you get enough detail on efficiencies and better profitability from both those names?
Yeah, I was listening to you guys in the lead in, and I agree. We didn't, from either company, we didn't get, kind of like quantification of the various cost containment efforts that they're doing, like we kind of got with Meta the night before. But what I would say for Amazon, and both actually beat on their profitability in 4Q for Amazon if you X out one-time items. But the one thing that I thought was interesting and positive on the margin was they are seeing efficiencies of the fulfillment business. And I've been on, we've talked about doubling the fulfillment network over the last few years, ramping the transport cost. They had their shipping costs were up 4% year over year, while their unit growth was 8%. And so talking to them after the call last night, that was better than they thought it was going to be. And so I think Jassy kind of talked about it a little bit on the call, and so that was certainly positive on the margin.
John, are you worried about cloud prospects? Of course, we got that warning last week from Microsoft, and it was notable how on the Amazon call last night, when analysts asked them, is mid-teens a holdable growth rate? And the CFO said, it's not, we just don't know. What does that make you think?
So they said mid-teens growth in January versus 20% growth in the fourth quarter. I think it probably holds for the first quarter, and then after that, we have it going down, decelerating a bit further in the second quarter, and then kind of stabilizing, maybe uptick as you get easing comps at the end of the year. But I think it depends on the macro. I mean, they said multiple times last night.
All right, we keep hitting this resistance level overhead. Probably pull back now. Okay.
Constructive things that the bulls are assembling on Amazon, but mostly tech at large are
Tesla, Apple, everything's consolidating at the high. Get off my desk. Get off my desk, you. Get off. Yeah. Okay, Meta's still hanging on to gains from earnings. Google making higher highs and higher lows. Now it's lower high. Let's see if we run here. I don't see an edge up here. We're SoFi pulling back. NVIDIA.
Hey, John, let's talk about CapEx.
Okay. Really not much of an edge right now. We have everything is overbought on short time frames and the longer time frames. Intel's at the high. That looks like that wants to keep going. Let's look at the daily. Intel. All right, 3031 is a breakout level on Intel. Intel. Intel, I'm going to buy some Intel. Let's see if this follows through here. Intel. Okay, I like Intel. All right, I'm going to buy some, maybe some shares. It's at the high of the day. Let me wait for it to pull back a little bit, but I'm going to watch Intel here for potential breakout. All right, over the last few days since earnings, a miss, 14 billion. All right, so that's Intel. Looking for a breakout above 31. If it does, that indicates that institutions are building positions off of this low. Here's the weekly chart. All right, need to get above that 32 area. Really needs to break above 31 to indicate that institutions are interested, trying to push through 31 now. We've met resistance there many times since November, October high, Intel. Okay, watch Intel for potential break above 31. If it does start to go, shorts will cover. Thank you. All right, so it's not as bad as I thought it was. Yeah, so the option volume, not that bad. All right, so this could continue. Look at the oscillator at the bottom. Look at that RSI, Stochastic RSI has room to run for the breakout. It's definitely been in play. Yesterday we noted it, and the day before that, after earnings, this continues to push. We noted that Intel was not, despite the miss, Intel appeared to be bought. It had a bid in Intel. All right, SPY looks like it wants to go here. SPY looks like it wants to go. Let's see if we break out here, Intel. I mean, SPY, if we break out or not. SPY. So Intel looks pretty good. All right, SPY. Okay. This has been a really stellar week. The last couple of weeks have been really stellar. Stellar. Okay, Apple. If Apple's moving higher, then look for a follow through. SPY. If Apple continues to push higher, that's going to put some pressure on the indices. There we go, pushing higher. SPY. Oscillator's turning, 30-minute. Look at the 30-minute oscillator down here in the bottom. Okay, last time this turned on the 60-minute, we blasted higher. We're already at highs, and we're just below resistance. 420, 4,200 is a major level. Call volume building up there. Look for a breakout in SPY or rejection. Watching right now. $30-minute oscillator oversold. 15-minute oversold and turning higher. So if we do get through 418, that's yesterday's high. 416.50 is the high of the day. Looking for a break above that. Not happening yet. All right, Tesla trying to take out the high. Tesla. AMD looking pretty strong. Looks like that wants to follow through. Apple. AMD. Pretty strong. Could be the highs of the week. Just watching oscillators in the bottom panel as they turn up. SPY. Qs. Okay, not too far. If the Qs continue this ramp up, we could see a break above 312.30 or so. Look for a follow through. SPY 416.50 is resistance for now. AI is on the move still. Yeah. AI, nice move on AI. A lot more blocks, 416.72 blocks, a lot more of those coming through. A whole slew of 416.72s coming through on SPY. As we're trading at 416. So we need to get back above that. We're bearish below 416.72, bullish above 417 or more or less. Boeing hanging out above VWAP, Boeing above VWAP. All right, looks like SPY is going to pull back a little bit more.
Oil futures pair gains. Brent turns negative after earlier rising $2 a barrel.
To meet the demand that they're seeing. Again, the big question for myself and analysts on the call is that demand that they had that they could have fulfilled last year carrying over to this year, and they did not have a good answer for that. Tim Cook basically saying they just don't have enough data yet to say, are they seeing a carryover into this quarter? And look, they did say across product categories, John, that basically everything but services is going to fall again. Sales are going to be down year over year. What investors seem to be liking with the stock up a little over 1% now, I think it is. What investors seem to be liking is iPhone is not going to fall quite as much. And so there's a little bit of optimism that even though there's weakness among the consumer for demand, that they're going to perform as best as they can. And I would also point out, John, that even in this tough environment, Apple gained market share according to IDC.
Yeah, so Wamsi, that I think is the tough place to be in if you're neutral on this, right? Is that unlike the
Intel, let's see what Intel's doing here. Intel, AMD, Redfin is following through. Redfin real estate stocks have been faring better over the last couple of weeks. Real estate stocks like XLRE, Builder's been doing well, catching a bid. All right, let's go. Let's shift gears here for a few minutes as we're going into 11:30. All right, SPY starting to move a bit more. SPY on the move. Breath, I want to see breath turning back up, improving. Okay, these indicators pulling back in, which is helping us a bit. Still somewhat overbought, thinking that we could pull in and test 4100 breakout level. Maybe start next week. We'll see how they push it right here. We're right up against the highs. But breath is okay. S&P equal weight index, you can see they're buying the dip. Upstart being downgraded, still in an uptrend. Are they trying to? Looks like what they're trying to do is continue buying while keeping the price suppressed somewhat. Meaning keeping it down here a little bit longer for them to build positions. SPY. Okay, so we seem to have an issue with 416.70, that level right in there. See if we can't get above this level or if we break down. The 20 and the 200 are very close together, stacked on top of the VWAP. 20 above the 200 above VWAP. Redfin pushing a bit higher. Redfin. Intel. Intel breaking above 31 now. Pretty solid buying on Intel this morning. The last few days, mentioned that Intel wasn't breaking down, even though they missed. Semis have been pretty strong. This is the strongest look we've had here. 3 white soldiers as we're trying to break above 31, headed towards the 200-day. Very clearly defined base area. Okay, so as far as phasing is concerned, I look for phases in the markets. I look for what phase is a stock in. Is it in phase 1 accumulation? Is it in phase 2 markup? Is it in phase 3 distribution like it was over here in January, February? Or is it in phase 4 from February down to October, the markdown? Right now, it looks like it's phase 1. Moving averages are clearly moving sideways. Volume's starting to pick up. So that's telling you institutions have been picking up shares down there. After earnings now, they've got 3 months for this to appreciate in price. Can we get 10, 20% out of this one in the next few months? Probably. Intel showing signs into institutions are picking up shares. I'm going to buy some shares. I won't buy the high of the day, but I'll definitely buy some shares if we stay above 31.50 or so. Certainly if we get above the 200-day. So many stocks are above the 200-day. So many stocks above the 200-day, like Apple, Google tried to stay above the 200-day. Google. It pulled back in earnings. Now it's back above the 200-day. Amazon trying to stay above the 200-day, pulled back. The indices are above the 200-day. There goes SPY. Meta above the 200-day, obviously. Building a base up here at a higher level. Gap and go strategy. As long as it holds above 180, that would be my stop. Looking for a push higher over the next several weeks. A base and then a follow through. 921 crossing up through the 200-day. 50-day probably crosses through the 200-day on Meta. In a few weeks, probably by the end of February, early March, you'll probably have a 50-day cross up through the 200-day. So many stocks are following what the indices have already told you. The 50 and the 200-day are crossing on the S&P 500 today. The green line's crossing that dotted line. That's the 200-day. 50-day is the green line. Okay. I know I've beat this to death, but many of these indexes have been above the 200-day for many weeks now. The Dow Jones Composite of 65 stocks. This reflects Dow theory. Dow theory is produce, industrials. The transports get the product to the end user or the wholesaler, the retailer, or whatever. That's rails, trucking, shipping, airlines, FedEx, UPS. Look at FedEx. There's a good example. FedEx. Dow theory, right? What's FedEx doing? FedEx is above the 200-day? Yes, it is. It's doing what Meta did. A lot of people are very bearish on the markets. This is showing they've capitulated or they're starting to capitulate because it's gapping up on volume. Okay, no longer are people starting to think, oh, geez, there goes SPY. I guess we're not rolling over and going back down to the October lows, at least not now, not at this time. And if you look at the S&P 500, if you're a new member, there's been a lot of talk about valuations. Believe me, Mike Wilson over Morgan Stanley has to explain to upper management why he's so cautious on the S&P. Mike was talking about earnings coming in from 2022. Q4 earnings were at 220. A lot of estimates, a lot of analysts and economists were talking about earnings coming back in because they were overvalued, but we spent lots of time, the black line above the red line. We spent many years above overvalued areas like 2000, like 2016 through 2019 into present day. We spent plenty of time above overvalued areas. So that's not the only thing you need to consider. So a lot of those people are most likely covering.
Erasing opening decline.
Okay, a lot of people are covering. And you can see that in the gap ups in stocks like FedEx, Meta. I mean, everybody was bearish on Meta, including myself. I thought, this was good, a nice ramp up into earnings, but I didn't think this was going to happen. I thought probably would pull back to the 50-day. Nope. Zuckerberg actually listened to Brad Gerstner and other big growth stock investors that were putting lots of money into Meta. Okay, they were holding big positions. Brad Gerstner was very unhappy with Zuckerberg back in late 2022. Well, that's a big change. A lot of people are saying, well, Meta should fade from here. Maybe it does, but price is holding up for now. I suspect there's a lot of people who were short, gapped up, and now we have to wait for price action over the next few weeks. Okay, so it's 1-to-1 up volume, 1-to-1 up volume on the NASDAQ, 1-to-1 down volume on the NYSE. It's a Friday. This is the 3rd of February. We do have mostly buying volume up here at the highs. A little bit of selling volume, mostly buying volume. I'm watching volume by price, real time volume by price, not past, but real time. On Schwab charts, you can watch real time volume by price. And we're about 3/4 more buyers than sellers at the high right now. That's a good signal. SPY's pushing higher. Okay, we get the 15-minute to trigger above 418. We could run up to 420. That's the call wall. Call wall shifting up from 4100 to 4200 on the S&P 500, and from 410 up to 420 on the SPY. Okay, so that happened all during 2022, or 2020, sorry. All during 2020. All during 2020, from the March low of 2020, we started seeing the call wall shifting higher. A lot of similarities to 2020 and the current conditions, not because of the severity of the move, but because things are changing that changed back in 2020. Similarly, okay, we had NYSE with a bullish 50-200-day cross, okay? Just like over here in 2020, we had a bullish 50 and 20-day cross. And then we had a 200-day, 50-day cross in August. Well, we had the 50-20-day cross back in October, November. Now we've got the 200-day, 50-day cross, a golden cross for the last 5 weeks. Looking more bullish. The 200-day, the green line starting to flatten out and turn. And more bears are capitulating. We see that in the AAII bull bear ratio, which turned similarly in 1990 and also in 2009 and 2020. You can see that big turn there. That's bears capitulating from extreme levels. Intraday, we're a little bit extreme as well. Fear, greed is at extremes. But this is changing on a daily basis. So it takes time. The markets look pretty good for next week. We're doing very well. higher highs, higher lows. I mean, how long is it going to take the bears to acknowledge that price is above the 200-day? We briefly moved above the 200-day in August and got rejected. We briefly moved above the 200-day in November and December and got rejected. Doesn't look like we're getting rejected right now. Now we need to get above the August high on the S&P 500. The NYSE is already above. NYSE is already above. So if you're thinking about retirement accounts, I'd be easing into more long equity funds. You can see the August high over here. Okay, we've been above that level since November and continue to move higher. All right, so I don't see what a lot of people are talking about as far as retesting the October low. I think fewer people are looking at that level now. Okay, so enough of that. My mini diatribes. Okay, so we're green on the day, 10 cents. Woohoo! All right, VIX is flat. We've got the US dollar trying to make higher highs, currently on a lower high, but we've got a higher low on the dollar. So watch the dollar, that's starting to move higher. The dollar, the 10-year, and the VIX are giving us reason to pause or to consider resistance here. Okay, so we're not making it through this level just yet. All right, we're pulling back pretty fast here. The dollar, the 10-year, the VIX are turning up. Okay, Redfin. I'm watching Redfin here. Real estate, Redfin, RDFN, Redfin. High pulling back. Redfin pushing higher. It's green on the day. Redfin. Okay, this is above the 200-day. Real estate stocks, XHB, builders. These are all above the 200-day. Toll Brothers. So if you're going to invest, I think Rick Reeder over at BlackRock, which I think they manage, what, 2.75 billion in assets. Rick Reeder over at BlackRock. I think he put it very eloquently. I wouldn't be, he was saying you don't want to be too cautious, but you want to be selective in what you're buying. Are the builders too extended at this point? Watch Home Depot. Home Depot, that's one that Rick likes to trade. Lee Star. Okay, Beazer Homes. Okay, we're pulling back a little bit. Beazer. XHB though. XHB. A little extended right now. Let's go see what sectors look good. I saw metals and mining were higher earlier. Metals and mining. Oh, more sectors are green on the day now. No surprise there. Small cap energy. PSCE, small cap energy, is on the move. It's bullish on the day. Retail stocks. You got Cowen with a hostile takeover of Nordstrom. Cowen, XRT. All right, so it wasn't too long ago in late December in a weekend video, we talked about the potential for this to turn. If we saw a higher low lead to a higher high, that this would be bullish for retail. Guess what? That happened. Target, above the 200-day. I mean, how many stocks need to be above the 200-day before people realize what's going on here? Target, Walmart above the 200-day. TJ Maxx, one of my favorite retailers, above the 200-day. Been above the 200-day since October, breaking out of this base. So our job is to find what stocks are still viable, like Five Below. Five Below. My kids loved this store when they were young. Go in there, everything's under $5. Five Below. So look at the retailers. Look at the retailers. There's probably a lot of gems in the retail industry group. Retail. That goes for XLY2, consumer discretionary. Okay, when consumer discretionary is climbing, that's considered bullish for equities. Hell, all you have to do is look at the international markets. All right, ACWI, the All World Index. This is the top rated companies value around the world, ex-US. That's been on a bullish trend. We bought some of that a couple of weeks ago. That keeps moving. It doesn't move a lot, but it's moving higher. What about emerging markets? Emerging markets consolidating. Greece consolidating, trending. Some of the European countries like France, trending. Others like Italy, breaking it out of the base. Italy, if you're in Italy or you like trading some of the Italian stocks, Italian ETFs, there's a lot of good companies in Italy. All right, so breaking out of a base there. It's got about a $10 a $10 measured move. So you could see 112 on this probably in the near term. So you've got a lot. That's industrial. Sorry. Let's see. EXI. Oh, mine just went blank. Industrials look good, breaking out of a base. That's what happens. Where's my? There we are. Okay. All right, Italy. Okay, still trending. EWI. Taiwan. Still trending. Most of these are above the 200-day, that dark line there, the 200-day, the blue line, following through. Most of the international ETFs are rising, so that's bullish. Turkey, VWILX, the Vanguard International, Admiral shares, making higher highs, higher lows. It's been above since November. So this is an index you could trade. If you don't have this in your 401k, if it's not available to you, you can buy something that's similar. Just Google it. VWILX, similar. Let me see. VWILX. I don't think I can trade that on Schwab. Vanguard. Actually, if you just type in Vanguard into Schwab, it gives you a whole list of funds that you could trade. International.
Italy's President Meloni said Italy wants to be energy hub between the EU and the Mediterranean.
The problem then is a lot of times you end up with an adaptation that isn't really doing anything for the people that love the material.
Vanguard Developed Markets. That's VEA. Let's see what VEA looks like. VEA. Vanguard Developed Markets. That's moving higher. So if you want to put money to work somewhere else besides the U.S., you have other areas. Vanguard FTSE Developed Markets ETF, VEA, Victor Echo Alpha. This is in a bullish trend. Just buy dips. Vanguard Emerging Markets. Vanguard Total International Stock Equities ETF, VXUS. VXUS. All right, so that's pretty obvious. VXUS. This is a Vanguard Total International Stock ETF. So this is another one. Okay, if you don't have Vanguard, maybe you have Fidelity or other funds. So that looks bullish. Just buy dips. So the point is that even international markets are above the 200-day. Yet there's still a lot of people looking for more downside. All right, so enough of that. Enough of that.
It's another example of streaming shows making things go viral. In this case, it's Linda Ronstadt, and it's and that really is what needs attention in this era where it is just so competitive.
Okay, momentum is starting to turn. So maybe wait a little bit longer. Maybe you get down to 53.50. That'd be a better entry. RSI is a little bit overbought. Okay, so SPY still hanging out at the highs. What's Tesla doing? All right, Intel pulled back a little bit. Intel. Back to 30.75, Intel.
Yeah, I'm sure we'll see a lot more, but great interview, Carl. Can't wait to see the whole thing. Coming up, a check on chips, Qualcomm and Microchip, both out with quarterly results. We will break down the numbers.
What's Qualcomm after earnings? Qualcomm after earnings? Okay, so they didn't, you see that price action? I mean, that speaks to me. Okay, so we're above the 200-day. Qualcomm's been above the 200-day for the last couple of weeks. What happened on earnings? They gapped down. But look what they did. They bought the dip. They bought that dip. So that's institutions. They like above the 200-day. Look at that dip. So many of you know that Qualcomm had earnings last night. We were following that as well. If you took the opportunity to buy the dip, you're probably pretty happy right now. So it's consolidating above the 200-day. Flat VWAP. Qualcomm's probably going to be a buy over the next few days. Next week. All right. Let's look at some other names like Stallworth, Coca-Cola, right below the 200-day. Philip Morris, above the 200-day. All right, SPY pulling back. All right, a little bit more profit taking. Philip Morris, some of the utility companies like Edison is above the 200-day. Let's take a look at some of these stocks in, let's see, dividend ETFs, see how they're doing. All right, so a little dip here, bullish trends above the 90. I wouldn't be too concerned about the markets pulling back right now. If you're trading intraday, that's a different story. Maybe you're taking some puts on, but generally, most of these ETFs are above the 200-day, following through. Okay, these are all dividend-paying ETFs that pay monthly. Okay, so this is my favorite, SPHD. The dashed red line, that's January highs 2022, where that started the bear market. The S&P is now about, what, 12% below the January highs? Meanwhile, this is above the January highs and making higher lows, higher highs. Okay, SPHD, a lot of the names you're familiar with, I'm sure.
Welcome back. Let's turn now to Qualcomm. Take a look. Shares up about 0.5%, posting a miss on revenue. Quarterly guidance on
Okay, a lot of these names that pay dividends, 25, 30, or longer years of paying constant dividends. AbbVie, Gilead, Merck, 3M, IBM. Speaking of IBM, how's IBM doing? IBM. IBM still holding on to the 200-day. Broadcom, AVGO, Broadcom. That's just off the highs. Broadcom. You don't see what I'm just going through the list right here. Hasbro. What's Hasbro doing? Hasbro bouncing over the last week. Hasbro higher low. Dow Chemical at the highs. Dow Chemical. Juniper Networks, JNPR. All right, so most of these stocks are moving higher. So ConAgra, Cardinal Health, AbbVie. AbbVie's off over the last few weeks. Merck, off for the last few weeks. All right, so this looks pretty good. Okay, many of these ETFs look good. Over the last week, all of these are higher over the last week. The last month, all of them are higher over the last month, January into February. KBW High Dividend Yield Financial ETF. Okay. Trending, KBWD. 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 Okay, that pays monthly. Dividend yield is 7.37%. It's got 41 financial stocks. So if you think the financials are going to do good, like Rick Reeder was saying, be selective in what you're buying. On a risk scale, it's a 5, 1 out of 5, 3 being neutral, 5 is risky, 1 is not risky, safe, whatever you want to call it. So KBWD, financials, XLF. All right, trending. So if you traded KBWD, you'd be trading a lot of big cap financial names like JP Morgan, Morgan Stanley. Some of the insurance companies are in there, Travelers Insurance, Morgan Stanley. These are all flying. Okay, on the weekly time frame, coming back up to resistance highs that we saw in 2022. So although the indices are well off of January highs, a lot of these stocks are getting very close to the January highs again. JP Morgan. Okay, we've got a ways to go. JP. All right, SPY pulling back a bit more. All right, so there's a lot of places to invest, especially if you're thinking 401k, IRA. If you're intraday trading, we're just watching SPY. Looks like bear flags on SPY right here. So if you want to take some puts, maybe this comes back down to VWAP. If you're trading intraday. If you're trading IRA 401k, look at some of those ETFs I was just posting or just talking about. KBWD, SPHD. Friday is generally not a big risk on day for me. I generally take Fridays a little bit slower. Not interested in putting on a lot of risk. Okay, so SPY still hasn't stopped out here. You can see that trailing stop since this morning. Okay, 413 up to 417. That's 4 points. That's a nice move on the SPY and still not stopping out. So this could be a bear flag. Watch that.
Still ahead today, shares of Nordstrom surging this morning as Ryan Cohen sets his sights on that company. We'll get details on that as we get a pretty persistent bid here. Dow still up about 35 points.
I would probably wait. I would probably wait on a lot of potential new entries. I'd probably wait until next week. Maybe we get a little dip. You know, we're pretty extended. It feels like I'm bullish, but I do know that occasionally we're going to pull back to that 4100 maybe. Okay, let's look at the daily. Daily. All right, so you can see in the bottom panel, stochastic RSI is overbought. So wouldn't be a big surprise if we pull back to 410. Breakout level right in here. But still on a bullish trend. 420 is the new call wall that's shifting up. If you're thinking about a day trade on SPY, watch this trigger right here. If it starts to lose it, we could see about a 2-point move down to the lows here, 3-point move. Maybe I'll take some SPY puts if we start to lose it here. SPY puts. Okay, SPY puts for maybe today. Quick trade. SPY puts. Okay. We're at 415. Let's see if this bounces or not. 415 put for today is $1. That's reasonable. Let's watch this and see if it bounces. Probably going to bounce. Okay. So on the left side is a 5-minute chart of the SPY. Note stochastic RSI is oversold on the 5-minute chart. Daily is overbought. Let's go to the 15-minute on the right side. Let's see if this changes. All right, so looks like we're going to trigger a sell signal right here. About to trigger a sell signal. The 414s are 78 cents. So maybe some puts if we drop off here. Looks like we're going to trigger a sell signal right here. Back to VWAP. All right, we're on a sell signal. On a sell signal.
Low tickler minus 800.
We're on a sell signal. Bear flag breaking down.
Extreme low tick alert.
Nordstrom responding in a statement, quote, while Mr. Cohen hasn't sought any discussions with us in several years, we're open to hear his views, as we do with all shareholders. Carl, for now, at least in this risk-on moment, retail investors willing to follow him into this name. It's notable that when we heard about his stake in Alibaba, though we don't know the size of it, the stock didn't move on that, so perhaps investors think he has a better chance of making some change here.
Yeah, I think, John, the street felt a bit confused this morning. I know BMO said we are not on Cohen's aspirations, and we need a lot more clarity, although they admit it probably is a short-term positive. Yeah, short-term at least. You know who else has a sizable stake in Nordstrom? The Nordstrom family. They got 30%. So that's not going to be easy to deal with, Carl. Indeed. Guys, we've been through a lot. Last few sessions between the mega cap tech and the Fed and the jobs number today. Speaking of retail, those results are going to start to pour in the coming weeks. In the meantime, have a great weekend. Let's get to the half.
Carl, thank you very much. Welcome to the halftime report on Scott Walker. Front and center this hour, the day after those mega cap misses, is the tech trade still poised to run or reverse? We debate the road ahead for that sector and the markets with the investment committee. Joining me for the hour today, Jenny Harrington, Jason Snipe, Joe Terranova, Steve Weiss. Everybody's at the table. It's good to see all of you. And you, let's go to the wall. Let's see what the markets are doing. It's a bit of a different picture, obviously, than it was after the job.
Oops.
Report came out, and Dow had gone hanging around that line. Jobs report was super strong. You got good revisions. ISM services was really strong too. So Weiss, Apple's now positive, right? Way off its lows. You're buying more of the Qs today. Steve Weiss bought more of the Qs. Why'd you do that?
I'm trying to guess what the lemmings are doing and be a lemming myself.
You're just jealous that, you weren't in on that action, my man.
I was
You
a part of
hater.
the action, but I did
You
get
hater.
late to it. No, I'm not a hater. I'm a realist, and I'm an analyst.
Market's going up. Is that what's real?
I think the market is still going to go up. Look, I mean, I didn't count in this, even though I'm short bonds, I didn't count in this big move today, but I get it. Look, what I saw in the jobs report, which you know, is when I add to the monsters.
All right, we're right at VWAP. We're out of VWAP, starting to bounce now.
Labor anticipation rate increased, and that was critical to me. And I think that's occasioned by a couple of things. It's occasioned by people running out of the money.
All right, if we start to rally here, that's going to throw everybody off.
Inflation. So I said, hey, my savings are being depleted because I spent too much. I got to get back to work. That's one thing. We know there are more than 10 million, more than 11 million job openings there. Number one. Number two, our borders have opened up as well over the last year. So you saw a massive increase in the industry. And that generally has been fueled by immigration. So as they come in, you know, it's very apparent in wage growth. It hadn't moderated somewhat. But when you take the combination of the number of jobs that were created and the wage growth that we saw, which I would term as muted and perhaps below consensus, that's very positive for the bullish scenario. What I see in terms of my outlook, and now it's more of a second half outlook, I guess, and which is that's when, as I said yesterday, you'll really see the Fed action, the Fed tightening cycle hit earnings. So look, so do I think the market's overvalued? Without a doubt. Do I think that stocks like Amazon, Facebook, and maybe Amazon not so much, but Facebook and Nvidia are in lunacy territory? Without a question. I mean, you take Nvidia a multiple of 92 times, and you can say it's trough earnings, but think of what the earnings have to do to grow into that. And it's nearly...
Well, the earnings have always had to grow into that multiple, whether
Except-
it was in the sky or coming back down to earth a bit.
Well, except for the fact you're trading near an all-time high multiple in a stock where you... Amazon Web Services, and we've heard continually...
All right, we're bouncing at VWAP for now.
Center growth has slowed, cloud growth has slowed, which goes into data centers. That it's just not there. So I think you need more for that. Look, I just think that people want to buy the market, and that's going to work until we see the next reason not to, which will be earnings.
Did you sell Apple too early?
I sold it on Tuesday. Did you know that? I sold Apple personally, and it came out of Joe T, in case anyone forgot. So it looked bad. It looked bad yesterday. It looked bad today. And guess what? I think it's probably going to look bad for the foreseeable future. Because what's happening right now in the market, today's a classic day of bad news, good price action. Right. Amazon, Alphabet, Apple. Right. Buy the dip is back. When was the last time we saw buy the dip? Yep. Buy the dip hasn't been present in the market for a better course of 15 months. So at the beginning of the year, let's think about it. Who said, let's allocate?
All right, we're right above VWAP right now.
Let's allocate in the places where you were basically catching a falling knife. And that's
Looking for a follow through.
all of those mega cap stocks were at the end of last year. So now I think it's all about positioning. I think you're in an environment where no one really wanted to allocate in that direction. And I think people are trying to recapture those positions once again. I think it's going to continue. So I'm going to underperform because, I lean away from that and I wanted more of a low beta approach.
Are you mad?
Don't be mad. I'm the mad one of the show.
Listen, it is what it is. You're not judged when you're running a portfolio. You're not judged by 2 days. Excuse me.
Exactly.
By the entirety of what the portfolio does over a 1, 3, 5 year time frame.
Well, I mean, listen to what Brad Gerstner told us about, these. He used the word tailwind to some of these stocks. I just want you to listen to what he said yesterday on the show because it's so apropos to what we're talking about right now.
A tailwind on multiples for all these stocks. Secondly, we have a at Meta. And third, we have these companies, right, acknowledging that they have the opportunity to be more efficient. Those three forces combined are really powerful forces for 2023. Now, we're not out of the woods on any of those things, but I think you would be remiss to underestimate the relative tailwind that gets created by those forces.
So how would you address that? Last year was an obvious headwind for multiples of tech, okay, given what the Fed was doing and where rates had gone.
Right.
That seems to have reversed, and the market doesn't believe that the Fed is going to do the full extent of what it has suggested it might. So isn't Gerstner going to be right?
Oh, I think Brad is not only going to be right, I think he's actually right in reality right now.
But if you think he's going to, my point is, if you think he's going to be right, then why in the world would you sell Microsoft and Apple?
Scott, wait a second. It's not like I didn't go and buy other things. It's not as if I shorted these stocks. It's not as if I sold them and I didn't buy anything else.
I don't mean, so, I'm looking at you and I say you, but I mean the collective you of why would you do that if you think that he's right, that multiples have a tailwind behind them, whereas it was a headwind in the past?
So I think Meta is the first of the mega caps where if I'm going to find an opportunity, that's the one stock. I said that the other day. I've said to you over and over again, I believe that a recession in 2022 was priced into the market. There was a hard landing for risk assets. We already priced in the recession. It's not a matter of now. Everyone says, okay, you're pricing, it's a soft landing. You're pricing out a worst case scenario. So valuations had significant contraction for the better part of 15 months. And now you're seeing a little bit of a rebuild in the valuation because that recessionary scenario, it's already in the market.
All right, so it looks like another bear flag here on the SPY. Another bear flag.
So to speak, might have been, Jason, Microsoft. Reports stock down, stock now higher than where it was when it went down. Meta may be the next greatest tell on the psyche, if you will, of the market. Had every reason to give a little bit back today. What yesterday was ridiculous. It's up like 20%.
Oil futures extends gains.
What's it
US
doing
crude
now?
falls by
Not going
$2
down?
a barrel to
Yeah.
a
What does
session
that
low of
tell us?
$73.87.
As it relates to mega cap tech, it's been all about efficiency. Cost cuts have really played out, in the market, and I think that's really where the focus has been. So if I look at the numbers that we saw last night with Apple, Google, and Amazon, they weren't great. Obviously, there's deceleration in the cloud business for AWS. That was massive. But, if I pull off of what Weiss said earlier, just the macro environment, labor is strong, right? Unit labor costs have come down. Productivity has increased. I think immigration plays a part there. These are all positive tailwinds for the market. And obviously the numbers that we saw this morning were really strong. So let's see how that plays out. But I think, the market still loves these things. The multiples have come down some, and there's some deceleration there. But I still think there's upside in the long run. I happen to like semis better than I do mega cap tech, but that's my position.
You know what, in many respects, Jenny, all this was, it was anticipated. Did anybody throw you a real shocker yesterday? I mean, really? Judged by the activity and the price action in these names, it's not like they're, even the ones that were allegedly worse than the others are not cratering down. What does that tell you?
Well, I think before, when you open the show, you asked, are they going to run or are they going to reverse, right? And I thought to myself, when you asked me that, when you asked us all that, well, you left out plateau. And so what I think is, you're right, Scott, it's anticipated. And so why not just think of them as plateauing from here? And I don't really know if Gerstner's right or not. So you know what I want to do? I don't want to play in that sandbox, because to me, I think there's too much risk of actually that not being a tailwind. They're still trading, not Facebook, not Meta, sorry, I still do that, but not Meta, but the rest of them are still trading at valuations that I don't love. They're still trading at 92 times for NVIDIA, 24 times, 28 times. Those aren't things that give me comfort. So
A lot of stocks getting bought here. It's a very strange price action. VIX is dropping off.
right? JetBlue, CarMax, Disney, URI, United Rentals, Freeport, Uber, they're all up 16 to 40%. You don't have to play in that mega cap sandbox to do well this year. And this goes to something that you and I were talking about at the end of last year. I think you asked Joe, do you need them to lead the market? And Joe said, well, if they just plateau, we could, as long as they don't tank, the market could be.
No, I didn't ask that. I don't think you need them to lead the market, but the suggestion was coming into this year was that they're decidedly not going to lead the market. That tech was not a place that you want it to be.
And I'm going to say, are they leading? Because look at the stocks that I just gave you.
They don't have to be leading, but they're not tanking, and they're not trailing by all that much either.
No.
They stopped going down, okay? And they're looking for more reasons to go up then down. That's also different.
I think you're right. I just think that this is a different year where you don't have to be in that trade. You don't have to buy those names. You can still do well. They're not the only leaders. They're not, where as for the better part of the past decade, if you didn't own those 10, the top 10, you were seriously behind the S&P 500. I think that playbook has changed, and you have a wider repertoire of stocks to choose from.
Your comment to Microsoft was why I got more bullish, because I saw a company that there was nothing good about that report. There was nothing good about the guidance, yet the market wanted to come after it, and it did, and it took it up to levels that I think are actually expensive at this point.
But that's like
in the future.
The Cooperman thing. I still remember what Cooperman said when he was with me on Overtime many months ago. Look, you want to know when the market's going to turn? Look for the stock that has the disappointing earnings. It goes down and then it comes back up.
Right.
And that's emblematic of a stock that big to do that even before the other mega cap techs had reported.
And that was my tell. And that's why I added to Google this morning, to Alphabet, because the quarter was bad. There's nothing good in the quarter, right? I agree they're going to come out of this phase much more efficient, that the spending at all costs are done for. Even Larry Page personally, as I mentioned, shutting down Kitty Hawk, right? That's done. So they've got religion as they should. I think Meta is a more challenging story. On the numbers presented, it's inexpensive relative to what they could do and grow. Forgetting about the revenues were down 5%. Okay, but you still don't know what all that capex. They're still spending $90 billion a year on a vision that people may not buy into. So to me, and you still have terrible governance.
Sure, but you also have a core, to Gerstner's point, that in his words is printing billion-dollar bills in the basement.
Yes. Well, first of all,
I mean, you know what the point is.
I get the point. And they do till they don't, as they transition the business into the metaverse.
Well, lose their 2 billion daily active users?
I think they will come down. Yeah, absolutely. I think the profit
going up
will come down. They were up.
But it doesn't matter. They're
they were
still
up from 1.9 to 2 billion. I get that.
Maybe
but
it's
let's see what happens.
first in, first out. But Meta was first in. It's the first out.
It's look, I think it's come too far too fast, my bottom line.
Jenny.
Okay, so Jason said something really, really important. He said it's all about efficiency. And when we say Meta was up 20%, what was it, 25% yesterday, up another 3%? Why? But not really. And I'll tell you why.
100 billion based on a quarter where it was down 5% revenue? You don't think it's ridiculous?
I'll tell you why. Because they said we're going to cut $4 billion from CapEx, we're going to cut $4 billion from OpEx. That's kind of tiny. If they then say, okay, we're going to do more, we saw how well received our efficiency was by the market, and we're going to give you more, and we're going to cut $10 billion from OpEx, earnings go up 40%. And that's why it's moving this way, because there's that hope. And the thought is that management, the board, is going to see this positive response to, okay, Brad Gerstner, we listened to you, right? You said you wanted capital discipline, we're giving it to you. Right, we're listening, we're paying attention, and so that's where the hope is. That earnings get driven off of this.
The Nvidia point is, that we were going to argue about where the multiple is on Nvidia now, and Gerstner it just brings him up again because he added it new on the pullback that it's had. He also mentioned, I don't want to play the sound because we don't have time to do that, but the idea of the more speculative tech stocks that have risen, and don't look at all of them in the same prism. The Nvidias of the world are going to do well. Don't think that everything that's run is legit, because it's still not. But the Nvidia question, has that come back too far too fast? It ended up like 60%.
No doubt about it. So when I think about Nvidia, obviously it's a totally different story, Scott, as you mentioned. I think about those GPU chips and AI and all that's going on with artificial intelligence. I think that Nvidia is just in a space where no others are. And this price action is crazy. The multiple is crazy.
Is it crazy? On what metrics?
It's crazy.
It's crazy.
It's crazy. The question
based on what?
In my view, with all due respect, Scott,
based on what?
You asked the wrong question. You said, has it gone too far too fast? It doesn't matter where a stock price is. It matters what the valuation is underpinning it.
What's the valuation today relative to where it was?
Ridiculous.
Well, what was it before?
Well, at one point it got up to 120 times, and it dropped down to still ridiculous levels at 55 times.
What's it right? What's the right number then?
Well, let's see. If the semi, I won't give you an exact
Don't
point.
filibuster me. What's the right number?
I'm not filibustering you.
34 times. That's the right number.
Thank you. I'll agree with that. 34 times, Todd.
Double the market.
Who knows? I can tell
Double the market. Fair
I
enough.
can tell you it's not 80. I can tell you it's not 70, 60, 50. It's a semi-chip company. Number one, 90%, and I've been talking to some AI people because of companies we're investing privately. 90% of all AI applications fail. Or they're bullshit. Everybody says I've got AI. When you take a look at actually what AI is that's working, it's limited to a few companies that actually have the talent to actually have AI work. So you'll see them come and go. And by the way, do you think AMD is sitting by
Nice move and SPY here.
entire market to NVIDIA? That's the conversation yesterday from Josh and Brad. They're the only ones that could do this. That's never been true. That's never been true in the history.
Why wouldn't you pay up for the leader?
I think you are. The question is, what do you want to pay up? I don't want to pay up to 92 times.
But I mean, you don't.
I think Brad had a great trade. Now it's time to take the money off the table and say, I'll wait for it to come back down because it will.
But I mean, that's why you don't own it. But that doesn't mean that everybody who's buying it here is a fool.
I think time will tell. I think time will tell. I think it's foolish putting money in at this level. Absolutely. First of all, the company's not exactly executed well over the last year. Up until last year, it was all straight up. Now the tide's coming out, and we're seeing that, okay, in challenging economic environments, maybe you can't execute that well. Maybe it's time to take off that leather jacket, Jensen Huang, and maybe it's time people stop naming their dogs after Jensen Huang and say, you know what, you're a great CEO, but you're not the second coming.
All right. Well, there's the stock. It's up 60% 3 months.
Was that mad? You got it. That's how you be mad.
Well, you did drop the B word in there. I don't even think you realized.
I saw your eyes rolling back.
You didn't even realize. He didn't even realize that he did it.
I did realize it. I said it for a fact because, that's what
Okay.
you do.
It worked.
It worked. It worked well. It worked.
That stock doesn't look like that. When you throw the chart, it doesn't look like that if the chart of the 10-year didn't look like it does.
Or that the value of the U.S. dollar peaked. And that you listen, it's peak inflation, it's peak dollar, and it's peak yields. And I think that goes to the thesis. Can you sit here now and say, which was the thesis coming into the year, the market's going to return to the October lows at 34.91 for the S&P? I don't know. Unless there's an exogenous shock, how does the market go back to the October?
I don't know if the Fed, goes crazy and does more. On that, well, I don't know. Let's bring in former Dallas Fed President Richard Fisher. I know he's been listening to our conversation. I hope he has. There he is. It's nice to see you again. Are they going to go? Is the Fed going to go crazy here? I mean, what are they going to make of this jobs report? Inflation's coming down. Maybe they're looking at the wrong thing. Are they fixated on the wrong thing?
I keep hearing people say they're looking at the wrong thing. Obviously, so far, they've been looking at the right thing in terms of employment. And total comp is still higher than they would like. That's the feeder for inflation. If you watch, I always watch Jay Powell at his press conference. I know him as a friend, but I watch his body language. And if you watch what he was doing, where he stopped reading from the book of his briefing notes, looked right into the components of what they're looking at with some passion. This is deep in his craw. And I think what just happened here with the unemployment rate going down so low, with 11 million jobs now open, just firms up his view. And we're living in a 4% world. I have said repeatedly, I think including on this show, that there's a real possibility that they take the terminal rate above 5%. Just have to get used to that. And that just changes the way you apply multiples and valuation. We deal with the present value of
Carvana trying to get back up to yesterday's highs.
they've got a couple more quarter points to go. And then
Still got about 3-4 points to go. I'd be selling into strength in the upper teens. If we get up above 16, 17, I'd be selling into strength. Any day now, they could hit this with a secondary because they have a debt payment that they have to make soon.
It's you're like the third person who spoke of Powell's demeanor
Okay, SPY still following through. Nice follow through on SPY.
Defeat from the jaws of victory because inflation is coming down. It's probably coming down faster than they thought that it would. The problem is they haven't been able to crack the labor market. And maybe they're not going to be able to. And maybe they should stop trying and just realize that that's the key to the soft landing they hope to engineer.
You know, I sat on that committee for 10 years. But one of the things that's beaten into you is don't make the mistake of the 1970s. And if I'm absolutely convinced what they don't want to do is now make two big mistakes. Obviously, the first was the transitionary inflation argument, which is kind of silly. That had egg on their face. And now the worst thing that can happen is for them to stop early, have inflation rear its ugly head again, or not come down sufficiently. So I do think, guys, that they are going to err on the side of doing too much if they err. They have a very strong labor background here. Remember the dual mandate that they have on labor and employment, rather, and inflation. And there's no way, I think, no way on earth that this chairman wants to go down in history of having made two big blunders and look like an Arthur Burns.
Sure, but his, respectfully, I would say that his credibility is not our problem. Like, if he blew it the first time, just get it right this time.
His credibility is essential in order for them to do what they're supposed to do as a central bank vis-a-vis the real economy. And the market is an emotional mechanism that comes and goes. Mr. Market is very schizophrenic on occasion. But the job of the Fed is to deal with the real economy.
Exactly.
If you do it right, then the markets will prosper. And that's the mentality you have when you're sitting at the table.
But how do they know it's too early to stop? How do they know? They haven't even given it time to filter through and figure out exactly what the impact of what they've already done is. That's the greatest risk that they have.
That's true, and none of us know the formula anymore because we don't know what the adjustment time is, the lag on monetary policy impacting the real economy. So I'm sure, and I know, that they have discussed this. They've got formulae and equations. But in the end, guys, it's just human judgment. It's 19 earnest people sitting around the table trying to apply their best judgment.
Back up to the highs again.
And you got to give them
SPY. I'm sorry. SPY. 2-minute chart SPY. Looking good.
And I think it's given the market plenty of information in advance. You're not going to see what happened with Ben Bernanke in 2013.
We're making higher lows. This could take off to the upside. What kind of signals do you have there, Grover? What's your signals look like right now? If I haven't looked in the room a couple of minutes. Had some issues with Schwab. I had to reboot.
And instead of saying they're wrong or they're right, that doesn't do any good. They're going to do what they need to do to fulfill their mission. I actually think they're doing a good job.
Others do as well. Others do as well. Others do. Others do. It's just simply a matter of whether that's still going to be the scorecard. That they're doing a good job, they did a good job, or they're going to blow
Okay, looking for a buy signal on the 2-minute, 5-minute. The oscillators have set up in such a way that we could see a follow-through, but there is most likely supply overhead.
There's nothing we can do about it. They'll do what they have to do, or they feel they have to do.
VWAP is flattening out. You can see VWAP flattening out. We are above VWAP, so we haven't come back and tested that yet.
Is the absolute right thing to do, not positioning for something else. And I believe that's the path that they're on. And the FOMC is fully supportive. He's getting a full mandate from the rest of the committee. That's a pretty good thing.
All right. You were in the room where it happened at one time. I really loved our conversation. I appreciate you being here. Richard Fisher, we'll see you soon.
I appreciate you guys. Thanks so much.
Yeah, you take care. All right, oil. It's under pressure today. It's weighing on the energy sector. It's the biggest laggard this week. We're going to hit a move Jenny is making in that sector next. We're back on the halftime report in just 2 minutes.
Tesla just sitting here going sideways. Tesla. AI keeps making higher highs, higher lows. AI is just killing it today. All week. AI just keeps making higher highs. Some point, the music's going to stop. You have to sit on somebody's lap. The chairs are all taken. Looks like they want to keep going with this thing. Okay, SPY looking for a follow through. Okay, we're about to trigger a buy signal here. Short time frames. Note RSI in the lower panel, Stochastic RSI turning. Let's see. we're above anchored VWAP. Next, we need to take out the August high. Spiders. Lower high. All right.
Energy sector is down 1% this year following a huge 2022. Just one of those things that's been going on in the market, right? The leaders are the laggards are the leaders, for starters. Now, you have been selling Chevron through what is a long process, right? Mm-hmm. Taking into account taxable accounts and otherwise. So you're selling Chevron, you're going to be out, right? Mm-hmm. And you're putting that money where?
We've been adding it to Pioneer. So actually, I started this process probably almost a year ago, where for new accounts, I stopped buying Chevron and started buying Pioneer. Now, this is for our dividend income strategy. So as Chevron's done, better and better and better, even though the dividend's been great, the dividend yield has decreased, right? So now we're at about 3.5%. The objective of the portfolio is to maintain a 5% or better dividend income yield.
All right, we're staying below this 417 level, 416.75. 417. Let's see if they can push this higher. Still get the RSI on the bottom panel. Stochastic RSI is still pushing higher. The dollar's moderating around 102.74. 10 years at 350, 3.5%. And VIX is pushing lower. So if the VIX can drop off here, we can get a bullish signal.
It's a statement on maintaining the dividend yield of the portfolio. So I've swapped a 3% yield for an 11% yield. Yes, it's a variable yield on Pioneer.
All right, VIX needs a drop here if we're going to look for a follow through and a push above 417. VIX needs to drop.
They're paying out that dividend. I think it's certain enough that I'm comfortable with that trade.
All right, you're my guy on this, Joe, because you have both in the Joe T. Even through the rebalance that you just did, right?
Correct. And I own Pioneer personally. I mean, that's super smart. It's a great strategy. It's a great explanation. That's exactly what investors should be considering right now. Overall, talking about what's going on in energy, natural gas down 46%, crude oil down 6%, energy equities down 1%. What's the problem here?
The problem is myself and everyone universally is overweight energy. Came into the year, that's the one sector that you wanted to be overweight. Now you got to pull back
to like 6%?
For energy, the energy holding, the energy weighting in Joe T is 10%. 10%. So it's like double. We're double the S&P 500. So you've got this universal overweight positioning.
SPY looking for a follow through.
Prices are declining. That's a problem.
Looking for a trigger here on the 5 minute. Stochc RSI turning higher. Let's look at the 15 minute. Oh, we just stuck up against this level here.
You do not need a supply shock to make money in energy. In the energy space, you've got.
I said where the price is right now of oil and natural gas, the spot price, where it is right now, $2.40 for natural gas, $74 for oil. You need something to make it bounce.
I disagree. I think that it can sit right here for the rest of the year, and these companies will mint cash. They've got capital discipline. They've got just cash flow pouring in, and they're paying it out. Even if I get nothing from my Devon position and my Pioneer position, I'm getting 8% from Devon. I'm getting 11% from Pioneer. What more do you need?
Wait, let me respond. I like that, but you used some critical words. If it sits right here.
Okay.
The problem is the trend recently.
AI still going here.
I mean, natural gas fell from $9 down to $2.30.
No, I can't believe it.
Oil was $2.30. Oil was 73. Mid-80s. Oil was 74. The problem that I have is if it continues to decline, right? Let's say oil slips below 70. I think maybe a stronger hand.
All right, so AI continuation.
In the market, understanding that you've got a dividend strategy behind it, but I think collectively everyone's so overweight that's going to lead to a little selling.
Here's what I'd say. I like the first part of what you said, which is great. The second part, to me, is the biggest flaw in energy, in Lightning Energy. Saying even if oil stays at this price, they can still make money. The issue with that is as we've seen recently, the stock price adjusts. So of course they'll make money, but what's worth? So your dividend of 11%. Or Chevron's dividend, which you sold and I still own. It's been terrible.
I'm going to give you. Hold on. Let me just finish. Let him finish. I'm going to give you ample time to put words to the face that you're showing him right now.
Right. So Chevron's come down from the highs about 10%. What's that 3%?
All right, SPY just watching here. Let's watch the 2 minute chart.
Okay, it's done nothing. I've got to wait a year to collect that 4%, and the 10%.
Okay, we're going to buy signal on the 2 minute. Looking for the follow through. RSI is a little bit overbought, but the longer time frames, 15 minute, still potential for a follow through. AI continues to press.
They're still incredibly profitable.
But the valuation comes down, Jenny.
I'm not sure that it does. And
It already has.
Also, if you think about the U.S. needing to resupply the strategic petroleum reserves, what have they said? They've said, we'll do that around 70. So you've got a nice floor under it. I just think there's a lot of money still to be made in
What
this industry.
drives it? Nat gas shouldn't be where it is. Okay. Nat gas shouldn't be where it is. You know why?
You know what that means?
Yes, I know what it means.
I see how I'm doing that,
Jason.
Do you see how I'm doing that? I can barely see through it. But you see that? I can barely see through it. That means
You're this big.
right here.
The commodity overshoots on the upside and downside due to the.
Oh, gosh.
Any other industry, and that's what we're seeing now. So I don't think you need a supply shock. I think as speculators come out of it, they'll go back up.
I do have to go, but you say what you wanted to say.
I watch every show. Didn't you just buy Chevron the other day and Britain was challenging?
I owned Chevron before and I bought it on the dip after the earnings, which I sold part of that as a trade, and it's been a terrible trade.
All right, straight ahead. It's our chart of the day. On one earnings mover, pulling back more than 5% today, and that's after seeing nice gains to start the year. We reveal it. The committee gives the take on it next.
All right, BlackRock issued a 13G, looks like. BlackRock with a 13G. Let's see. What did they do here? On AI, BlackRock. BlackRock, what did they do here? All right, so they're identifying a ownership of 5% or less of AI, BlackRock. Spencer. Okay, so it looks like BlackRock was buying them. Is that what you're seeing? Is that what you guys are seeing? BlackRock buying AI, a position. Let me see here. What's going on? AI. Google's going to offer $100 to buy out. All right, so that'd be something else, man. If this does go, that would be something. Yeah, apparently they see potential here because these calls go out quite a ways here. 40 call.
Welcome back to the Halftime Report. I'm Bertha Coombs. Here are your CNBC News updates at this hour. Obtained by NBC News shows that nearly 600 migrants who crossed the U.S. border since March 2021 have been released without being charged or given a court date. Migrants had previously been required to be assigned a court date before being released, but protocols have broken down as border crossing numbers have soared. ICE data shows that over 99% of migrants arrive at their first court hearing, but these new numbers show just how many are left in limbo without a clear path to seek asylum. 3 bodies found in an abandoned apartment building near Detroit are believed to be 3 rappers who have been missing for nearly 2 weeks. A spokesperson for local law enforcement said they
Wow, look at the volume on the daily chart. AI.
Montoya Gibbons and Dante Wicker. Michigan State Police said they have not been able to identify the victims or cause of death. And the Pope arrived in South Sudan earlier today in the final leg of his trip to Africa. The pontiff is hoping to bring international awareness to ongoing violence and the worsening humanitarian crisis in the region. Scott, back over to you.
Okay, Bertha, thank you, Bertha Coombs. Let's get to our chart of the day now. It is a letter F. Grade of an F today. 6%. That after a big earnings disappointment. All right. So, who owns this? Joe, you used to.
I did.
I guess you're glad you don't now. You were stopped out of it in February of 22, a year ago.
Not looking to get back in either. I just see so many challenges right now for both GM and Ford. Look, I understand the valuation argument for each of them, but there seems to be this environment, especially with Tesla, reducing the price of their EVs, GM and Ford having to spend a significant amount of money in their EV strategy. And what does that lead to? That leads to a contraction in profit margin. So I'm not ready to step back in there just yet. Farmer Jim, if you're watching, don't be upset with me.
Well, he's a GM guy, big time.
Yeah, what do you care about?
There's one more thing to worry about, though.
Well, you own Toyota as your automaker of choice. Why?
Well, the valuation is very compelling. This is in our international strategy. The dividend yield's excellent. The management is beyond superb. What I worry about on Toyota, because I've looked at it for the U.S. dividend strategy, what I worried about and what held me off here was their how much lending they do and how much of their revenues come from auto loans. And so when Ally reported a couple weeks ago, I was watching that very closely. Their numbers were terrible, actually. Like, the stock did well, and I think it wasn't as bad as expected, but there is so much deteriorating credit there. And I think that's what we really need to watch on Ford, because they have so much exposure to auto credit.
I mean, you could look at Ford. Couldn't you look at Ford and say, well, it's cheap, valuation's low, dividend yield's pretty good?
But with the risk of the deteriorating consumer and the deteriorating auto loans, I think that I need a much bigger margin of safety on that, so it needs to be cheaper. I'd look at it under 11.
Okay. Up next, we have reaction to Qualcomm's mixed quarter and the weak guidance there. He owns it, which means we're talking to him next.
All right, so I'm doing a little research on AI, C3 AI Inc. All right.
We're back. I want to show you Qualcomm. There's a stock 1 1/3% higher. That's following earnings. They do expect an 18% revenue decline in Q2. Jason Sniper, we said you own it, and you told our viewers a little earlier that you like the semis the most out of tech right now.
Yeah.
What about this year?
Yeah. So as it relates to Qualcomm, that was one of our picks last year. We were a little early to the trade. Obviously, last year was difficult. The stock's up 24% year to date. The guide was a little light, as you mentioned earlier, IoT, but what I would say about Qualcomm, they continue to diversify their revenue streams. Handset business is where the guide was light. But I like this stock here. I like semis, period. I think they'll work down inventories across the spectrum. Data center with AMD, And Nvidia we talked about earlier, so I continue like Qualcomm also trades at 12 times earning, which I think is attractive in this marketplace.
See why guidance not great here, right?
Yep.
Another stock that probably had every reason to not look like that today. It's up 25% into the print.
Yep.
And it doesn't give it back.
Yep, I agree. And that's the narrative I've created around this market as well. No, and look, there's sensational appetite. There's sensational appetite to buy.
Well, you own the SMH, you're long.
I do own the SMH. I'm long the SMH. We've got On that's going to report on Monday, and despite Ford's miss, I think it'll be a good number. I don't own it, but they're locked in for their production. They were for 22. We saw how it performed there well, and they're locked in again for this year. So I think it'll be fine.
All right, quick break. Mike Santoli on the other side with his midday word.
All right, just watching the markets, just sitting here, moving sideways, spiders, AI, a little bit of profit taking coming in, 500,000 shares trading, pulling back from the highs of the day, AI. You hear my cat purring so loud. Are you happy? Are you happy, cat? All right. Just watching the markets. Not much to go on at the moment. Looking for BNC pivots this time of day. Looking for BNC pivots. Stochastics getting oversold. Stochastic RSI getting oversold. Looking for a turn now. About to trigger a sell signal again. About to trigger a sell signal. Looking for a C pivot on SPY right here. You know you're making a lot of noise with that purring, right? All right, we're about to trigger a sell. We just triggered a sell signal on SPY, the 2-minute chart. You're a little bit loud, you know. The 5-minute spin on a sell signal. 15-minute is still on a buy signal, so we could still see a pullback before a break higher, or we could just pull back and commit to this lower high for now.
All right, senior markets commentator Mike Santoli joining us now from the New York Stock Exchange's midday word. Well, we've had an interesting session, to say the least. It doesn't do anything to upset this narrative that you've put forth over the last, many days here.
Yeah, not yet, Scott. I mean, I think in part it's the ability for the market to really not punish companies that, at least not too acutely, that report subpar or disappointing results. That's been a theme. I think the technical credentials of this market have improved enough that people are willing to give a little more of the benefit of the doubt. And then, yes, the macro numbers, very much an eye-catching top line payrolls, Brent's people have been saying, but the wage numbers, everything else within it, I guess, and also the bond market reaction allowed the stock market to say, okay, this probably doesn't cause us to sort of completely reprice what's going to happen with the Fed down the road. Market continues to close each week in the last 6 or 7 near the highs for the week, so that just shows you the cadence of things. We're going to head for a test. I'm not crazy about the idea that Apple should be the thing that leads this market higher. To be honest, I think it's still kind of expensive and it's too much the benefit of the doubt in a lot of ways. It's not like Amazon also does, even though it was cut in half and still has 93% buy ratings. I don't think that's the place to look for.
Tesla's still squeezing, looking for Tesla to do something.
In the sense of, okay, Meta didn't give anything back from yesterday's huge gain. That's important. and Apple being negative and now positive is important too, just through that lens. Right.
That's right. Just in terms of the mechanics and how the index works, it's showing that there's demand out there for people to grab for exposure. And, as we talked about last night, the Alphabet and Amazon drops today are really just about yesterday's pop. It's giving them back or just a portion of it. So far, the traction remains.
All right, I'll see you in a few hours for your last word of the week. That's Mike Santoli. Grade My Trade is up next, and you can still send us an email. Ask halftime@cnbc.com. You can tweet us. We're back after this.
All right. SPY still hanging on. SPY's hanging on here. Trying to bounce back up. Keeps flickering a buy and sell signal. SPY on the 2-minute. A lot of noise on the 2-minute chart. Note the stochastic RSI in the lower panels turning. All right, most stocks are just moving sideways. Apple's fading from the high. C3 looking for a higher low. All right, Rick, see you later.
Low tickler -800.
Oh, get off my desk. What's the matter with you? All right. Market's kind of quiet, actually. Kind of quiet. VIX is pushing up a bit higher. We are, NIMO is at 38 plus 38. We're above anchored VWAP that goes back to 2022. We're above the 200-day. All the indices are above the 200-day. A lot of stocks are above the 200-day. As long as you're not buying the high of the day, you should be fine.
That's 1 p.m. Eastern Time. We get US Baker Hughes total rig count, prior 771, and US Baker Hughes oil rig count.
I'd say go for it. For me, I've been using it as a source of funds all year last year, this year still. I'm not out of it entirely, but it's just a source of funds. I can't keep holding it.
And you are kind of what your record says you are, right? That old football coach said that at one point. I don't know. All right, Shirley, thank you for that question. Jason from Ben, bought Palo Alto 168 just around Thanksgiving. Should I stick with it? What do you think?
Yeah, so I continue to remain bullish on Palo Alto. I like it.
Okay, looking for a higher low on SPY.
3 times, up 16% year to date, but I think revenue growth is 25%, EPS growth is 52% in the last quarter. I still think there's runway here, and I like the stock.
Joey, Richard in Toronto bought Tractor Supply at 190, 250, added more at 210. Does it have momentum?
230 right now. Excellent trade, Richard. Does it have? Yes, it does, but what it has more factor the strength of the balance sheet. Richard, I would put a stop in, make sure that you don't turn a winning trade into a losing trade.
All right, Weiss, Mark in Aberdeen, Scotland. Okay, bought Valet, $15. Add to it or just hold it here?
I'm not sure I'd hold it. I'd say it's a good trade right now, and I'd probably look to let it go with my view in the economy and the fact that iron ore prices have increased almost 50% based upon the China reopening. And I'm not
All right,
sure
so just sitting here watching the markets. Not much momentum. Few blocks today, for the most part. Okay, if you liked some of these stocks that were moving higher this morning, this time of day between 12 and 2 o'clock, we start looking for B and C pivots on the pullbacks, like watching Tesla. Tesla's still up at the highs of the day. SPY pulling back.
Low ticker minus 800.
All right, more selling coming in.
Extreme low ticker.
Our SPY is really selling pretty hard now on sell signals. Tick cumulative rolling over. VIX spiking.
All right, overtime. Last one of the week, 4 o'clock Eastern time. John Mowry, he's been really bullish on stocks, much more so than many others, most others. He's going to join me. Is he going to be proven right? Discuss that. Plus, I can't believe this. 10 years since Icon Hackman. 10 years. It was January 25th of 2013 from Post 9 at the New York Stock Exchange. We got something special on that too. I don't want you to miss that. We'll see you in a few hours.
SPY still pulling back here.
Extreme low ticker.
I put it as a final trade a couple of weeks ago before I actually bought it. I bought it. I had to today. I had to yesterday. Successful. It's very difficult to do. LEO, no Scott, not lax eggs and onions, but low Earth orbit.
Do like that.
Has more salads than anybody but SpaceX.
Thank you. Joey T, you want to apologize to anyone for your language before? Or you leave it as...
You're very sensitive. I'll apologize to you.
Okay, thank you. T. Rowe Price, I said before, I said last year, the asset manager. Hold on, he's coming up right after the show.
That's
a hotline.
Our second derivative play on an improving stock and bond environment, T. Rowe Price.
All right, Jason Snipe.
Qualcomm, they'll continue to diversify revenue stream and they'll work down the inventory. I like Qualcomm here.
Okay, Jenny Harrington.
Kohl Stores, 5.7% dividend yield, still trading as if the consumer is going to lay down and die. And they just named Tom Kingsbury as the CEO. He was formerly CEO of Burlington and did a terrific job there.
Who's got Disney? You do, right?
Yeah.
Next week.
That's right.
Right, we talk about this week, and this was the busiest week of earnings season, but next week looms large too.
I know.
Given everything that's going on, what do you think?
Intel pulling back. SPY trying to bounce.
Positive for Disney also. And I also think Tiger there that hate earnings in a more positive light, and that should lift the share price.
I think if they miss and he should kitchen sink the quarter, that then the optimism will just drive it past market.
I think he can do no wrong.
All right, good stuff. Good weekend, everybody. All of you too. I'll see you in overtime. The exchange is now.
All right, thanks very much, Scott. I'm Dominic Shewan for Kelly Evans today, and here's what's ahead on this Friday. A blockbuster, and I mean blockbuster jobs report, the market taking it in stride. So is good news truly now good news again, or could the Fed apply a bigger break and put a stop to the 2023 rally? We'll debate that question. Plus, Apple's rough report, the biggest quarterly revenue decline since 2016, and Tim Cook sees more pain ahead. So why is one of our guests so bullish on that stock? He joins us to make the case. And then
Low tickler minus 800.
So far this year, and who's leading the way may surprise you. We've got to look at what's behind the gains and whether they can keep going from here. But we begin with today's big market reversals and Bob Pisani with those numbers. Bob.
And Dom, this is quite a remarkable turnaround and a rally, frankly. You'd think disappointing tech earnings on top of a blockbuster jobs report would sort of quash the hopium around the soft landing, but not really. The Dow was
Extreme low tickler.
but we're up for the week. The Dow had a really rough week. The S&P 500 just refuses to keep going down at this point. It's up about 9% for the year, and the NASDAQ is up 16% for the year. Tech stocks are still doing well. I just want to show you the tech earnings, the big three on the tech earnings. All disappointing to some extent, but look, Apple's now positive. What's remarkable is Apple's up 16% just going into the earnings, already a little pricey. You think with the disappointment, particularly around China, it'd be down today, but it's not. Now Apple is up almost 20% this year. That is a remarkable run. Even speculative tech stuff, the Cathie Wood stuff, is up double digits this week, and some of it even more. You'd think it'd be down a little bit today. Flat to down. Coinbase was slightly up throughout the day. It's up 30% this week. Roku's up about 15% this week. Everything else, double-digit gains essentially for the week, even flat to slightly down today. I want to show you how powerful this rally is. The S&P 500 is off to its best start from January to parts of February since the 1920s. It's the fifth best start since the 1920s, up 9%. And you got to go back, look at those years. Those are pretty rare years to see up double.
All right, we're still on a sell signal. SPY still on a sell signal.
Earnings, though, down 2.7%, and they're continuing to come down. This is the big story. Take a look for the rest of the year.
Okay, we lost VWAP and continue to drop off.
Those 2 quarters, they're down, and you can see, guys, all of the hope here.
VIX still pushing higher. Want a sell signal on the 2-minute, the 5-minute, the 15-minute. Let's see what the 30-minute looks like on SPY. Not yet.
Low tickler minus 800.
But we keep dropping off here.
CNBC Chief Economics Reporter Steve Leisman joining us right now, along with Michelle Girard, head of the U.S. markets over at NatWest, also a CNBC contributor, also the CIO of Bleakley Group, Peter Bookvar, also a CNBC contributor as well. Thank all of you for being here. This panel needs to help investors right now figure out what's going on, because we thought with the kinds of numbers that we...
Things reversed today. Hours worked back up. The temporary help thing back up strongly. ISM services is positive again. So if it was just one thing in this report, if somebody could give me a quirk or a statistical thing that caused this thing to be as strong as it is.
These zero-day options are really exacerbating these moves.
Despite calls for GDP numbers that are below the level of 1%.
So Michelle, this is so you're the economist. You looked at these numbers, you saw the report. Are you as confused as the rest of us right now about what's going on here? And by the way, does this data significantly take the odds of a recession lower?
It certainly has pushed back the timing of a recession. We still have a recession in our forecast, but whereas we thought it would be predominantly a first half of 2023 story, now clearly looks like it's going to be delayed, and we pushed our expectations for negative GDP growth to the second half of the year. I mean, I stepping back, I don't know if I think, I don't know, Steve, I don't know if I think the economy is reaccelerating, but it clearly isn't decelerating in a straight line and as sharply as it appeared to be in the fourth quarter. We really seem to be losing momentum throughout the fourth quarter, culminating, as you said, with those December numbers that were kind of through and through very disappointing. I think that this, suggests that it's not going to necessarily be a straight line, and it's not going to be perhaps as weak as soon as we thought. It's going to continue to be sort of
Low tick alert minus
gradual
800.
deceleration. And I think for the Fed or for markets, there's still a confidence that the Fed has done an awful lot. They don't necessarily have to do a whole lot more. People aren't going to be revising up their terminal Fed funds forecast. So if you've got inflation coming down, you think most of the credit is done, and you're still seeing the economy holding up. I think that's how you get to a situation where the markets really like this news.
Okay, so Peter, you and I have been looking at each other, and you seem like you've got a little bit of certainty in your eyes about whether you think this is a clearer read or not. Has this clarified anything for you about the U.S. economy, or have things just gotten murkier?
Well, the jobs number itself is clear as mud, but everything else that I look at seems to be pretty clear. What's so interesting about the number is it is such an outlier to such a great extent that I don't know whether to rely on it. The household survey within the overall number, that can be explained. There was a population adjustment. If you take out that adjustment, there was only 84,000 jobs added in the month, but I can't explain the establishment survey. But I look at the ISM.
A lot more selling coming in.
Extreme low tick alert.
Exactly 50, implying really no real net hiring. You have the S&P Global Services PMI that said there's been a notable halt to hiring. We see the continuing claims data being elevated. I listen to a lot of company conference calls and a lot of just general cautiousness and a limit to hiring. So the number came out of left field, and I can't have that yet alter my opinion on what is clearly a slowing economy and one that I think is in a recession.
Already in a recession.
Manufacturing is in a recession. Housing.
All right, dropping pretty fast here.
Consumer spending in November, December on a real basis was negative. We're essentially there.
So how then, Bob,
Boeing dropping off.
Alert minus 800.
where's the disconnect between the markets and that narrative that Peter is explaining right now? Because he seems to have
Okay, Boeing. I got stopped out of Boeing. Boeing got stopped.
When I'm confused, I just look at the market and try to say, what is the market telling us? So
Boeing, I got stopped out.
Today, and I see the stock market holding in there really well, considering the news, and particularly disappointing tech earnings on top of that.
Probably my stop's probably too tight, but we're starting to drop pretty fast here on Boeing. Still has a chance to bounce before it gets to 203, but the stop we took out yesterday's low. We're at the 21 day. We could see a few days of pullback. I'm thinking that's probably the case.
They said, I don't think anyone looked at these numbers that were, again, unequivocally strong and starting to say, wow, the Fed is going to have to take rates a whole lot higher than we thought. And it is, as you probably said, Bob, it's more of, okay, at the least, the worst, we may not get the rate cuts in the second half of the year.
4,100 seems doable. 410 seems doable. We're continuing to drop off here. Okay.
Is the wild card. Can you have these kinds of strong employment numbers, continued strong labor market, and see inflation make it all the way to 2%? But as long as it's moving in the right direction, signs that the economy is holding up don't necessarily have to mean it's bad news for the equity market.
Steve, hold on for a second, because I know that I can see you chopping at the bit. Peter as well here has a response here. Do you feel as though Bob's reading is correct, that Michelle has got it right with regard to that connection between markets and the economy right now?
Well, to me, when you look at the two biggest headaches for the market in 2022 was 40-year highs in inflation and the most aggressive monetary.
Okay, we're on a sell signal on the 30-minute. Let's see what the 60-minute looks like. 60-minute chart. Okay, we're close. If we get down below 412, that'll go on a sell signal as well, the 60-minute.
And not the bear market war one, because now we have to deal with the economic consequences of all these rate hikes and deal with now what's an earnings recession.
It's 15.
Pointed out that maybe Q4 is the beginning of.
Steve, has
5
the
minute.
expectation changed? Has this been a significant enough event in your mind and with futures markets, the way that they trade, to indicate that the trajectory for the Fed is somehow different because of this?
What's happened is the market has taken about a 20 basis point step towards the Fed. When I look at the Fed market gap, in other words, what's the pricing for the end of 2023? They were 75 basis points apart, and now they're 55 basis points apart. The Fed hasn't moved. The market moved more towards the Fed with an idea that maybe there is a less of a cut built in than the market had previously thought. But I want to go back to what Peter said. Peter, I just can tell you that
Low
let's say
ticker
this number
minus
is
800.
half wrong. Let's say it's 250,000. There is just no way the NBER is going to call January a recession, even given what happened in December. And I would just caution people, there are a lot of marquee names out there that have laid off people. At the same time, when I look at the leisure and hospitality business adding 128,000 workers, I'm not confused by that. When I see the hospital system, the healthcare system, adding 79,000 workers, I'm not confused by that. And when I see local state education being up by 75,000, I'm not confused by that either. These are places where there are definite needs for jobs. These are some industries that are running below their pandemic level. So I just think that when we try to overlay models of other recessions and downturns on top of what's happening now, we get confused. And I know, Peter, when you get confused, you listen to the music play.
All right, Peter, I'm going to give you one comment, and then we're going to move on.
I like the music reference. So yes, the labor market is unique in that it's still hanging in there. But that also tells me that with economic growth faltering, at the same time the labor market is strong, that means productivity is not good and profit margins are going to continue to decline.
Okay. Michelle, thank you very much. Steve, Bob as well. Peter Bookvar, please stick around here. We're going to have another conversation for sure. Peter, stick around again. Stocks are lower right now. Again, moving towards session lows right now, but on pace for weekly gains. A different story, though, for commodities. Natural gas is down about 2% today, 20% this week alone. U.S. benchmark oil prices rallying today, but still down 2% this week. Gold prices also on pace to end the week lower as well, in spite of all of this. Our next guest,
Eli Lilly pushing higher. Thank you, Brian.
investors to look right now.
Eli Lilly.
Natural gas is the market one. You've got to go all the way back to December of 2020 to see some of the prices that we've seen for natural gas, despite the fact that in the Northeast, we're going to have a possibly Arctic-like cold spell coming.
Eli Lilly continues to push back towards the 21-day. Thank you, Brian.
The last month or so, can we really feel good about some of those moves that we've been seeing? Let's talk more about this with Elizabeth Burton. She's the client investment strategist with Goldman Sachs Asset Management. Elizabeth, we've been trying to kind of make sense of all of this, commodities-wise and everything else. It sure seems like if you look at agricultural commodities, if you look at energy commodities, especially places like natural gas, it's not, I wouldn't say deflation, but it certainly doesn't look like inflation, right? It's not deflation,
Merck.
it's not inflation either. What exactly does that tell you about how the
Johnson & Johnson. Yeah, Eli Lilly's got that drug.
They would be helpful in the portfolio are less of a reflection on that and more of a reflection on what we can do to protect our portfolios going into next year. If you think about last year, about 95% of assets were correlated with the equity markets, which means basically dollar cash is the only thing you could really run to. This year, we think that there's going to be a bull market in oil, for example, and we do think there are places where you can run and hide is probably the wrong word, but look for protection. And part of that is in the commodities market. Part of that is coming from the China reopening and, sort of the abatement, at least for now, in the energy crisis in Europe.
Okay, so China is obviously a very big part of the story because they're the world's second biggest economy, the biggest importer of oil out there.
All right, looks like another bear flag on SPY, so we could get down to 410 pretty quickly.
But what about places like in metals? People used to talk about copper on the China reopening.
Still on a sell signal.
When we talk about those types of commodities in the same breath as we talk about oil and nat gas.
Well, I don't think you can put an entire asset class into one bucket and just say in general you should just go out there and buy commodities. And I don't think that we advise any of our institutional clients to just buy, a blanket basket.
Let's see if we bounce anymore.
We're not projecting everything's going to go up, double digits there. But I do think there'll be winners and losers from the China reopening and from the importers and exporters story around that. So I think you can pick your spots, and I think there will be opportunities to earn a return there that you haven't seen in a long time. Part of the problem, though, is there are a lot of portfolios out there that do not have strategic allocations to commodities. And that's very hard to add to in the short term, especially if you're confused, like many folks are out there, what commodities to add at this point.
In your estimation, how many of those client portfolios out there, in your expert opinion, are underinvested in things like commodities?
I would say the shift probably happened about a decade ago, where a lot of large institutional investors backed out of their strategic allocation to commodities. And as you probably know, the public pension world, for example, it's very hard to make tactical decisions quickly. And so I would say very few. I could probably name a handful that have strategic allocations to commodities.
So, Peter, the commodity story, is it enough when you see charts for things like natural gas, when you see charts for things like wheat and corn, when you see charts for things like even egg prices, which have been sky high through all of last year, coming down? Is it enough for you to call a peak in inflation?
No, because to add to what Elizabeth said, I think the China reopening is a huge deal. I mean, this is 17% of the world's population that has been locked up for 3 years. The oil consumption in China in 2022 on a per day barrel basis fell to the lowest level since 1990. In 2023, that demand for daily crude oil will go to a record high. At the same time, we still have all these supply issues with getting this stuff out of the ground. Not necessarily the ability to get out of the ground, it's the willingness to get out of the ground that has obviously changed. So I think that we should treat the China reopening no different than how we reopened here, how Europe reopened, how the whole world reopened. They want to make up for lost time. And I think that consumer demand is going to lead to much higher commodity prices. And when I see those charts with these prices lower, it tells me that, okay, we've had the pullback and it's time for them to go higher again.
Elizabeth, in a former life, you ran one of these pension systems for the state of Hawaii.
Yeah.
So you were a buy-side investment officer, chief investment officer, and now you're kind of showing the other people in the buy side what exactly they should be looking at.
Sure.
So what are they missing right now? What is the institutional community missing right now about the economic narrative and the market narrative? We just had a big discussion about the disconnect right now between the jobs numbers and what the market reaction is.
Let's see if we get a bounce here. These moves have been exacerbated by these 0-day options.
The portfolios in a hard landing scenario and a soft landing scenario probably need to look a little bit different. So I think where they're trying to focus right now is where are some of those assets that might be able to hold up in either sort of scenario. So it's not that they're missing anything. It's just a very tough position to have been in after a decade, 2 decades, of the past environment we had, especially on the bond side, as they play such a large role in public pension portfolios.
If you look at that bond mix, people called about the death of 60-40, 60 stocks, 40 bonds. Do you still feel as though the outlook for both of those assets could be positive in 2023?
Look, I think maybe the comment back might be early. I think, especially what we've seen today in the jobs number, there might be some more shoes to drop here, right? And especially globally, central banks across the whole globe are in a different position than maybe the U.S. central bank is, right? So that's the first thing. 60-40 isn't generally how large public pension funds allocate, but it is very difficult to add other new asset classes into that mix. What I would say is they're trying to pick their spots, but they are super overweight cash right now. And right now, being overweight cash is really expensive because, to your point,
All right, starting to get a nice little bounce and a follow through in SPY. Starting to get a bounce. Look at stochastic. Stochastic's oversold. Looks like this could follow through.
We've got a news
Looks like SPY could follow through on this one. Back to 415 perhaps. 415 for today.
Mortgage rates just jumped back into the 6% range after falling into the high fives yesterday for the first time since early September. Take a look. The average rate on the 30-year fix flew back over 6 to 6.19%, according to Mortgage News Daily. This after the jobs report sent bond yields soaring. The mortgage rates, of course, loosely follow the yield. Now, 20 basis points may not seem like a whole lot, but on a $500,000 home with 20% down, the monthly payment jumped back up by $50 in one day. Also, these numbers tend to have emotional consequences. Remember, the 7% range last fall caused a steep
2 minutes about to trigger a buy signal. 2 minutes about to trigger a buy signal.
and reports from the home builders. 5% could have been a nice boost going into the spring housing market. This is not to say we won't see it again, but it was mighty brief.
All right, and still uncertain for sure for the outlook there. Diana Olick, thank you very much for the update on mortgage rates. Coming up on the show, Apple's on pace for its highest close and best weeks in September, despite its first earnings miss in nearly 7 years. Does today's move suggest the stock is almost recession-proof? That's coming up next. Plus, it's been full stream ahead for media stocks to start the year. See what I did there. But a lot of these names are still way off their recent highs. Can the rally roll on or will it run out of steam? We'll debate that. And as we head out to break, let's get a quick check on the markets right now. The Dow's down 105 points, 1/3 of 1%. The S&P 500 is right about 4150, down about 2/3 of 1%, 30 points. And the composite index from the NASDAQ down almost 1 full percent, 113 points, 12,086. The exchange is back after this commercial break.
This is The Exchange on CNBC.
All right. Nice little bounce. Looking for a move back to VWAP to re-short. If you're thinking about calls back up to the high, back up to VWAP. See if this has any punch. It needs to trigger this buy signal right here at 413.75. Stochastic's almost already overbought. You can see over on the right, the 15-minute hasn't turned yet. So this could be a bear flag. It is a bear flag until it's not. Still on sell signals until we start to trigger in the opposite direction. These zero-day options having a big impact on markets. All right, no follow-through in volume yet. No follow-through in the volume.
Low tick alert -800. Extreme low tick alert.
Got rejected. Still feels pretty heavy. Tick cumulative is still red on the day. Okay, watching. All right, we quickly got overbought on the 2-minute chart on the left side. The 15 on the right side is still on a sell signal.
Welcome back to the exchange. Apple shares are up nearly 3% right now after falling as much as 5% right after the opening bell. Initially, though, on those weak Q1 results, the tech giant is posting its largest quarterly revenue decline since 2016. Also warned that next quarter could look the same. But our next guest is not concerned. He's got a buy rating on the stock and says this report does nothing to
Man, that's a big bullish candle on Apple.
Joining us now is Martin Yang.
No doubt a lot of people will look at that candle after hours this weekend and say, wow, what did we miss today?
Steve, thank you very much for joining us here. Maybe Steve, I will start
We're
with
on
you to kind of
we're on
take us
pace for about 250 million shares trading hands on Apple over the last 2 trading days, including today. 2 days of trading.
but it still
We're
seems as
on pace for 250 million shares trading today.
want to buy Apple when it goes on sale like it did. What exactly were the fundamental parts of that story for Apple in its earnings report?
Yeah, for sure, Dom. So a couple of things here. On the guidance that Luca Maestri, the CFO of Apple, gave on the analyst call last night, he talked about, like, to your point, that most of the segments are going to be down. That includes Mac, that includes iPhone, and so forth. But iPhone's not going to be
All right,
down
still a bear
as
flag.
much as it was in the December quarter. So I think people are really glomming onto that data point, saying, okay, things are going to be bad, but not horrible. And also keep in mind, Dom, Apple, as demand collapses for consumer electronics, especially PCs, Apple actually outperformed a lot of its peers, gaining market share actually last quarter as everyone else struggled. That's according to IDC. On top of that, there's another positive story they're trying to tell around services. They talked about the install base of 2 billion active devices. That means that's every one of those people is an opportunity to sell more subscriptions, to sell more app store sales, to sell and advertising within the iPhone. So there's optimism around that too. They, in fact, despite all these headwinds in services, Dom, they set a record revenue number. It's one of the only segments that they were able to beat on. So that's where some of this optimism is coming from, despite the first miss.
Looks like we're going to move lower again. Nah,
Martin, this is
I don't know.
fundamental story.
413, can we bounce here?
You've got a lot of models on your side of things, inputs that go into them.
Okay, I'm going to take a break. I'm looking for a BNC pivot, so I'm going to take a break. I'll be right back. Let me make something to eat for lunch. I'll be right back.
Low tickler minus 800.
Yes, out of the results, something you can quantify is really better than expected service revenues. And we have known, gone through almost a year where revenue payout to developers has stalled, and that's largely due to the much lower transactions through mobile games. And yet Apple still delivered better than expected service results, driven by Apple's own services like iCloud, like Apple Play, like Apple Pay, and Apple TV. So there's largely a underlying story still gone. It is largely unnoticed by most investors, is that Apple is paying less attention or less emphasis on the app economy, and instead pivot the service revenue growth towards its own content services. And that's something that will have very positive long-term effect, driving the margins, driving a more sustainable service revenues, despite some of the regulatory pressures put on the App Store. And that's one quantified evidence you can see. The other are, still they are making record active install base on emerging markets. And that gave us more confidence on the longer term durability of the hardware growth and the hardware install base. We continue to expand Apple to take share very, very consistently in the forward years.
So that's a good point, Martin. iPhone revenues, we always talk about iPhone as a segment that becomes the bulk, right, of the Apple results. We always have to focus on there. But to your point as well, services revenues have now jumped up the leaderboard, so to speak, to take over a pretty decent second place in terms of Mac sales, better than iPad sales, than Mac sales put together. That services component is now growing, but at 6.4% year over year in this first
Extreme low tickler minus 800.
a slowdown in your mind that should be worrisome from a valuation standpoint.
It's worrisome in the near term because
SPY still on a sell signal, short time frames, 2 minute, 5 minute, 15 minute.
with their apps, and particularly games. Gaming by our estimates accounts for well over 60% of the App Store revenues. So, and that's a kind of discretionary spending. And when you go under pressure, seeing all the headlines that are worrisome, you will spend less on games and other in-app purchases. So that will continue to be headwinds into 2023. But again, if we stretch the timeline to maybe 3 to 5 years, that will be a much lesser impact comparing to the potential growth Apple could have with its own services.
All right. Steve, last word to you. Just a few moments left here. What's the big thing that you're watching in this current quarter for Apple?
Yes. Let's talk about India, because that's something Tim Cook brought up. He hasn't really talked in such bullish terms about India for a while. And he really said, I mean, to quote him directly, I'm very bullish on India is what he said on the call, meaning they've tried this before, 6 or 7 or 8 years ago to really break into that consumer market in India. But there's not really that middle class there that they've seen had success with in China when it was an emerging market. But it seems things have changed, and Tim Cook sees different things on the ground there, and they're about to open up some new retail stores, not to mention all the manufacturing that's increasing over in China. So I'm really paying attention to that India story, Don.
Martin Yang at Oppenheimer, thank you very much. Steve Kovac as well. Have a nice weekend, guys. Thanks.
Thank you.
All right. Now remember, as the world's largest company, Apple's performance affects an entire ecosystem. Its suppliers specifically, take the iPhone, for example. The company's responsible for the Face ID technology, the camera, 5G wireless, chips, you name it. They're all watching those iPhone demand numbers as they figure out their next move from their own business. Another one of Apple's suppliers, the audio chip maker Cirrus Logic, is hitting an all-time high today. After beating earnings estimates of its own, it's up 40% so far this year, and Apple accounts for around 80% of its total sales. Cirrus Logic, very levered to what happens over at Apple.
Extreme low tick alert.
Last 12 months. So ahead of the show, office workers are doing something they haven't done since the start of the pandemic. They're showing up to the office. Yeah, they're at their desks. We'll look at what's driving the return to work and what it means for the commercial real estate market. And as we head out to break, take a look at the Dow heat map with Home Depot, 3M, and Honeywell, the worst performers on the day. American Express is leading the way higher. The exchange is back after this.
All right, I'll be with you shortly. I'm just going to make some lunch. I'll be right back.
The exchange markets right now are all in the red. Now, they are off the session lows, but at one point the Dow was off 220 points. We're down about 165 right now, 0.5%. The S&P 500 still above 4,100, 4138 the last trade there, down 1 full percent. And the NASDAQ composite, the underperformer, as big tech kind of weighs on things, down about a 1/3%, 157 points, 12,043 the last trade there. Now, I mentioned that NASDAQ trade. Let's check out those mega cap technology stocks. Apple, by the way, is the only one that's in the green right now after a big reversal. It was down 5% at one point today. Amazon, by the way, is on pace for its worst day since November on the heels of its disappointing earnings results. Now, here are some of the movers this hour as well. Clorox is leading the S&P 500 after posting its biggest earnings beat in over a decade, with earnings per share coming in 51% above consensus estimates. Gross profit margins were up 3 percentage points year over year as well. So Clorox shares, so fresh, so clean, up 7.5%. Now let's send things over to Tyler Matheson, who's got a CNBC News update.
Oh,
Hi, Tyler.
fresh and clean. Those are my middle names. Here's what's happening at this hour, Dom. New polling shows public trust in the police has sunk now following the brutal, fatal beating of Tyree Nichols by police officers in Tennessee. Only 39% of people say they are confident that police are trained properly to avoid using excessive force. The poll also found just 41% say police treat whites and blacks equally. The Triple Crown winning horse trainer Bob Baffert is in court today. He's trying to overturn a suspension so he can run horses at this year's Kentucky Derby. At Churchill Downs, the home of the Derby, Churchill imposed a ban after one of Baffert's horses failed a drug test after winning the Derby in 2021. The horse was disqualified. And the Agriculture Department proposing new nutrition standards for school meals. They include the first ever limits on added sugars and a significant cut in the amount of sodium in meals. If approved, the new rules will be phased in over the next 6 years. Dom, back to you.
All right, Tyler Matheson, thank you very much for that. Coming up on the show, is 2023 going to be the golden age for municipal bonds? The tax-free asset class coming off its worst year ever, but one investor sees optimism returning to that market. We'll get the bonds to buy after this quick break. The exchange is back after this.
I'm here with you. I'm just eating lunch.
Welcome Welcome back to the exchange. Muni bond outflows hitting a record high last year with more than $100 billion pulled from the market. And while this week saw $362 million in outflows, 3 of the first 5 weeks of the year have seen actual inflows. Our next guest sees optimism returning in munis and says the, quote, golden age of public finance will push forward. Joining us now is Tom Kozlik, the head of municipal strategies and credit over at Hilltop Securities. Tom, it's good to see you again. When you say golden age of anything, I think of some real positivity. What's got you so bullish about that big muni bond market?
You know, the golden age in my mind started back in March of 2021 with that almost $2 trillion of federal aid. About $650 billion went directly to public finance sectors, and that's really what started the golden age. And I think that that's going to continue into 2023. I think that overall rating upgrades are going to outpace downgrades this year, although I do think that we peaked.
Okay, so if this is the case, where are the opportunities? I'm going to peg you down and say, you know, is it in general obligation type bonds? Is it in revenue type bonds tied to projects? Which states are out there? So how exactly do investors go about constructing that kind of a portfolio?
Yeah, so because we're at or near the peak, one of the things that I've been talking to investors about for the last several months, and I'm going to continue talking about this, is that this is the perfect time to start to trade out of state and local government credits that were either structurally imbalanced before COVID, before that relief rolled in, and or are likely to be structurally imbalanced in the next year or two. One of the things, even though I'm pretty positive about the overall credit situation, one of the things I'm concerned about is I'm concerned that there are going to be situations where state, local governments, and other entities are not going to kind of clamp down with their spending. Federal aid is not going to continue. It's there. It's helping them get through some uncertainty like work from home and these types of things, and higher inflation, wage inflation. But I really am concerned that there are going to be some entities that aren't going to be structurally balanced coming out of the next year or two. One of the other things that I have a very strong conviction about, and have for several months, I've been talking about mass transit for several months now. And since I started really talking about mass transit maybe around last summer, mass transit has performed very well from an investment perspective. There's still all kinds of headline risk because of the work from home stories, because we see the Castle Data Systems numbers, we see the transit usage numbers, they're all down and they're likely to stay down. But from an investment perspective, I think that mass transit is too important to fail.
And Tom, before we let you go, that's your pick, mass transit. You think it's an outperformer. I want to get your macro take, big picture. What is going to be the taxing environment that you are assuming the U.S. will be under in the coming 5 to 10 years? And does that factor in to some of the municipal bond type thesis that you are trying to tell investors?
So on the one hand, it's hard to look out that many years. One of the things that I'm really concerned about in 2024 is that there could be one of the things that could evolve as a threat to the municipal bond tax exemption, like we saw in October and November of 2017, where private utility bonds almost lost the ability to use the tax exemption, and the public finance community did lose the ability to use tax exempt bonds for venture funds. And so that's one of the things from a tax perspective I'm really looking forward to over the next 2 or 3 years.
All right. Tom Kozlik over at Hilltop Securities. Thank you very much. Have a nice weekend, sir.
Thanks, Tom. You too.
All right. Coming up, if you were banking on the end of New York City and their office buildings, you may have another thing coming. So what exactly is driving workers, to Tom Kozlik's point, to come back to their desks and maybe even take mass transit? That story is coming up next.
SPY 30 minutes just went on a sell signal. So we had the 5, the 10, 15. Now the 30-minute chart is triggering a sell signal. Here's your 30-minute on the right. That's just now triggering a sell signal.
Extreme low tick alert.
SPY 60-minute is about, price is about to drop through the 20 EMA on the 60-minute. That would start a potential follow through for the next couple of days, maybe some bearish action over the next few days. If we close below the 20 EMA on this hourly candle at the top of the hour.
Welcome back. The layoffs ripping through the tech and finance industries have shifted more power to employers, and they want workers back in the office. Robert Frank joins us now with a look at how that's shifting the real estate landscape. Robert.
Well, Dom, you are leading by example. You're in that office 5 days a week, inspiring all the rest of us and the CEOs of Starbucks, Disney, and other companies saying, be more like Dom, get back to the office more. And the workers are listening. For the first time since the pandemic, a majority of office employees in the 10 biggest cities are now back in the office. Office use now at 50.4%, so just a slim majority there. It does vary by city. In Austin, Texas, 68% of workers are back. In tech-heavy San Jose, California, it's still only 41%. You look at New York, we're at 48%, and among big employers in New York, it could be even higher. A survey of the city's largest companies by the Partnership for New York City found that 52% of Manhattan office workers are now back. Now, for most workers, that means 3 days a week. Only 10% are fully remote now. That's down from 16% in the fall. Employers say the new normal for Manhattan office space will be around 56%. So we may not get better or much better than 56%. Look at the industries with the highest office rates. Well, it's real estate, finance, and law. And among the lowest is, tech. Labor experts say layoff fears may be driving many workers back to the office. Starbucks told employees they need to be back at least 3 days a week. Disney's Bob Iger is saying, we want you back at least 4 days a week starting in March. Dom?
All right, so it's interesting that Castle Systems survey with the 50.4% of people back in the office caught my attention this week as well. Can you put it in the broader context of how that's shaping that commercial real estate market overall? Was it already bullish kind of going into this? Had it already anticipated this, or are we due for a stabilization period? How does it look?
It was very bullish going into this. And if you look at the Manhattan real estate, if you look at the commercial side, we still have about 100 million square feet of office space. And the projections were that this would, we would get back to 60 or 70%. It's now clear that the lasting effects of the pandemic means that we're not going to get much above 55, maybe 56, 57%. And so that has big implications, as you were just talking about, for commuters, for the subway, for all the sort of commuter economy and tax system that New York City is built on being a business district, being a 5 days a week commuter system. So the whole city is still in denial, as are many cities, about just how lasting that is. I mean, it says something that 3 years into this, we're celebrating today just making 50% nationwide.
It took a long time, Robert, for sure. Thank you very much. We appreciate it. We'll see you soon. Have a nice weekend, sir. Still ahead on the show, media stocks posting monster gains to start the year. Warner Brothers Discovery is up about 67% after a dismal 2022. So what's behind the sentiment shift in media? That's coming up next. Healthy life. Welcome back to the exchange. After a tough 2022, media stocks are staging a comeback with the big names all up double digits to start the year. Warner Brothers Discovery leading the pack, up 67%. Paramount Global not too far behind, is up 48%. Charter Communications up a cool 20%. And CNBC's parent company, Comcast, is up 15%. So let's dive into what's driving the moves with Jeff Kilberg, the CEO of KKM Financial, along with our own Julia Borston and CNBC.com reporter Alex Sherman. They both, of course, are experts on the media business. Julia, let's start with you. How much of this is true bullishness, and how much of this is just the fact that these companies got smoked pretty much in 2022?
Yeah, Dom, I don't think you could look at the performance year to date without looking at what happened in 2022. And these are pretty much across the board stocks that really suffered over the course of 2022. And now they are rebounding. There are a couple of catalysts we're watching. And really what those catalysts all come down to is these media giants thinking strategically, but exploiting their assets and increasing revenue and also profitability. The couple things that I'll point to is the fact that Warner Brothers Discovery, they're going to launch a combined version of their two sets of apps, both the Warner Brothers and the Discovery assets. That's expected to be a catalyst. This idea that streamlining makes sense. They also are bringing their content in fast channels. Those are free ad-supported channels to launch on Roku and Tubi. So finding more ways to make money from those assets. And then Showtime, Paramount, they are combining all of those assets into one place, both when it comes to the linear TV content as well as the streaming platform. So a couple things to watch there.
I mean, those are a lot of catalysts, and those are fundamental stories, Alex, to Julia's point. So based upon your reporting, where are those compelling storylines, to Julia's point? Which companies stand to benefit the most? And is it tied mostly to streaming, or is it more to broadband? What exactly is it?
Yeah, that's a great question, Dom. Look, there are two camps about what's going on here. The first camp, and this is if you ask executives at Warner Brothers Discovery, this is what they'll tell you. That what's going on here is that the market has realized that the general narrative of getting streaming subscribers at all costs, spend as much money as we can, get as many streaming subscribers as we can. That game is over. And the market is now starting to appreciate that Warner Brothers Discovery and other media stocks were oversold at the end of last year. And now that they are revising their companies to revolve around profit and revenue, sort of more baseline media metrics, these stocks are going to come back up, and there's going to be some multiple valuation increase here. The other story is that maybe things are not so good on the streaming front. I mean, Netflix just announced that they added 7.7 million subscribers. That blew out the number of subscribers they were supposed to add. Netflix is saying to the street, we're not even going to forecast subscribers anymore because we want you to look at other things, because subscriber A doesn't equal subscriber B depending on where they are in the world. Nevertheless, that stock moved up when they blew out subscriber numbers. So it's also possible that the market actually isn't fully convinced of the legacy media narrative, and they're still judging these companies on streaming subscribers. We'll see as the year goes by.
All right.
All right, so the market's flipping between buy and sell signals on short time frames. A lot of chop coming off the low. Let's see if we resume this move lower. We've been on a buy signal for the last 20 minutes. All right, so looking for a follow through, higher low, higher high. Need to see some more follow through. We got a buy signal on the short time frames. Need to see higher lows now. The 30-minute briefly went on a sell signal. It's starting to bounce on that short covering.
Sherman, Jeff Kilbert for the thoughts there. We appreciate it. That does it for us here on the exchange. And there is, by the way, the time. We're going to see them in just a couple minutes after this quick break. Thanks very much. Have a nice weekend.
All right. Market's very lazy. Looks like we could see a little bit more downside now. Tick cumulative is still pointing lower. So bouncers keep getting sold. for now. You're looking at Gilead, Gilead, Joel? Okay. Still fading. It's below the 50 days. So it depends on what happens next week, I would imagine. No rush. It's still in a descending channel. A breakout above the 50-day would be significant if on large or above average volume. Meta trying to hold the lows here. Meta at 188, 189. Kind of a slow day today. We were up briefly and we faded again. We're down $4 on the SPY, 40 handles on the futures. Wouldn't be surprising for the S&P 500 to pull back to 4,100, still be in a very bullish trend. Okay, so we're looking for opportunities like this on these pullbacks to buy. You want to be taking profits into yesterday's highs and today's highs, as we've been talking about. Above average volume. So on the daily time frame, if you look at the daily here, we could pull back to 4,100 for 410, right around this area. All right, we're not going to go straight up every day. Look at stochastics. Stochastic RSI is overbought. So for this to recycle, we could see something like this over here, or less. Maybe we just chop around in time. Stochastics gets oversold and then turns. Right now we're overbought. I would give it a few days. Meta's pulling back a little bit more. Meta. Caterpillar holding on to the 50-day. Let's see what IBM looks like. IBM. Okay, IBM still consolidating. That's day, what is that, number 7? 1, 2, 3, 4, 5. Yeah, day 7 above the 200-day after earnings. Meta making a new low in the evening session. Meta making a new low in the evening session. All right, it's a very slow day. My guess is that we could see a lot more frustrated traders. We've had a great week. Wednesday, Thursday was superb. All right, let's take a look at the watch list. Let's see how we fared. Many of these went higher. Many of the watch list stocks pushed higher this week. The watch list for the week. Okay, we had 95% of our positions were higher on the week. All right, let's take a look at that for a second. All right, we're trying to bounce here. Come back to this in a minute. I'll come back to this in a minute. All right, here is the watch list for the week. These are weekly gains, 14% on the AMD. AMD consolidating, had a great week. Steel Dynamics on the week from the watch list. Steel Dynamics making higher highs, higher lows. That looked pretty strong. Nice volume on Steel Dynamics. Tesla up 7.5% on the week. SPY's rolling over here. Tesla had a good week. Nice volume. This is probably going to consolidate, make a higher low, higher highs. I don't see a rush to do anything. Come in. We'll analyze the markets in the weekend video. I'd take the rest of the day off if I wasn't broadcasting. If I were you, I would do the same. Just my perception. Builders First Source, that one had a good week as well. Up 6.8%, 7% on the week. Google, after earnings, it's still up on the week. We started the week down here below 97.50. Followed through 107.85. We made 10 points there. Pulling back below the 200-day. Trying to hold at the 200-day right now. PayPal having a good week. It's up 5% on the week. PayPal pulling back a little bit, but it's above the 200-day. Most stocks, most big caps are above the 200-day. Along with the indices, Wingstop, that just keeps moving higher. Wingstop got back above the 200-day around the last week of July into August. Dipped a couple of times, but continues to follow through. A lot of the restaurants look good. So the watch list looks good for the week. We had about 10 stocks move higher on the watch list, about 3 or 4 that were off for the week. Many of them taking back, giving back some of the gains today, but still up on the week. Let's see what the Dow Industrials look like. Dow Industrials, components. Apple obviously doing very well. Okay, so about 50-50 on the Dow Industrials. You can see about 50% are green, 50% are red on the week, for the week. Intel for the week. Having a good week. Intel still pushing higher. Intel gets above 31 next week, should continue. All right, SPY looks like it's on a buy signal. Looks like they're covering here. Shorts are covering. Shorts are covering now. Let's see if we get above 413.50, we could see a follow through. Okay, we need to get above 413. All right, short time frames at 2 minutes on a buy. Needs to get above 413.50. Stop if it drops below 412.25. But I would wait until I get a buy signal, another buy signal, follow through. So as a whole, we've had a really good week. Most stocks have been up on the week. We are pulling back a little bit today. Not surprising. So chalk it up as a win for the week. Long as you weren't buying everything at the high of the day or the high of the week, you're fine. If you did buy at the high of the week, if you bought at the highs yesterday expecting follow through, I wouldn't freak out. I'd just maybe hedge a little bit, but more than likely we're going to see higher lows next week. Reason being is breadth is improving. We have all of the indices above the 200-day. Many stocks are above the 200-day and showing signs of aggressive buying by institutions, even though tick cumulative is drifting off right now. It's Friday. So if you look at tick cumulative, it's been making higher highs and higher lows for the last few weeks, especially since January. We have the call wall shifting up to 420 for SPY from 410. It's still 410 is still a pretty big level. All right. AI is sitting on top of VWAP. C3 AI sitting on top of VWAP. SPY rolling over again. All right, back on a sell signal in a 2-minute. It's been on a sell signal on the 10-minute, the 15-minute, the 30. Looks like a bear flag on the 30-minute, right? SPY looks like it could drop off here.
Ticker -800.
That seems to have abated a bit. But let me ask you this. There were a lot of people who said we can't get inflation under control until real rates are positive. Are we there yet? And how, yeah, they are. And how sustainable is that positivity?
Well, I think it's going to stay for a while.
All right, VIX bounced a little bit. Let's see what the dollar 10-year look like. The dollar has been on a bullish slant here. Trend dollar.
It just doesn't seem to me that about this in a non-linear fashion. It seems like some very linear thinking going on and just extrapolating old trends into this year. I don't see any further increases in inflation. I don't see any inputs for those. And so I think to answer the first question, is better than the alternative, which would be a collapsing economy and plunging interest rates. That would not, it might be good briefly for the markets, certainly would be good for the economy. Average American.
So quickly, Lana, where is you putting money to work right now? Yeah. If we do get any sort of pullback there in consolidation, that is a really good opportunity, especially if you missed maybe this last month of rally, to put money to work. And what we say is, already grow critical parts of the market, grow quickly, place small caps over large caps. But longer term, that value trade with rates is high and probably sustainable recovery. Ron and Sana, thank you for joining us to kick off the hour. For more on today's rollout of jobs number and what it says, let's bring in Tom Kimball, founder and CEO of the Sal Network, a national firm. Great to have you on. I want to get your thoughts on more than 500,000 jobs added this past month. I might note that it tends to be seasonally weak.
All right, so the dollar, Dixie continues to push higher. Been on a buy. So this is a headwind for the indices for now, and growth stocks. All right, see if we can't go on a buy signal here. SPY 2-minute chart is still on a buy signal. Love to see this run up in the day. Excuse me. Fridays generally are slower days. Fridays tend to be slower days for trades. Today is pretty slow. We're down 4 points, 1% on the S&P, spiders, futures, S&P 500. Dollar is at the highs. VIX is sliding a little bit. Excuse me. All right, SPY rolling over. All right, we're rolling over here, SPY. Our dollar is starting to move a bit lower. AI dropping off pretty fast here. AI is dropping pretty fast. Small losses, not large losses. If you're in AI, that's dropping pretty fast. AI is dropping pretty fast here. All right, let's keep an eye on SPY. Back on a sell signal. Down at the low, just chopping around. Looking for a buy signal. Need to get above 413.25 or so to get a buy signal. Been very choppy for the last hour and a half, 2 hours. Been choppy down here near the lows, back and forth.
Welcome back, everybody. Some financial titans are looking to shake up the market for generic drugs. The Wall Street Journal highlighting how Amazon and Mark Cuban of Shark Tank fame joining a list of disruptors aiming to cut out pharmacy benefit managers, a fancy term for industry middlemen, by offering lower cost options at much smaller markups. Joining us now is the author behind that piece today. Let's welcome in David Weiner. He's healthcare columnist. David, welcome. Good to have you with us. I have to tell you that you have delved into one of the most opaque areas in all of healthcare to me. I don't understand how it works, and I have to believe that some of the big word here, opacity, is intentional. Am I wrong?
Absolutely. You're absolutely right. I mean, if you think about this industry, right, you've got drug companies that make the drugs, and then you've got us, the consumers, who use these drugs. And you've got people in the middle, and the pharmacy benefit managers that you mentioned, they're in that.
All right, we're starting to get a little move on here. Stochastics RSI is turning up on the short time frames, 2 minute, 5 minute, 15 minute. Might be oversold enough to get a nice little run here. We've got an hour and 40 minutes to go, a little bit less than an hour and 40 to go.
Derives from rebates paid to them by pharmaceutical companies, paid to the PBMs by pharmaceutical companies. Aren't those PBMs then incentivized to buy and pay for higher priced drugs because therefore the rebates they would get would be bigger than they otherwise would be?
That's exactly what's happening. And sometimes that's why we're seeing
Bear flag breaking down now. Just like that, just keep it moving lower. Lower highs, lower lows.
so oftentimes that's why you'll see, a lot of drugs come at affordable prices, but every once in a while there are drugs that are very expensive. And I think, just to bring up Mark Cuban's website, I think what they're doing there is they're being transparent and showing that every drug, what's the price, what's the markup, and you can compare that to other retail prices and see these huge gaps.
David, this has been going on forever. And in the meantime, we've seen a lot of these PBMs gobbled up by insurers as well, and all the vertical integration that's happening. There's been attempts to disrupt this. There's been attempts to maybe try and regulate this, whether it's Mark Cuban's startup or whether it's Amazon. Can either of these companies actually have a meaningful impact, whereas no one else has up until this point?
Yeah, I think that's a great point. And if you think about some of the big names that have sort of big splashy announcements, like remember JP Morgan, Bezos, and Warren Buffett were going to change the healthcare system, right? So you're absolutely right. And I think Mark Cuban and Amazon, which we haven't mentioned yet, they're both kind of doing mainly the cash consumer
insurance. And remember, as you just mentioned, there's been this vertical integration.
Just grinding a bit lower.
And so they can very easily keep Mark Cuban and these others outside of the system that they control. I think the difference here is that, employers are taking notice, and employers are the ones who pay for a lot of these healthcare costs, and they can push the insurers and PBMs to either work with Mark Cuban or, as we are seeing happen in some cases, to be more transparent about their costs. So United helped Optum Rx. They recently announced a tool to allow people to consume, insured drugs with drugs that are just cheaper at retail price. So there's pressure in the system. Who wins at the end is what we're not really clear on.
David, thank you very much for being with us today and for taking on a very important and very complicated topic. We appreciate it. David Weiner.
Thanks for having me. You bet.
Well, still ahead, we are looking into one startup that's looking to attract a cadre of investors. How? By letting individuals buy shares of privately owned commercial real estate.
All right, we're coming down to test the low again. If we take out the low, you'll probably move your stop down to just above that previous pivot. If it keeps going here. We're oversold on many of the oscillators. Maybe a little double bottom bounce. Not even worth the effort unless you like scalping a lot. We've had a great week. Had a great week on the spiders. So, I don't want to give much back. So I haven't done much trading today. Took some profits off in the morning, Apple, etc. We got a Gravestone Doji the way it's trading out right now. If we close on this reversal right here, all right, for the week, we started at 400. If we were to close right here at 412, we'd have a nice 3% profit, right? So we're off 1% on the day. We're off 1% on the day. Since the high yesterday, 418 down to where we are right now, 412, we're off 1.5%. So not too bad. The last 2 weeks, we moved up from 390 and currently are up 5.5%, something like that, 5.5%, 5.6%. Carry the one, 5.6% from last week. So, and then of course, the low from 374. I guess what I'm getting at is even though we're having an off day, we've had a really good week. 3 out of 5 candles were bullish, and we moved from 400 up to 418. Hopefully, you were taking profits into strength yesterday. That's what we were doing, taking profits into strength, taking what the market gives you. Thank you, VMV. Thanks. But since the low that we had third week of December for 374, that's what 10% gains, even at the level we are right now. So you're giving back 1.5%. Well, if we bounce right here and this creates a doji, we're still in the bullish trend. Point is that we could pull back to 408 and still be bullish. So that'd be 4 points below that. Yeah, I would agree with Bob Pisani. Yeah.
Technology generally still holding up very well. Who would have thought Apple up 20% for the year would now still be up on the day, even when they had some disappointment on their earnings report? That's rather remarkable. Nobody would have bet on that. But bank stocks is up, Amex is up, even Intel, which has had a disastrous last few months, is up.
You're trading JEPI now, Beagle. That's not too bad. It's flat. Gone nowhere for several weeks.
S&P is up about 1.5% on the week and a really strong start. Now that we have had the Fed meeting done and we're now working through the heart of earnings season, the VIX has dropped rather dramatically. It is very rare to see the VIX recently below 20, but we have been there now for the last several days.
What's the other one that we're looking at this morning? ETF. Let's see. KBWD.
Almost 100 years. Fifth best start to the year.
Bob, thank you very much. Bob Pisani. We're seeing a bigger reaction to the jobs number in the bond market, so let's get to Rick Santelli at the SIBO. Rick. Yes. You know, big pop on rates when we saw the job report.
Let's see what Rick has to say.
Basis points on the day. We closed under 340 yesterday in 10. But we closed at 3.5% last week. We're only up 1 on the session. And if you look at the last big move in 10s, it was in October when it made its 4.25 high yield close. It's dropped. And you look at the VIX, Bob just alluded to it. Not only is it under 20, it's under 19. Look at the VIX. It peaked and it looks a lot like 10s. And finally, June Fed Fund futures hovering around 95 even, which means they're pricing roughly 5%. They're low, 94.86.5. That was pricing in around 513.5. So you can see the difference there. Let's pick a trader. Hey, Paul, you have 1 second?
Sure.
Okay, Paul, we want to talk to our audience regarding big jobs report. What did you see with regard to preparing for it yesterday, and what are you seeing today?
Rick, it's been a really interesting week with the uncertainty coming back into the market. First time all year, really. The jobs report this morning kind of runs counter to what we were observing earlier in the week after the press conference. Yesterday, record volumes.
Like record all-time record?
SIBO record volumes driven by the single stocks.
And what did that mean to you? How are they preparing? Where would all that volume go yesterday?
The retail volume was call buying in the big techs, and that drove volatilities in our product up, drove the price action in the market up.
And then the jobs report came out. Maybe they're rethinking. Your thoughts?
Well, yeah, you can see today's actually much slower. It seems like everyone's trying to digest this number. Luckily, we don't have too much longer to wait because Powell's speaking on Tuesday. That's going to really be a interview that everyone's going to be
turning point potentially. Maybe the markets and the Fed get on the same page. We'll see. Morgan, back to you.
Rick Santelli in the pits. Love that. Thank you. Oil trading about to close for the day. It's down more than 2% today. Let's bring in Pippa Stevens now for more.
Another losing week for commodities. It seems that traders are betting some more aggressive action from the Federal Reserve could lead to a curtailment in crude demand. Then also just a bit ago, we did get the official announcement that EU leaders have agreed to a price cap on Russian petroleum products. It's $100 on diesel. That goes into effect on Sunday and, of course, is meant to limit Russia's revenue without creating a enormous disruption in global energy markets. Now, turning to nat gas, more weakness there. 7 straight week of losses. It's also at its lowest level since December 2020. But just looking at Henry Hub doesn't quite tell the whole story because in California, prices are at $15 per MMBTU, so more than 5 times the average we're seeing on Henry Hub. And that's because of a confluence of factors, including actually colder temperatures than expected in California, as well as pipeline issues. The El Paso pipeline that carries gas from the Permian Basin to Southern California still offline. So the TLDR on that is higher prices for Californians.
Quick question on China. How is the oil market factoring in the reopening of China, or is it?
I think the issue with that is that it was such a big catalyst, and all oil bulls could talk about was China, China, China. And we have yet to see that confirmation that there is going to be that big rebound. And it feels like the targets keep getting pushed out. So initially, everyone was pointing to 2023, Q1, we'll see that demand rebound. We didn't see that. So now people are talking about the second half of 2023, but there is a lot riding on Chinese demand. So all the oil bulls are saying it's coming, but we have yet to see it.
We'll see when. All right, Pippa, thanks very much. Pippa Stevens. Let's get to Bertha Combs now for a CNBC News update. Bertha.
Hi, Tyler. Here's what's happening at this hour. The Pentagon says a Chinese surveillance balloon has drifted east and is now over the central U.S. The Pentagon is also rejecting China's claim that the balloon is a weather research mission or on a weather research mission and that it has blown off course. Officials say it is expected to stay in U.S. airspace for several days. 2 suspects have been arrested in the shooting deaths of 6 people in Central California last month. Police say both are gang members, but the motive for the shooting remains unclear. The victims included a teen mother and her baby. One of the suspects was in a shootout with federal agents before being taken into custody. And designer Paco Rabanne has died. He was known as a rebel who started out using unusual materials, including metal and plastic. Coco Chanel reportedly called him the metallurgist of fashion. He also had a line of well-known perfumes, fragrances. Paco Rabanne dead at the age of...
Oh, Paco Rabanne. Remember him?
All right, Bertha, thank you very much. And ahead on Power Lunch, Carvana, Nirvana, the online used car dealers struggling in 2022, ending the year down a meager 97%. But that's nothing compared to the stock's 200% climb so far this year. So what's causing the comeback? That is next.
All right, so trying to trigger a buy signal here. I would love to see institutions buy after 2:30. I'd like to see them buy and push this up. It's down $4 on the day. Are they going to let this profit go on the short side, or are they going to let it pop? Are they going to buy it up? I think they're going to buy it up. The dollar and the VIX are starting to get more bullish. They're starting to turn over.
Welcome back to Power Lunch. Rise. Risk is back in.
All right, we're in a buy signal on the short time frames. Buy signal, 2 minute.
We've seen beaten down names like Carvana. Okay, stocks under a little bit of pressure this morning, but it's up 200% to start the year. Keep in mind, though, it's still down 90% over the past 12 months.
All right, we got a buy signal on a 2 minute, looking for a follow through. Note we've been on a buy before, and we quickly went on to sell about 6 minutes into it. So we need to see a sustained move here.
Too far, too fast.
Well, good afternoon.
look, it's hard to say. I think your opening was perfect because I'm getting a lot of questions on Carvana from our clients, and yes, I mean the stock has essentially quadrupled, off of its recent lows. But we also have to keep in perspective. This is a stock that was trading $370, back in later 2021, so it's still well off those highs. But look, as I think about fundamentals, I'm thinking about Carvana as a fundamental analyst. I don't see much improving for the business right now. Now, one of the bigger questions, and one of the reasons I'm not recommending our clients in it right now is that, in my mind, or per my math, there's still what I call a significant funding gap here. I mean, this is a company that will need to raise additional capital in order to sustain its business model. I think to a certain extent, now obviously the Carvana stock price has rallied with other similar type names, but I think maybe the market's getting less concerned on that front. That the capital markets will open, will allow Carvana to garner the cash it needs to run its business. But it's a very, very difficult stock at this point.
It's difficult, and there's been a lot of concerns around the possibility of bankruptcy as it has been pinched for cash, to your point. It raises questions not only about, about Carvana, about sort of this quote-unquote dash to trash, and some of the other names that have been beaten down, some of which I know you cover, that have been seeing huge rises since the start of the year as well. Talk to me about Peloton.
It's a very similar dynamic. Now, Peloton, we are recommending. I've got a $20 price target. And, the way I look at these names, and again, this is a longer term type approach I take is, I think of Peloton, and look, there's a lot of concerns there near term. I also think that company's going to have to raise money. They're fighting now what I think is a rather significant wave of gym goers going back to physical gyms. I'm going to say Lifetime Fitness, LTH is one of my favorite names here. They're benefiting there. But with Peloton, look, I think my message to our clients is I do see a spot within the broader fitness sector, longer term, for well-run, much more cost-conscious Peloton. Nearer term, it's harder to call because again, there's a lot of these near-term risks right now.
I mean, Peloton's future may indeed be in the monetization of its app more than in the selling of its gear. If I had to make a guess on that. Back to Carvana, why in the world would it be up 4 times from its low? What is the mechanism by which that happens, other than irrational exuberance?
Well, Tyler, look, I mean, I think it's hard to explain succinctly. Okay, I think to a certain extent, it's simply a function of how far this stock fell. Mm-hmm. As you got a graph, you put the 2022 chart. I mean, the stock ended 22 with a 4 handle on it. I mean, the stock had moved significantly lower, and a lot of that, was in a very, very tough market against very negative market sentiment. But really, I think the primary concern is this company going to survive? Okay, so as we look at the market now, again, this is obviously a much bigger question with rates and capital markets and such. The chances of Carvana going out of business are probably.
So we're just chopping around here, going from buy to sell within a couple of minutes. This is just not even worth your trouble until we get some sort of follow through.
The chart over the past couple of years, it looks like the Matterhorn. I mean, up it goes and then down it comes, and even though it's tripled off the lows, you can barely detect the move against that Matterhornish kind of chart. Brian Nagel, thank you. Appreciate it.
Thanks for having me. Appreciate it.
Still to come, John Fort will bring us his interview with the CEO of the real estate investment startup Cadre in today's Free Stock Lunch.
All right, so we're just chopping around here. We need to see a sustained move above this 413 level that lasts more than a couple of minutes. Otherwise, we're going to just stay down here in this range between 411.75 and 413, chopping around since about 1:30. Still waiting for institutions maybe to buy, but Ticumita says they've been selling for the most part. So I'd go with that signal for now.
are making it harder for many commercial real estate investors to make projects pencil out. At the same time, there's opportunity. Today, John Ford brings us up close with a founder whose company is using technology to make real estate investing more accessible and efficient. John.
Yeah, that's the idea, Tyler. Ryan Williams is founder and executive chairman of Cadre, an online marketplace for commercial real estate. The company's raised more than $130 million and has done more than $5 billion in transactions since 2015. Williams cut his teeth at Goldman Sachs and Blackstone before striking out on his own, and Williams grew up working class in Louisiana. He became an entrepreneur early, starting a sportswear business on a shoestring when he was 13. His development accelerated when he got into Harvard, and he launched a program there to teach undergrads about financial services. The housing crisis had just hit, and he saw deals in real estate.
More chop, more chop.
Foreclosed homes in Atlanta that I thought were mispriced.
Signals keep going in opposite directions, so very choppy action right now.
And selling for 2 to 3x type multiples unlevered. And long story short is that business ended up becoming a nice way for me to have passive income on the side while my day job was doing banking at Goldman. We ended up buying nearly 1,000 residential units throughout Atlanta from 2008 to 2011.
Williams' mission at Cadre is to democratize real estate investing and cut accredited retail investors in on data and deals. I asked him about icebergs he's watching out for in this volatile economy. Here's what he said he's making sure not to do.
If we want to scale our secondary marketplace, because we're the first platform ever to build an exchange and to let people trade stakes of real estate buildings, but we don't think about redemptions and thresholds on redemptions and guidelines around that. And so to me, it's loosening of standards in exchange to try to grow. That's like the biggest iceberg and the biggest risk that I foresee. But it's also one we're all over, and one where as long as I'm in charge, will not be the iceberg that takes us out.
I was texting with Ryan this morning, and he told me the main thing Cadre has done since we talked about a couple months ago is capped all of its floating rate debt to protect cash flow. He says the portfolio is doing well because it's tilted toward multifamily, not office. And he's looking to play offense soon in areas like hospitality as uncertainty creates opportunities, guys.
Really fascinating. And I think the point you just made at the end there is probably the most crucial, especially for anybody who's looking to invest in commercial real estate right now, which is that floating debt, which is a big question mark for broader commercial real estate in general right now.
And important, I think, to note also, it is Black History Month, and access to real estate has been an issue, and redlining and other things, and he's flipping the script.
How does he pick what markets he's going to concentrate on?
Well, they've got a very data-focused approach to that, where there are gaps and where he sees opportunities. They actually put out a list of the high potential areas. They just sold some office in Colorado, right? They're tilted toward multifamily. They just sold some office there at a pretty good price appreciation-wise for them. So that's part of what makes us unique. There are lots of sort of online marketplaces for real estate, but they try to be data-focused on how they find opportunities.
All right, John, thank you very much. Appreciate it.
Well, up next, Ford to tears. Deutsche Bank downgrading the car maker to sell, citing considerable operational shortfalls. The stock is down more than 7%. We're going to trade that and more in today's News Conflict.
Okay, more selling pressure. More chop. At least give us a direction. It looked like we were going to pull back a little bit more, but nope. Just chopping around. Looks like we're going to pin right around 412.50 at this rate. Come on. Get off my... The dollar continues to push higher. There goes the 10-year. 10 years bolting higher. Got a little bit more than an hour to go.
Welcome back. It's now time for a three-stock lunch. We're sipping on some of today's biggest movers to the downside. Ford lower on a downgrade to sell at Deutsche Bank following its Q4 miss and operational shortfalls, quote unquote. Starbucks lower after weak international demand hurt its latest earnings. And Match Group is lower after announcing it is laying off 8% of its workforce. Here to help us trade all three is Victoria Green. She's CIO of G Squared Private Wealth and a CNBC contributor. Victoria, great to have you on. Let's start with Ford.
Yeah, I'm selling Ford. I don't want to touch it right now. I think it's reversing back down to the 11. They're stuck in this operational hell. The CEO even admitted they left $2 billion on the table. They're looking everywhere for cost cuts. But here's the problem. They're going to have more costs with the EVs. They're having to take price cuts to keep up with Tesla. And I just don't think they're going to get it done in Q1. So this is a sell for me. Their chart's ugly. They bounced right off of a Fibonacci level, coming back down to 11. So I'm selling it.
Sell on Ford. Let's move on. What are you seeing in Starbucks these days?
Starbucks is all about a China story. They had a 29% decline in Chinese sales.
Any rally out of this range needs to follow through
We'll see China reopening. We're going to see that pick back up. I think this stock has good legs.
for more than just a few minutes, which is what's been happening. We've been chopping around between 411.50 and 413 with no buying, no sustained buying or no sustained selling. So we're just chopping around for now.
And we'll see that 15% growth that they want to see.
Yeah, and of course, meantime here, people will pay more for their Starbucks. Final name, Match Group.
Absolutely. Now, apparently people don't want to pay more for Tinder. I think Match Group for me right now is a sell. Their chart is super ugly. Their players, they don't call them users, their players have actually declined a little bit. And I think they're going to see cannibalization between Tinder and Hinge. Tinder is still the number one revenue source for them, and they're about to launch this big marketing campaign. Never done it before. Could be a huge spend of money with not a lot of pickup. So for me, I think Match is just mired. Their margins aren't as good as Bumble. They've got a high debt load, and their chart, just for me, they're pretty stuck right now. So for me, I just can't buy it.
All right, Victoria Green, thank you.
Maybe if she had a few more of the cocktails, she'd have changed her mind on Match Group there. I don't know. Whatever. All right, Victoria, thank you very much.
Well, it's time now for our weekly ETF tracker, and this week we focus on technology. According to Track Insight, net flows were close to flat on the week, but the ETF soared as earnings took center stage, and a general risk-on mentality gripped the market. Looking at some of the specific funds, the QQQ of 3%, communication services sector, Spider.
All right, we're starting to test the low here.
Minus 800.
Okay, you can see the 15-minute. It's about to go on a sell, continuation below that pivot this morning. To start the day, we bounced that one green candle this morning and then rolled over. If we take that 411 level out,
And finally, the Arena Group becoming the latest media company to enlist AI. That's all the rage these days. The company that publishes Sports Illustrated and other magazines, seeing its stock pop today. But keep in mind, the market cap is just about $200 million. That is tiny. Wall Street Journal reporting that Arena will use AI to help produce pieces for its properties, including Men's Journal. One example would be pulling information from its own library for a list of workout tips, I guess generated by AI. Arena Group saying it is not looking to replace human journalists. Neither are we. An actual human producer did, in fact, Morgan, write this script.
Which hasn't always been the case.
As not, no, we've had some. Yeah. Well, most of the producers here are human.
No, I'm just saying, you guys did an experiment not so long ago,
Yeah,
right?
we did do that. We did do that. Very, very interesting. Well, we end the week with the Dow down 200 points. It was lower earlier and higher earlier as well. So what do you know? We'll watch for the next hour, the most important hour of trading coming up on CNBC. Thanks for watching Our Lunch, everybody. Glad you could be with us.
Closing Bell starts right after this quick break.
All right, sitting at the low of the day, we could either drop off here or bounce right back up into this range up to 413. Not worth your time and effort unless we start to drop below this low right here. If we take out 411.50 and start dropping,
Low tickler minus 800.
30-minute is on a sell too. The 30 minutes on a sell. So it looks like we just took out some stops. Maybe they run it the other way. This is this is a pain in the butt. Pain in the butt. We just took out stops below the low of the day and reversed it on a hammer. Let's see what they do now. Okay, here we go. Here we go. Dropping off to the lows. Taking out stops some more. See if they continue to push this lower. We could move down to 410.
Low tickler minus 800.
That's the breakout level for this week. 410.
Stocks pulling back today in the face of disappointing earnings from mega cap tech and a red hot jobs number. But the Nasdaq and the S&P 500 are still on pace for solid gains to start the week. Welcome everyone to Closing Bell. I'm Sarah Eisen. Take a look at where we stand right now in the market. Lower, down 1.16%. The only sector higher right now is energy. The Nasdaq's down 1.6%. As far as what's working, Apple has actually turned around and is higher. Tesla is strong as well, but Amazon, Microsoft, Alphabet, and Nvidia are holding back the Nasdaq. The Dow is down about 0.5% as we speak. So clearly some weakness, but overall pretty resilient considering that very strong jobs report and a move up in treasury yields. 3.5 is your yield. Check out the key tech earnings movers. Amazon pulls back on guidance and cloud concerns. Alphabet lower as well, but off its worst levels. And then soft YouTube ads also hurt Alphabet. The stock is down 3.5%. Look at Apple, up 2.4%. Pretty remarkable comeback. Now higher despite a profit and revenue miss. We're going to talk about all of these names in just a bit. Also ahead on the show, National Economic Council Director Brian Deese joins us to talk about today's blistering jobs number, which nearly tripled expectations. Plus, we'll talk to the CEO of PNC Financial for his read on the economy, lending, and the American consumer. Sixth largest bank in the U.S. Let's get straight, though, to the market dashboard as we head for another winning week for the S&P despite the losses today. Senior markets commentator Mike Santoli here to break it down. And, Mike, I would call this sell-off subdued, given the magnitude of the beat on the jobs report.
Sure, very, very contained, I would say, and in a sense, really.
Yeah, I would say the same. Very contained. Consider the jobs report this morning. Could still see follow through either way next week, but I'm not. Wouldn't be surprised to see 410 tested, the breakout level.
Very much within the range of the last week or so. So it's not as if it's really repriced Fed intentions. We have the S&P 500 has actually made this new multi-month high, let's say like a 5-month high. It's still, well, I would say we get a 3 to 5% pullback from here. It's still really no problem. It will look like regular old profit taking. It's going to be hard to really.
You hear what Mike Santoli is saying?
One day pullback like we have right now. We also have this really interesting feature of the market, Sarah, this week, which really for this year to date, which is the crash in momentum stocks. The momentum ETF, which tracks basically what's been doing well previously, has completely unwound. And here you have the momentum factor ETF, MTUM, relative to the equal weighted S&P 500 on a 1-year basis. This is what we've seen right here. Now, why is that? People say, oh, speculative stocks are running hard. Why is the momentum ETF going down? Well, the momentum ETF is 60% after last year, 60% healthcare and energy. The momentum ETF is a defensive ETF, and it's basically stuff that is not very cyclical. And so you have this big unwind right now. And the other side of this is the massive short covering we've seen. You have a lot of quant funds that trade momentum and other factors like value, like volatility, and things like that. And so you saw this upside down action so far this year. This is what's destabilized some of the action, made it a little more volatile, but I don't think it has undercut the message of the market, which is underlying economy stronger than anticipated, earnings not great, they already priced it in, and the Fed maybe kind of coasting to the end of its tightening campaign.
Right. So the question is the Fed still coasting toward the end of its tightening campaign? The move up in the 2-year note yield is significant. It's off the highs. We're back above 4.2. We were under 4.1.
Yeah.
And it's now higher on the week, which is a bit of a change and a recalibration of maybe how much more the Fed's going to have to do.
Absolutely. Although it's really taking place on taking back some priced in cuts that happen beyond when they finish hiking. So you don't want to get into necessarily every little twist and turn of it. But I think at this point, the peak rate is still seen as being 1 or 2 more quarter point increases. Then the real debate happens. Does it stay there for a long period of time, as the Fed's saying, or is something going to happen that causes them to cut? So really the repricing has happened at the outer end of it, which is, will they cut in that 1 and 2 year window after they finish hiking?
It seems harder to believe with such a strong job
without
market.
a doubt. I think it weakens the case
today.
for that call. Yeah.
Right. Mike, thank you. We'll see you soon. Mike Santoli. Let's talk jobs now. That strong number that came out this morning. Non-farm payrolls up by 517,000 in January, crushing estimates. Unemployment rate falling to 3.4%, the lowest level since 1969. Average hourly wages gaining 1/3%, which actually is some moderation, something the Fed wants to see. All this coming despite the Fed's efforts to slow down the economy and bring down inflation. I spoke with National Economic Council Director Brian Deese and asked if he was shocked by today's number.
It was a surprisingly strong headline number, and so certainly reinforces the strength and resilience of our labor market. But I think
all right, so we're down 1 1/3% right now. 5 handles on SPY, 5.5 on SPY.
Transition to more stable growth as well. I would point to labor force participation, that increase, particularly for prime age workers. We're now at
More downside.
Seeing higher levels of participation, more people coming into the labor force. I think that's a healthy sign. And then, of course, on wages, we saw stable growth in wages, but moderation there as well. So I think that both of those signs, alongside the very strong headline number, reinforce that resilient labor market, and we're seeing that progress while inflation is coming down. So I think that these are all pretty positive signs for where we are economically.
Yeah, maybe, but the market's not taking it particularly well. Stocks are selling off on this idea that the Federal Reserve is going to have more work to do now on tightening to crush inflation and weaken the economy. Is that the right takeaway?
Well, look, more jobs for more Americans and people making higher real wages is good news. It's good news for the economy. It's good news for people across this country. And I think if you zoom out just beyond this 1 month, what we've seen over the last couple of months, the last several months, is precisely what we want to see in this transition. Resilience in the labor market, continuing to hit these historic levels in terms of low unemployment, the lowest in 54 years. While we're also seeing price increases come down. We've seen inflation moderating. We're seeing those signs across the economy. So that's what we want to see. Obviously, we're gonna have to keep a close eye on these things. But I think it's hard to look at the last couple of months and not see like we've made very significant progress, certainly from where we were several months ago.
I know, but does this, I guess my question is, does this make you fear that inflation will not come down as fast as we need to see? Yes, it's great news that we're still hiring. It's great news that wages going up, but we don't want to see inflation turn
All right, starting to get a
march higher
uptick
or
now.
stabilize around these high levels. So does this make you worry about that?
Well, I would say a couple of things. First, I think this report underscores that we all need to have a high level of humility in looking at traditional models that have predicted past bouts of inflation. I think it reinforces the unique nature of what's going on in our economy right now, and that shouldn't necessarily be a surprise given that the pandemic and the response to the pandemic, supply chain challenges are all really quite unique things that we are living through. That's number one. Number two is that what we want to see is more people coming into the labor force and wages moderation and not increased upward pressure. We saw both of those things in this report as well. And so I think at the end of the day, if you step back, we're seeing more
Still
jobs,
making lower lows and lower highs. We need to take out that 412.25 level. Then 413. I don't see us doing it, but there could be some short covering, some heavy short covering here in the last 50 minutes or so.
It's why this jobs number was so surprising and is a little bit confusing because it's hard to square, Brian, with what we've seen, the layoffs in the tech sector. And I know it's a small part of the economy, but they've spread to the banking sector and chemical companies and toy companies, all trying to be more efficient, and some real weakness in manufacturing and housing. So two key parts of the economy. How do you put all that together with what's happening with jobs?
Well, look, I mean, I think that the headlines and the breathlessness over some of the tech sector layoffs, I think was what it was, exactly what you said. If you look at their share of the overall labor sector, I think that there's a lot of extension of that and breathlessness that was overdone. Number one. Number two, if you look at weekly unemployment insurance claims, what you've seen is over the last 6 weeks, we've seen those continuing to come down and hit record lows, and we saw that in the JOLTS data, that the hiring data as well. So I think that we are continuing to see a picture economy-wide. Certainly there are differences in different sectors, and we are seeing some weaknesses in some sectors and growth and strength in others. But economy-wide overall, we have a strong labor market, a resilient labor market, and we're seeing that resilience even in the face of prices coming down. So I think that's the core takeaway here.
And then in the services number two was pretty decent today. It does make you wonder if the economy overall is accelerating or stagnating right now. Which is it?
Well, look, I mean, we have for months now been in this constant state of people projecting 3, 4, 5 months out and saying there's a recession on the horizon. There have been people who are saying that we're actually in a recession now, which I think no rational person can look at the data that we're seeing in the economy right now and draw that conclusion. I think what we're seeing in this economy is resilience. I think we're seeing resilience as we continue to move toward a more stable equilibrium and more steady growth. I think that is what we're seeing right now, and there's no certainty that we will see that going forward, but certainly what we have seen over the last couple of months should give us increased confidence in that outcome. And I would say from a policy side, there's a lot of things that we can be doing to try to reinforce that outcome. In particular, implementing infrastructure, innovation investments, clean energy investments in a way that gives companies the certainty to invest through this transition. And of course, avoiding the kind of unbelievably negative self-inflicted wound that we could do if we had drama around the debt ceiling.
So are you leaving on a high note? Why are you making the decision to leave now? Is this your last jobs report?
Well, I made the decision to serve this president for 2 years. I've got young kids at home, and it's the right time for me to pass the baton. But it's been an extraordinary privilege to work for this president over the last 2 years. It's been an extraordinarily unique economic moment. But I will pass the baton and continue to root for this president and support his policy agenda from the outside.
Will you go back to BlackRock?
I'm gonna go home to my kids and recharge. And that's my only plan that I have right now.
All right, well, keep us posted. Brian Deese, thank you very much. Appreciate the time.
Thank you.
No word on the BlackRock question. Biden has announced that Deese is stepping down, has not officially named a replacement, though lots of reports pointing to Lael Brainerd, the vice chair of the Federal Reserve.
All right, looks like we got a nice little rally going here. Buy signal on the 2-minute.
Taking a look at the market, we
Buy signal on the 2-minute. We got a ways to go before we would run into resistance overhead.
Energy just joining the rest.
Shorts covering.
After the break, Amazon and Alphabet holding on to gains for the week still and strong gains for the year despite today's earnings pullback. We're going to dive into both reports with an analyst who just cut his target on both stocks. You're watching Closing Bell on CNBC.
Whew. That one snuck up on me. All right, looking for some more follow through. Yeah, we get mixed signals here. The dollar is at 102.93, just trying to get above 103. The 10 years at the high, VIX is moving lower. You got mixed signals and 45 minutes, a little bit more than 45 minutes to go. So take it with a grain of salt. I don't think it's going to move very far from here. Probably back into the range, 413, maybe the high. Looks like they're trying to pin in this area. Unless we get some kind of sustained follow through. All right, doesn't look like they're going to sustain this very much further. Little bounce so far. Yeah, no follow through. No follow through. Oh, just a little short covering off the low. That's all that was.
Well, investors have made it to the other side of this busy week of big tech earnings. Alphabet and Amazon in the red today, while Apple has reversed higher. Check out the big tech report card. Overall, kind of a mixed picture across the board. No company beat estimates on both lines. Alphabet and Apple actually missing on earnings and revenue. Joining us now to drill down on those two in particular, Alphabet and Amazon, is Truist Global.
All right, looks like we might go now.
Media equity research analyst Yusuf Squilly.
Very choppy.
Lowered his price target on both those stocks today. Yusuf, it's great to have you back on the show. Amazon appears to be the bigger problem. It's down more than 8% at this point, but you still think this is a buy? Did it not shake your confidence in the story?
No, it did not shake our confidence in the story. Well, for a couple of reasons. One, is down is.
All right, here we go.
Tickler plus 800.
High tick.
Growth did slow down. We were hoping that it'd be able to maintain kind of high teens type of growth in 2023. Now we're talking low teens, but we still think.
High tick alert. High tick alert. We're getting some move on here. More shorts covering. All right, the 5-minute will go on a buy signal above 413.90 or so. All right, big short covering now. AI is turning.
As revenues go down, this is a high margin business. Margins go down, and that has an impact on Amazon's overall profitability for the next two, quarters or 3 quarters. But outside of that, if you look at their e-commerce business, they grew 14% in the U.S., right? They continue to grow market share, even though they control 45% of U.S. e-commerce. You look at their advertising business, they grew market share. They grew at 23%. Advertising, by and large, digital advertising.
All right, back into the range that we were chopping around in since about 1 o'clock.
But AWS is definitely a black eye for them, and the valuation is still very attractive.
All right, nice little follow through so far. Nice follow through. All right, we're only off 0.9% now. We were off 1.5, 1 1/3% early a little while ago. All right, 5-minute will go on a buy signal pretty soon, above 413.90 or so. I don't see us getting up there, but back to the top of the range that we put in.
At the same time, all of these companies, ours included, are looking for ways to be more nimble, more efficient with cost. So a lot of large companies that have already moved to the cloud have been changing their contracts with AWS, with GCP, with Azure from a kind of a long-term guarantee type of consumption, monthly or quarterly, to more flexible structure for them, to pay less when there is less consumption. That's what they have had to do over the last 2 quarters. Unfortunately, again, I think that's going to continue over the next 2 or 3 quarters, but we do not think it's structural.
What about Alphabet? Clearly the disappointment there on the weaker advertising environment, which is something we heard from the others, even Meta, the stock reacted positively there. What was the problem here? Did the street expect more cost discipline?
Well, yeah. So I don't think, honestly, it's about necessarily the top line on the advertising side, because, consensus was +1. They came in.
VIX still dropping off.
+0.9. I think the issue.
The dollar and the 10-year is still a problem.
This is a great team, great company. They don't tell you much on the conference call. That's the bottom line. And so a lot of investors and analysts went into this call hoping that for once they'll actually commit to cutting costs by a certain amount, hitting certain margin thresholds, etc., and they didn't do any of that. So that was a big issue for a number of investors. The other is called Microsoft, right? Microsoft is working with OpenAI to incorporate ChatGPT in their search algo, and so that has been seen by many as an existential threat, potentially to Google or to Alphabet.
We got to get up above 413.50.
We think it's too early.
Need to push through 413.50. Doesn't look like we're going to do it here. Some more selling coming in.
And realize that Alphabet is investing in AI more than anybody else, and really longer than anybody else. And so next week they're going to be launching or unveiling their own Lambda, which is their natural language model, similar to ChatGPT, and then we'll see where that goes from there. But those are the 2 issues that have been weighing down the stock.
So you like it. 120 numbers go down. So of all of them, just 1 second left. Which is the best opportunity right now after earnings?
Between the 2, I'd go with Google, with Alphabet.
What about your whole coverage list?
Oh, well, I mean, one of our favorites going into 2023 with Facebook, and that's obviously a lot higher. Among smaller names, we like companies like the Trade Desk, which is a great play. we like Double Verify, which is also a partial play on Play T on CTV.
All right, Yusuf, thank you for joining me. Appreciate it.
Thanks, Meryl.
Yusuf Spillane from Truist. I'll show you what's happening now, down 120 or so on the Dow. We've recovered a little bit, but we're still heading south. Down 1% on the S&P 500. It's a winning week. The NASDAQ is still up about 3%, and energy has just popped back into the green on the day. Everybody else is a little bit lower today. Consumer discretionary getting hit the hardest, down 3%. That's an Amazon story. The NASDAQ down 1.5%. Wall Street is buzzing about Ryan Cohen's latest investment and a brewing boardroom battle. We'll discuss the meme king's bet on Nordstrom that's sending the stock sharply higher today. And as we had to break, check out some of the biggest winners on the week in the NASDAQ 100, which itself had a winning week, up 3.5%. Align, Meta, AMD, so some earnings stories in there dominating the list. We'll be right back.
Pretty big pain in the butt today. Just scalping, just to string together a few, what we put together yesterday. Exhausting. All right, looks like they're going to push it a little bit more here. Maybe one more scalp into the close. Let's see how much time we got. 35 minutes to run it. I am so tired. If we get above 413, that would be big. That would be big above 413. I'm going to go ahead and scalp this for a couple of pennies, 25 cents maybe. We'll see if we get above 413. If we don't, so be it.
What is Wall Street buzzing about today? Activist investor Ryan Cohen and his latest target, Nordstrom. He's now one of the largest non-family shareholders, wants to use his position to shake up the board to support cost-cutting efforts as well. And no markdowns here. Look at shares of the upscale retailer surging on the news, 25%. They were even higher earlier, but still down nearly 70% from all-time highs that were back in 2015. We reached out to Nordstrom for comment, the company telling us, quote, while Mr. Cohen has not sought any discussions with us in several years, we are open to hearing his views. As we do with all Nordstrom shareholders, we will continue to take actions that we believe are in the best interests of the company and our shareholders. Remember, Cohen made his fortune with online pet retailer Chewy grew clout with the meme crowd big time when he used his stake in GameStop to push out executives to become chairman. He also took a stake in Bed Bath & Beyond, but exited the position in August. And just last month, built a stake in Chinese tech giant Alibaba. Other investments in his portfolio include Apple, Wells Fargo, Citigroup, and Netflix, according to the Wall Street Journal, which first had the story. Mike Santoli, got to bring you in here. The 25% move up in Nordstrom, justified?
I would say not on any basis in terms of what Cohen might be doing there. Maybe to spotlight the fact that this is a depressed stock at the lows in January. It was trading at less than 20% of sales. That's as low as it's ever been, basically, if you go back decades. So, yes, down on its luck, department store stock, fine. Maybe as an entry point, it's interesting, but not based on anything Cohen has done in other kind of challenged retailers like
he gets
GameStop
a lot of credit,
and
but what has he actually done?
Right. So first of all, even the Chewy's piece of it, of course, a great company and a great idea, but sold, for a fraction of what it would be worth a few years later. Apparently, PetSmart had to build a lot of that company while they owned it. And then since then, the GameStop stuff was just really a lightning in the bottle mania that grew up out of almost nothing.
Company never turned
and
it around,
the
did
company
it?
itself really did not at all turn around. So,
And Bed Bath & Beyond went bankrupt.
right. So, there's a way in which, in a very short-term basis, he kind of monetizes the kind of afterglow of the GameStop experience, but it doesn't necessarily mean anything's good.
It's an interesting move, though, to pinpoint the board, because it is it's a small board, a thin board, and Mark Tritton, who's the former Bed Bath CEO, is on that board.
Sure.
So making some interesting
There
points.
may well be moves to make. I mean, I'm not saying there
But also
aren't.
the family owns 30% of shares.
Exactly. So it's a closely held, although not controlled. And remember, they wanted to take it private a few years ago.
Yeah, they tried. They tried. Mike, thank you. This will be fun to watch. Mike Santoli. Up next, we will take the pulse of the economy and consumer lending when we are joined exclusively by the CEO of PNC Bank. Be right back.
Okay, looking for a pop. Okay, we got 30 minutes to go for the closing bell. 30 minutes to go. All right. Less than 30 minutes to go.
As we head into the final half hour of trading, we're seeing the Dow down 125. The S&P 500 is down 1% as well. Still hanging on to gains for the week, but combination of weaker response to earnings from Amazon and Alphabet, and of course that very strong jobs report pressuring stocks today. The Nasdaq's down 1.5%. That blowout jobs report, of course, concerns about tech earnings, all hurting the market, snapping a 3-day win streak. For more on the economy and the state of
Looks like they're going to pin this right in this area around 412 unless we run it in the next few minutes.
Bill, welcome back. Good to see you.
Hi, Sarah. It's great to be back.
We've got to start with that stunning jobs report that we got this morning. How does it fit into your view of what's happening to the U.S. economy?
I'm going to try to do my best to not be the next armchair economist, but no matter how you look at that number, that was a wow number, and it fits into the thing we're seeing across all of our clients. Where there's nothing in that number, nothing we're seeing that suggesting we're heading into a slowdown anytime soon.
So, do you forecast a recession?
We have it in our official forecast, but it's we like everybody else. We keep saying, all right, well, we know this is coming, and then every single month something happens where we push it out.
Low tick alert minus 800.
It just seems as long as the market's going to keep fighting the Fed here, we're going to have this big showdown at some point, and it will happen. And in some ways, the longer it takes to get there, the worse it's probably going to be.
So tell us a little bit more about what you're seeing, Bill, or not seeing in this case. Any softening in commercial or consumer credit?
No, not really. We had an isolated incident.
Extreme low tick alert.
Fourth quarter, we've seen some normalization in what you would expect to see with consumer. But if you go back to basics, our basic consumer checking account, is materially up from where it was, pre-COVID. Now it's lower than its peak, but it's a lot higher than it was. And the days spending coverage that consumers have against their ordinary, monthly bills is much higher. Things feel really healthy.
They do. But you're putting aside more and more provisions for bad loans. So you're clearly expecting a turn.
Well, welcome to the world of CECL. So we have a model, we make a forecast, and just like every other economist, not every other one, but basically consensus view is we're going to run into some shallow recession, and that's what we have, and we run a model, and if that happens, at least against history, we'd have bigger provisions and bigger losses. Part of the issue here is we run into, we're running into this potential where somehow we're going to have a full employment recession, where maybe GDP slows for a bit, but the labor market continues to be really strong. And that's unknown territory in terms of what happens to credit losses. I think if that happens, credit losses are a lot less than what people would otherwise expect.
But you've got to see it in parts. I mean, the housing market, commercial real estate loans. There's got to be stress there.
So in the housing market, so residential, housing prices are coming down. The affordability of a new house, it's tougher. But the loans we made, you got to go back. Most of the loans we've made over the last handful of years, the market ran up from when we made the loans. So the loan to value on those loans is still really good. The affordability for the loans we own is great because interest rates, are coming off a base of zero. So a new loan today, that's why there aren't many. It's just much more expensive. But the stock of what we own.
Are they going to keep it under 412? It looks like now.
Stress. We don't play much in this space, but there's some stress in the used auto market just because of how high residual values got. But no, we just don't see it on our balance sheet today. Part of that is who we are.
So it's a pretty slow day today.
That is just the economy's stronger than people think.
After opening and pushing up to 416 or so, we just faded and then chopped around the rest of the evening. No follow through, just holding down here below 413.
Low tick alert minus 800.
So do you think the Federal Reserve will keep raising interest rates? It obviously impacts your business and has been helpful for your net interest margins.
Yeah, I think
it's a function of how long they keep them there. I'm in the camp that they're going to stay high for longer. I take Chair Powell at his word. My own economic views are closer to what the Fed is talking about than perhaps what's priced into the market, even after today's move.
Right. You don't see the cuts coming anytime soon.
I don't. I mean, the basic notion, if we, even if the economy slows down, if we're running near full employment, and even if we get inflation down to a 2 handle, why would they cut? Real rates would be marginally higher, but why would you do it and run the risk of lighting off inflation again? And they'll get there at some point, but I don't think there's going to be a hurry to do it.
So some of the analysts were confused. You know, you've given a pretty positive outlook here. Loans are rising, interest rates are rising, that you talked down your net interest income numbers, and there was disappointment after the last quarter's earnings. So how do you explain that?
Yeah, so well, a couple of things. For 40 quarters, we missed our earnings guidance 3 times. One of those times was in the fourth quarter this year, where we had some anomalous kind of one-time expenses. And we had one big credit that was going to go bad no matter what the economy did and what point in time it was. It was a poorly run company, and we had a larger position than we should have in it. And that, we're predictable, and we weren't in the fourth quarter, and we disappointed our investors. And so, that set them on edge. And then as we look into this year, we know provisions are going to go higher simply because the model's going to force them to that place. We talked down versus what analysts
still inside of this range between 411 and 413. No progress.
Costs are rising, no surprise. The Fed's shrinking its balance sheet. Rates are going up. We're paying more to consumers to keep our share. But also because, unlike the capital markets, credit spreads in the largely investment grade BBB area, which is where we lend, credit spreads haven't gotten wider. It's not reflected. Banks are slow at this. And so, part of what we would have otherwise had in our head 2 months ago would be that credit spreads are widening, our revenue is going to go up more than we put into, the comments I put in the fourth quarter. We'll see what happens. And by the way, we're no different than any other bank. I mean, maybe we're a little more straightforward. But, spreads go up, we'll benefit. Others will. If deposit goes up more, deposit costs go up more than we think, it's going to hurt us, and it's going to hurt other banks. Those are the two big, what are credit costs going to be and what are deposit costs going to be as we go into this year. And that's going to be driven by the market and the economy.
Well, what about why aren't you paying higher rates to depositors?
We are paying higher rates for depositors. It's a couple of things are happening. First, you pass along, you get a particular margin on deposits and rates go higher, and you pass on that incremental margin, but also the competition for those deposits as liquidity generally is drying up on the back of the Fed's efforts, makes it more scarce. So, if you looked at our average cost of deposits over the course of the last year, it hasn't gone up as much as the Fed is. That's kind of the beauty of retail banking, but it's gone up materially.
All right, fair enough. Well, that's why investors like to hear from you, Bill, because you are straightforward. See if it proves conservative.
All right, 20 minutes to go.
Appreciate it.
Yeah.
Bill Demchak, CEO of PNC Financial. Look at Ford, one of the worst performing stocks right now in the S&P 500 after reporting a profit miss. Coming up, an analyst who just downgraded the automaker to sell because of meaningful downside risk, they say, to earnings this year. We'll be right back with that.
No progress, just choppy action. We can't get above 413, and we have held above 411.
Low tick alert minus 800.
Let's go look at a few other things. Let's see what Tesla looks like. Tesla. Pretty much everything's in a choppy range. Tesla just gradually grinding lower. Had a pretty good day. Google on the gap up, faded, and then chopped around. Trying to move a bit higher. Google. Apple selling into strength this morning was the thing to do on the way up. Still like Apple for next week.
Check out today's stealth mover, Generac. The stock is experiencing a blackout. Guggenheim downgrading the generator company to neutral from buy, removing
Generac.
its current price target, citing valuation and concerns Wall Street's earnings estimates for this year are too high. The stock had been a real power on Wall Street, up nearly 30% year to date after being one of the biggest losers in the
SPY coming back down.
last year. That has been a pattern. A lot of the losers of last year.
Extreme low tick alert. Low tick alert minus 800.
China cooling off shares of Starbucks today. Find out why the company thinks the headwind could soon fade. Straight ahead. That story plus Apple rallies and Ford falls when we take you inside the market zone.
Back down into the lower part of the range for today. No progress on SPY, just chopping around from sell signal to buy signal back and forth. Making no real progress today, just pushing a bit lower. All right, SPY drifting. All right, so far we got this breakout level around 408. Looks like we'll come down and test that next week. Still very bullish looking. This is a modest decline considering the hot jobs report. I was surprised we didn't pull back more. This is showing that while institutions did sell a little bit into today, we're still up quite a bit from that 274.77 low. Even at this level at 411.78. So we've made progress. We've had an off day. Hopefully you took profits off into strength yesterday as suggested. Still up, what is that, roughly 10% from the 374.77 back here in late December into January, the beginning of January from 380. We're still up 8.5%, even at this level on the pullback. We're close to 9, almost 10% from January low, the start of January up to the 418 level. So while, we always want to see the markets moving higher every single day, obviously that's not realistic. We are pulling back. I'd be comfortable right around 408, between 405 and 408, a bounce in this area next week. 400's the 21 day, 395, the 50 day, 200 day. Everything is stacked. There's no reason to believe that we won't continue higher, considering all the indices are above their 200-day moving average. Qs, S&P, IWM, NYSE are all above the 200-day, and many stocks are above the 200-day as well. Many stocks are above the 200-day. Okay, the New York Stock Exchange still above the 200-day. You can see almost a straight line on the 21-day. 921.50, 200-day below.
We are now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. Plus, Deutsche Bank's Emmanuel Rosner on Ford. Let's kick it off with the
Apple, pretty big day on Apple. That's above the 200-day.
1.2%. Mike, though we're still hanging on to gains.
Check your favorite stocks. Most of them are above the 200-day. Look at the volume on Apple.
Can't really figure out, coming off of that high Wednesday, the Fed meeting where Powell talked disinflation, Powell brushed aside concerns about looser financial conditions. Market can't figure out whether today's jobs report was
Pretty happy that
really
we
a game
didn't sell
changer
off
in the
more
way
than
the
we already
Fed
did,
would think about how many more
and that we're
interest rate
holding
hikes
above
are
the
to come.
921 and 50-day.
What's next?
Yeah, and I think, Sarah, part of the reason the market can't figure that out is that I doubt that the Fed itself would know exactly what their response would be, because there's going to be a time element to how they change policy from here, right? We have, 6 weeks to the next meeting. We'll see what the data look like over that period of time. Going in small steps. I don't think there's going to be an overreaction to January, because the premise was already, this is a very tight labor market, and Powell explicitly declined to try and pinpoint some very big jump in unemployment that he believes will be necessary to get inflation under control. So I think for that reason, the market is treating it, without huge stakes attached to today's number. And by the way, just in general, we came into this week up 6% in the S&P on the year. The common refrain was going to be tested. We have a Fed meeting and we have the big tech earnings. And through it all, even though all the tech earnings weren't great, we're not only up for the week, but we're up about 2% from right before the Fed announcement came on Wednesday afternoon. So obviously we cleared that test. We'll see where it goes from here.
Yeah, how about that? Let's hit some of these tech earnings. Apple investors brushing off
Chop,
a weak
chop,
quarter,
chop.
managing to overlook the company's largest revenue decline since back in 2016.
All right, we got 9 minutes to
The
go.
drop is largely tied to currency pressure and production setbacks stemming from China's COVID disruptions. Shares had been lower to start the day. They rebounded shortly after the open, Mike.
Chalk it up to a good week. We're just giving back a little bit on Friday.
It wasn't a dramatic reaction. I feel like people were definitely braced for a not great quarter. There's clearly a lot of faith that when you have management credibility, as of course Apple does, and when they say they see things bottoming and turning soon, and they're going to be able to get production back where it needs to be. Even though they didn't give explicit guidance, the idea is that they will probably make it work. The other factor is whenever there's a little bit of a short-term setback for Apple, it almost gives the bulls a reason to say, here's what's going to get better. Because, there's really not a great growth story here, especially in the near term. It's much more about steadiness. So I think the market where Apple outperforms by a lot from here is not a great stock market, in my opinion. It's still going to be mostly defense, but it's holding its own without a doubt. And it's, by the way, almost tripled the S&P return over the last 3 years. So it owes you nothing from this point.
Wow. Let's hit Ford because it is tumbling today after reporting earnings and sales, which came in below estimates. Supply chain issues to blame for a shortfall in sales. Ford CEO Jim Farley discussing the quarterly miss with CNBC earlier.
We lost about 100,000 units of production, and that's very material for us. Came in late in the quarter. Most of it is chips, but some new.
All right, shorts covering into the close. Shorts covering into the close here.
That's not how we see it. We could manage our supply chain all sorts of different ways. We were very dependent on broker chips, things like that.
Emmanuel Rosner of Deutsche Bank joins us now. He just downgraded the stock to sell, cut his price target from 13 to 11. So the company, and you heard the CEO there, probably blaming the supply chain, but I read your note, and it sounds like you see bigger, more varied problems here.
Yeah, hi, Sarah. I think that it's more than just supply chain. I think that there's a few things that really bother us with the print and even more so with the outlook. I think there's lack of visibility and planning. I think from the company, they had already had a profit warning in the third quarter, but then swore that it would still be able to deliver the full year guidance. And then obviously 3 months later, very large miss in there. I think their cost structure remains stubbornly high. It's true both in terms of fixed cost as well as in terms of their bill of materials. And there's really no traction that's coming across the numbers. And so as people want to be optimistic or positive on Ford, they're essentially thinking, look, could these guys improve their margins from there?
I'm still bullish, guys. I mean, stocks like Boeing, although it pulled back today, I'm still bullish Boeing. But I want to keep my losses small. I'll buy back Boeing next week, perhaps. When I see it pull back a little bit more, perhaps. All right, SPY starting to move a bit more. SPY a little bit higher. But a lot of stocks look good. Apple looks good. It's above the 200-day. Now I'm waiting for it to consolidate. Meta, that's another one. I'll be interested in buying. Actually, I'd like to start buying some shares in Meta. Google and Amazon, if they stabilize, I'd be interested in those two. Some of the semiconductors I'm interested in. Markets are bullish. Unfortunately, we don't go up every single day. Collect some cash, minimize your losses, keep them as small as possible. I try to keep my losses between 5% and 7%. Especially with options. If it's pulling back and you're off more than 40% on your option cost, it's time to exit. You don't want your option price to go to zero. That's what I did with Boeing. Got out while I still had 60% of my option premium left. A lot of stocks look like they're going to continue to move higher. Meta, I'd be very interested in Meta after it bases a little bit longer. SPY, IWM, Qs, those should all be working. Next week, after maybe a little dip back to 410 on SPY, breakout levels. Everything's above the 200-day, so I'm still very bullish. Breath still looks good. Breath is backed off a bit, so we'll have a little bit more energy, hopefully on Monday, Tuesday.
And basically for the last
All right, so we got a nice little push higher now. SPY. Let's see if they can rally this in that last few minutes.
Who are in these more stable consumer names that are not super cyclical. So I think a little bit of a give back there. And then they're mid-high 20s PE. That's kind of where these companies are these days. And, market's absorbing it okay in the context of how much the stock had done last year.
Overall earnings reactions, are you getting a threat? It feels like it. Hasn't been the best earnings season.
It hasn't. I mean, we finally nudged up to about 70% of all companies beating estimates, which is roughly the historical average, but it started very slow, and there's been some sloppiness when it comes to guidance, a lot of downward revisions. And the fact that the market has more or less toughed it out and looked beyond that probably shows you that the analyst consensus were a little bit lagging what people were expecting. In other words, the investors themselves pretty much figured it wasn't going to be great. The other thread is obviously Meta, the most dramatic example of this, but this sense out there that managements have religion on cost and they're going to do what they can to defend profit margins. They're not necessarily going to be successful in all instances. Obviously, there's retention of a lot more employees across the economy we saw today than we might have thought, and that could hurt margins down the road. Some economists saying that. But right now, it's, we didn't think it was going to be a great earnings season, and we're holding.
Yeah, they're going to pin it right here, somewhere around 413.
I'm really thinking about Bill Demchak, CEO of PNC, telling me no real weakness and credit. For
Just collect some cash. Don't be too upset that we didn't follow through today. The Bulls won this week. The Bulls won this week. Giving back 1% today, not a big deal. After that huge move that we had on Wednesday and Thursday, I'm not upset at all. Next week, yeah, I would think so too. Paolo, I'm thinking we could get back up to 418, the highs of last week, highs of this week. That's the closing bell. All right, Bucks, I have a hard stop. Thanks for joining us today. Farmer Jim, new members, Mondo, take care. DMV, thanks for all your posts. Have a great weekend. Paolo, take care. We're selling a little bit at the close. Money Magic, thanks for all your posts. Appreciate it. Yoda, Mustard, take care. Dollar, Grover, Prism, Frano, thanks for all your posts. Really appreciate it. Cousin Vinny, thanks for showing up. Schmuck. Grant, new members, welcome. Thanks for joining us today. It's been a pretty good day. Pretty good week. Pretty good week. Very happy with the results, especially with Meta. That was a big winner this week. Ziggy, take care. All right, folks. We'll see you Sunday. P.S. Thank you. We'll see you Monday. Or excuse me. We'll see you Sunday for the weekend video around 2 p.m. on the East Coast. At about, 11 o'clock on the West Coast. Have a great evening, everyone. Enjoy your weekend. And we'll see you then. Take care. We'll see you then. Ciao.